and Jin Kushal Industries close to 116 crore. Day 2 of IPOs, day 2 of subscription, that is Jain Resource Cycling, EPAC, Prefag Tech, as well as BMW Ventures. These three stocks are day 2, and these three companies, and two companies are at the day 3 of the subscription, which is Seychelles Technologies as well as Anand Rathi. On the other hand, also keep an eye out for Solar World as well as Chara Institute. Like I mentioned, IPO pipeline is the highest it's ever been. Asian markets, GIFT Nifty, like you mentioned, all indicating to a subdued start to our own markets today.
Okay, Vivek, thank you so much for that. But let's go across to Sudarshan, who's here to tell us what are the cues in the world of F&O. Good morning, Sudarshan.
Good morning, Vinny. So, if the last week was about the gaining, market was gaining continuously for few sessions, this week it's completely opposite. Yesterday we saw that for the 4th straight day, market has fallen and closed with cuts. So, what are the major headlines? So, after IT, now it's a turn of financials which have become weak and are a major drag on the market. Second major headline is while FI selling has increased, DI's buying has come down. And third major headline is call writing continues to be very aggressive at all the levels. You talk about 25,100, 25,200, 25,300. At all the levels, we are seeing a huge call writing. So, yesterday we saw Nifty failing to hold the level of 25,100. At the end, it was a cut with of more than 100 points. And the similar pattern was seen with Nifty Bank, Nifty IT, and even Nifty Real Estate and Nifty Auto. For today, GIFT Nifty, following the global cues, is indicating a start with minor cuts, say 40 or 45 points. On the flows front, as I have told you that FI selling has increased. Yesterday also in the cash market, they have sold more than rupees 2,400 crore, while DIs have just bought around rupees 1,200 crore. In the index futures too, they have followed the similar pattern and they have sold more than rupees 590 crore. And now their long exposure has seen a minor increase, it's at 15%. But if you compare longs and shorts, they have added the short positions for almost 6,000 contracts, and before that, they have added long positions of just 2,600 contracts. What does options data indicate? Take a look at 25,100 call. Here, addition in open interest was 52 lakh, with premium falling to 110 from the level of 222. 25,300 call has seen addition of 37 lakh shares. Here also premium has fallen to 36 from the level of 102. Now on the put side, if you take a look, 25,000 put has seen addition of 25 lakh shares and premium has increased to 62 from 42, and 24,900 put has seen addition of open interest of 21 lakh shares, and here also premium has increased to 37 from 28. So, support range for Nifty 24,900 to 25,000. Resistance zone would be 25,100 to 25,300. So I have taken support. First support, Nifty would try to hold the level of 25,000. If it slips below, 24,900 support comes. Resistance 25,330. For Nifty Bank, support would be 54,620, that is 20-day moving average, and resistance would be 55,401, that is 50-day moving average. Stocks in the bank, 3 stocks remain in the bank, same 3 stocks, HFCL, Saman Capital, RBL Bank. And apart from that, some of the stocks have seen fresh shorts, and those are from real estate by Godrej Properties and Samvardhana Motherson. After gaining continuously for like few sessions, now for the last 2 sessions, it has seen fresh short addition. Keynes Technology has been seeing fresh longs, and also from PSU Bank Pack, Indian Bank remains strong, and yesterday also it has seen fresh longs.
Okay, Sudarshan, thank you so much for that. We'll keep an eye out on those stocks as well. But let's move on and talk about some of the latest updates that are coming in. NSE's MD and CEO Ashish Kumar Chauhan said that SEBI will consider stakeholders' view before any move on curbing weekly expiries. And speaking on NSE's long-awaited listing, my colleague Abhimanyu asked him when the NOC was expected from the market regulator SEBI. This is what he had to say on that.
We have been discussing with SEBI, and we had filed our application for settlement in June 2025, and we are awaiting the NOC. Once the NOC comes, as you know, it will take 4 or 5 months to prepare the RHP, and then another 4 or 5 months for SEBI to clear the RHP. So somewhere 8 or 9 months after the NOC is when the IPO can happen.
Sir, there has been a buzz around curbing of weekly expiries and shift towards longer expiries like fortnightly and monthly. How is this likely to go through? Have you heard anything from the regulator in this regard?
No, we have not had discussions. What we have heard from the public pronouncements is that SEBI will come out with consultative papers, and all the participants' views will be taken into account by SEBI before taking any action.
Sir, if this goes through, what is going to be the expected impact on business? Could there be any meaningful reduction in volume?
Naturally, in the initial phases, there could be, but over a period, things basically come down to normal, and it remains to be seen how overall what kind of final outcomes are there of the consultative paper.
So there's a buzz around the same day expiry for BSE and NSE. Could that be a part of the negative from the discontinuation of weekly expiry set off?
In a way, it was always there. A common settlement was always there for more than 25 years now. Only in last few years there have been some changes. But overall, again, it's up to the regulator of what they want to do, and then we'll have to all obey the regulatory framework.
Okay, that's the update coming in there. But on that note, we're going to slip into a very short break. Up next, Finance Minister Nirmala Sitharaman has launched a Good and Service Tax Appellate Tribunal. We'll get you details on the other side.
BMW Ventures Limited is engaged in trading and distribution of steel products, tractor engines and spare parts, manufacturing of PVC pipes and roll forming, and fabrication of PEBs and steel girders. The company is launching its initial public offering. The price band is Rs 94 to Rs 99 per equity share of face value of Rs 10 each. The issue opens on Wednesday, 24th September 2025 and closes on Friday, 26th September 2025. For risk factors and more details, please refer to the red herring prospectus available on the websites. The book-running lead manager to the issue is Sarthi Capital Advisors Private Limited.
How's this? Or should I go for this?
Yeah.
Leave it. You're not even interested. Should have brought mom instead.
How's this?
Wow. Oh my God.
Should we send it to mom? Step in or sign in. Love is light. Candia, lifestyle jewelry.
मेरे मैच का प्लान तो सेट है। आपकी लाइफ के प्लान का क्या? Visit canrahsbclife.com today.
मिशन चढ़ती कला, और मैं भारत के हर नागरिक को, उद्योगपति को, चैरिटेबल ट्रस्टों को, कलाकारों को, पूरी दुनिया में बसते पंजाबियों को, बहन भाइयों को दिल से अपील करता हूँ, आओ पंजाब को दोबारा अपने पांव पे खड़े करने का टाइम आ गया है। पुनर्वास में और रीस्ट्रक्चर में पंजाब का साथ दीजिए। मैं वचन देता हूँ, जो भी आप मेहनत की कमाई से 1 रुपया भी अगर निकालोगे तो 1.25 रुपया बना के हम पारदर्शिता और ईमानदारी से इस्तेमाल करेंगे। और जानकारी चाहिए तो rangla.punjab.gov.in ये वेबसाइट पे जा सकते हैं, सब कुछ डिटेल मिल जाएगा। आओ मिलकर हाथ से हाथ जोड़ के एक ऐसा पुण्य इसमें योगदान डालें और बता दें दुनिया को कि पंजाब किसी भी संकट के सामने हारता नहीं है।
How's this? Or should I go for this?
Yeah.
Leave it. You're not even interested. Should have brought mom instead.
How's this?
Wow. Oh my God.
Should we send it to mom? Step in or sign in. Love is light. Candia, lifestyle jewelry.
Welcome back to Power Breakfast on CNBC-TV18. Now let's move on and talk about the US markets, because Wall Street ended lower for the second straight day, and this was mainly dragged by tech stocks as investors pulled back their AI investments. Let's go across to CNBC's Steve Kovac, who is getting us a wrap on everything that happened on Wall Street.
U.S. markets were down across the major indexes in Wednesday trading as tech investors pulled back on AI investments for the second straight day. The Dow dropped by 172 points, the S&P 500 lost 19 points, and that tech-heavy Nasdaq was lower by 76 points. New home sales soared in August, up more than 20% in July, when mortgage rates were actually higher than they are today. It's the largest increase in 3 years. That's according to new numbers from the U.S. Census on Wednesday. But the National Association of Home Builders caution there's a large margin of error for new home sales, and next month's revision should paint a better picture of the health of the housing market amid a weakening labor market. Energy Secretary Chris Wright announced Wednesday that his department will return to the U.S. Treasury $13 billion that was slated to subsidize wind, solar, batteries, and electric vehicles. The money was set aside during the Biden administration for its climate agenda, which Wright called wasteful spending. That's what's happening here in the U.S. Back to you, Mumbai.
Thank you so much for that. Let's in fact also listen into some market opinions coming on the valuations of the U.S. equities and the way forward.
It's not to be bearish on equities because you hit a certain level of valuations. It tells us nothing about the next 6 months, 12 months, but it does tell us a lot about expected returns over the next 5, 10 years. And we've now reached a point where multiples are at 23 times. They're more expensive than we started the year, which is some of the highest levels we've seen in 20 years. So that should moderate your expected return. So a lot of conversations we're having with clients now, finally thinking about active within U.S. equities. That's a huge change. And thinking about international equities.
Valuation is one of those things. It's like tasting wine, right? Everybody's got different views. I think there's a lot of ways you can look at the equity market and say we have an incredible earnings outlook ahead of us. We've got an investment horizon that looks incredible based on a lot of the changes that have taken place in the policies, whether it's dereg, whether it's the one big beautiful bill, whether it's tariffs forcing some people to the table to invest more back in the United States, which is a huge positive that I don't think a lot of the models at the Fed are taking into account. So I think there's a lot of reasons to be confident. And one of the reasons, that we've got a headwind a little bit to it, particularly in interest rate sensitive sectors and in the labor market, is that I think monetary policy is just way too restrictive. So I've been saying that for a while. I've been saying it since before the election, and I'm still sticking with it. Happy to see that they kind of have turned a little bit, but we've got a lot more to go.
Let's move on. And the Finance Minister Nirmala Sitharaman has launched the GST appellate tribunal, I beg your pardon, and that came in yesterday. Now, in a bid to expedite resolution of dispute between businesses as well as the tax department, the Finance Minister added that the GST tribunal helps centre and states strengthen the cooperative federalism and that it will act as a national appellate tribunal from April 2026. Listen in.
With the GStat coming in now, centre and states on board, we open a new era of predictable, specialized jurisprudence. This is cooperative federalism in action, and at its best providing a single, reliable appellate spine for the GST across the country. I actually think it's one of the strongest skeletal structure. The spine of the entire GST system is going to be provided by the GStat. Jargon-free decisions in plain language, simplified formats and checklists, digital by default filings, and virtual hearings and time standards for listing, hearing, and for pronouncement. From April 2026, the principal bench of the GStat will also act as the national appellate authority for advance rulings, providing businesses with clarity and ensuring consistency across states. This makes GStat not just a tribunal, it makes it a one-stop comprehensive forum for GST disputes, both before initiation and after initiation of the proceedings.
And let's move on. And the cabinet has approved shipping and maritime projects worth 70,000 crore rupees. This includes financial assistance and a development scheme for shipbuilding worth nearly 45,000 crore rupees. The government also cleared a maritime development fund worth 25,000 crores. CNBC-TV18 spoke to the shipping secretary to understand how this will help India's shipping sector amidst global headwinds. And here's what he had to say.
Shipbuilding Financial Assistance Scheme builds upon an earlier scheme, which was the first version of the scheme. And the idea is to provide assistance to shipyards to bridge the gap between the cost of acquiring a ship abroad versus acquiring it in India. So this difference was about 15 to 20%. So this scheme incentivizes the cost of acquiring a ship, and it gives you a subsidy of 15 to 25% depending on how big the ship is and whether it is a green vessel and so on. Some of the largest ship builders in India are either in the defense sector or in the sole one is the CSL in the under the shipping ministry. The net result of having only a few shipyards in the public sector and a couple of them, in the private sector, like in Pipavav or L&T or Shaugule, etc. But the thing is, we don't have capacity. Other countries, Korea and Japan and China, even Vietnam, they produce a lot more of tonnage every year. So this scheme was brought in, one, to improve the capacity of the brownfield shipyards, so that they can, they get about 25% subsidy. The cost of capital cost of setting up new infrastructure in a brownfield shipyard, up to 25% we will give them.
Okay, on that note, we're going to slip into a very short break. Up next, we'll get you the cues in the world of commodities. Stay tuned in for that.
मेरे मैच का प्लान तो सेट है, आपकी लाइफ के प्लान का क्या? Visit canrahsbclife.com today.
अरे बेटा, ड्यूलक्स है और उसकी वारंटी तो और भी शानदार।
पेंट से भी शानदार
वारंटी
से शानदार पेंट
से शानदार वारंटी
से शानदार पेंट
वारंटी।
ड्यूलक्स, डिसाइड करना मुश्किल हो जाएगा कि पेंट ज्यादा शानदार है या उसकी वारंटी।
How's this? Or should I go for this?
Yeah.
Leave it. You're not even interested. Should have brought mom instead.
How's this?
Wow. Oh my God.
Should we send it to mom? Step in or sign in. Love is light. Candia, lifestyle jewelry.
मिशन चढ़ती कला। और मैं भारत के हर नागरिक को, उद्योगपति को, चैरिटेबल ट्रस्टों को, कलाकारों को, पूरी दुनिया में बसते पंजाबियों को, बहन भाइयों को दिल से अपील करता हूँ, आओ पंजाब को दोबारा अपने पांव पे खड़े करने का टाइम आ गया है। पुनर्वास में और रीस्ट्रक्चर में पंजाब का साथ दीजिए। मैं वचन देता हूँ, जो भी आप मेहनत की कमाई से 1 रुपया भी अगर निकालोगे तो 1.25 रुपया बना के हम पारदर्शिता और ईमानदारी से इस्तेमाल करें। और जानकारी चाहिए तो rangla.punjab.gov.in ये वेबसाइट पे जा सकते हैं, सब कुछ डिटेल मिल जाएगा। आओ मिलकर हाथ से हाथ जोड़ के एक ऐसा पुण्य इसमें योगदान डालें और बता दें दुनिया को कि पंजाब किसी भी संकट के सामने हारता नहीं है।
Welcome back to Power Breakfast on CNBC TV18. Now it's time to get you the latest update in the world of commodities, and we have Manisha Gupta joining with us as always. Good morning, Manisha. What are we keeping an eye out on today?
Morning, Vinny, and thank you for that. For once, it's not gold and silver. We are looking at copper because the prices have gained 4% overnight. Copper is now trading at a 2-month high, and this is on the back of Freeport McMoran declaring a force majeure from Grasberg mine in Indonesia. Not just that, there also are concerns coming in from various other mines as well. Copper has been in short supply. We're talking about deficits in this year and perhaps next as well. And that in turn has been supporting copper. Also, that 50% tariff is something that did move the markets quite a bit. And from here on, the expectation is that copper perhaps could lead the metal as a segment in this year and the next as well. Gains also have come back in crude oil prices. After that near 3% gains, we are trading at a 7-week highs for the Brent crude prices. Well, the U.S. inventories have been declining, and there are export issues in Iraq, in Russia, in Venezuela as well, which are keeping the prices supportive. Just inches away from $70 a barrel for the Brent prices, markets do believe that yet another push could be seen in this week itself.
Okay, Manisha, thank you so much for that. So we're keeping an eye on a lot of these other commodities as well. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC-TV18. Thank you so much for tuning in. Nifty implied open is still indicating a muted start for the Indian markets. But you have Bazaar Morning Call up next. That will take you through all the action.
Brought to you by Candia, lifestyle jewelry from Kalyan Company.
Oral health sits at the heart of well-being, yet 9 in 10 Indians face oral issues. Thus, Colgate India, in partnership with Network 18, set out to turn awareness into action. From encouraging children to make oral health a key part of their daily routines, to uncovering insights from Colgate's landmark report, Transforming Smiles for a Brighter Tomorrow. The Colgate Oral Health Movement is an ongoing mission to spreading smiles nationwide. Watch the highlights at these times.
How's this? Or should I go for this?
Yeah.
Leave it. You're not even interested. Should have brought mom instead.
How's this?
Wow. Oh my God.
Should we send it to mom? Step in or sign in. Love is light. Candia, lifestyle jewelry.
Dreaming about me?
Love is to get lost in the look. Unlimit Love B6 Pack 2 starts at 21.9 lakh.
मिशन चढ़ती कला और मैं भारत के हर नागरिक को, उद्योगपति को, चैरिटेबल ट्रस्टों को, कलाकारों को, पूरी दुनिया में बसते पंजाबियों को, बहन भाइयों को दिल से अपील करता हूँ, आओ पंजाब को दोबारा अपने पांव पे खड़े करने का टाइम आ गया है। पुनर्वास में और रीस्ट्रक्चर में पंजाब का साथ दीजिए। मैं वचन देता हूँ, जो भी आप मेहनत की कमाई से 1 रुपया भी अगर निकालोगे तो 1.25 रुपया बना के हम पारदर्शिता और ईमानदारी से इस्तेमाल करें। और जानकारी चाहिए तो rangla.punjab.gov.in ये वेबसाइट पे जा सकते हैं, सब कुछ डिटेल मिल जाएगा। आओ मिलकर हाथ से हाथ जोड़ के एक ऐसा पुण्य इसमें योगदान डालें और बता दें दुनिया को कि पंजाब किसी भी संकट के सामने हारता नहीं है।
Co-powered by SBI, best है सबको पता है, and Century Fly Club Prime, रहो बेफिक्र।
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Thursday morning, overnight. I mean, a bit of a drift, not very much decisive in terms of price action. I'm Prashant. With me, my colleagues Nigel and Surbhi. Guys, good morning.
Hi, morning, folks. Well, yeah, not too much by way of mega Qs, some consolidation on Wall Street as well. But it's a special day for Nigel.
Well, indeed, it's my daughter's birthday. So happy birthday, Nitara. It's a special day for me, my family, and little Nitara as well. But obviously, we've got markets to contend with. And later on in this evening, I'll be trying to make Nitara happy. But hopefully, the bulls are happier by the end of today.
Cherish these birthdays. Now.
Absolutely.
They go by fast. Well, let's just, take it from the top then in terms of where we are. As I said, overnight, I mean, it's a bit of a drift. And equities sideways, not very much by way of a cut. S&P down about 0.25%, the Nasdaq down about 1/3%. So, I mean, these are not changes which will move, the next morning markets in any decisive way. You had a voting member of the FOMC who delivered some hawkish comments in a Financial Times interview. And that kind of stood out. But the point is that so many people have spoken since the FOMC decision last week. And bulk of it, except Stephen Moran, who's essentially said that, well, the risk is to not cut. Pretty much everybody else has said that it's not an easy path forward for rate cuts. So to assume that rates are heading lower and it's an easing cycle is not exactly what you should be looking out for. So this was more in line with that. But anyway, the 10-year yield, 4 basis points higher. I mean, they were down 2 day before yesterday, up 4, so 4.14% of the 10-year. Dollar index had a bit of a move, about almost 0.6%. We are almost at about 98 on the broader dollar. Oil prices also perked up 2%. So oil's now about $69, so closer to 70 is where we find ourselves at. And there's no new driver in that sense. For oil. I've been sort of getting through one or two single stocks out of the overnight markets because they've been so noticeable. So Intel was up 6.5% on reports that it has approached Apple about securing an investment in itself. I mean, in the chip maker. So 6.5% pop there. Alibaba, 8% higher. And this after the company planned to, that's the number floating up, $50 billion or something in terms of AI spending. And there's a company called Lithium Americas, that went up 95%. The stock was up 95% following reports that the US government is considering taking an ownership stake. Now, the only reason I'm mentioning this is because it is, I mean, they mine lithium, they mine for lithium. And this is one more step by the US, looks like it's one more step from the US government, direct intervention, taking stakes in companies, to secure critical supply chains. I mean, be it lithium, what happened with Intel, and of course, I think many more are being considered. So I thought I'll just put it out. Well, let's just quickly tie in the levels here. Nifty has seen about 4 days of straight cuts, negative closes. And, we've, by the way, got a negative crossover as well yesterday. We'll see. Not making too much of it for the time being. We ended around the 38.2% retracement level. Support then comes in basically because we've at the 38.2, the 50% retracement and the daily averages. So the zone of support is 24,950. Or 24,940. Basically, that's the zone. 24,950 is the support that one will work with. Resistance is the 40-hourly exponential moving average, which is 25,181. That's a Nifty. The Nifty Bank, it broke the 40-hourly exponential decisively. So here now support is the 50% retracement and the 20-day moving average. Those levels come in at 54,777 and 54,622. If you can have the levels up, they'll come up on your screen. Those are the numbers. So 50% retracement and the 20-day moving average are on your screen. These are supports. Resistance at 55,662 and 55,835. All, as we always do, very, very, very near-term sort of levels that we are working with to look at markets on a daily basis. So GIFT Nifty will give you a quick sense of how we're likely to start, and then we'll pick up the action from there. 30 points lower is where we are at. Nigel is standing by with the F&O picture and how they're looking. Nigel, good morning.
Well, morning. It's a bit of a make or break day for the bulls and for the bears today because the Nifty is a very, very crucial juncture. So we'll have to see how things pan out today. But I think today is an important trading session. Now, in yesterday's trade, when you look at the open interest, there was some mild build-up on the Nifty side. But on the Nifty Bank, there was some unwinding. So unwinding of positions post the big run is what we saw on the Nifty Bank. The other cue is that the Nifty ended lower, yes, but the India VIX cooled off as well. So that's normally an indicator that in the near term, there's no big reason to panic just in the near term. And also we have expiry that will play out next week. So the IVs are lower out there. So that explains why we had the VIX lower with the Nifty lower as well. One problem for the markets in the last few trading sessions are the institutions have been net sellers. So the FI selling has outweighed the DI buying, and institutions remain net sellers, which is putting some pressure on the markets and prevent it from moving up as well. Moving to what the FIs did then in the FNO market, well, they added shorts. So shorts are back in vogue. Yesterday, 2 shorts were added for every 1 long position. But as you can see, the short positioning is still at around 85% or thereabouts. Even on stock futures, actually, if you look at the short positioning, that was in the ratio of around 2:1. So there were some shorts that were added into the system. As I normally say, having some shorts in the system, it provides some kind of a breather, or it could give rise to a relief rally. So that's not a very, very negative data point, according to me. Moving to the options data then, you have 2 strikes that were active, the 25,100 call. Just take a look at the call writing. These call writers are getting very, very confident right now. Massive open interest build up is what we saw yesterday. And on the downside, you had this 25,000 put. That saw a good amount of open interest build up. The premium is around 60 rupees. So just tying in the levels, going by the options data, the 20 DMA as well as by the options data, this 24,900, 24,950 mark is extremely important. For an adventurous trader, one may want to say they'll put the stop loss at around 24,900 and hope that the markets recover from here on. So that's going to be the important trigger on the downside. On the upside, just going by the options data, that's the resistance zone. But the Nifty Bank will have to play its role. Yesterday, it gave it away. And in the last few trading sessions, it's been making lower highs and lower lows. So for today, in fact, if you want to see a bit of a fight back, well, the Nifty Bank will have to make its way towards that high that we saw yesterday. So around 55,500, 55,600 becomes an important resistance mark on the Nifty Bank. Finally, a stock that I'll be looking at today is Polycab. You pull up the intraday chart yesterday, you'll see that the stock ended virtually at the low point of the day. So there was a bit of a sniff that there could be a large trade. Sometimes post these large trades, you see quite a lot of action. So maybe let's see whether or not the stock recovers. But if you pull up an intraday chart, Polycab promoter taking some mild money off the table. Remember, since listing, the stock is up more than 13 times, but pulling out a piece of the pie that they've created. So I'll keep an eye out on the stock post the clearance of this particular large trade.
Okay, all right. So definitely in focus Polycab on that promoter stake sale that's happened. Asian markets quite mixed because the handover from Wall Street was fairly mixed. So you have Japan that's still showing up some gains, but the Hong Kong market is a little quiet, flat. And ditto for mainland China as well. Markets more or less flat. There's some profit taking in South Korea as well. So not too many major moves across Asia. Let's just pull up the GIFT Nifty and the implied open again. Yesterday was another sort of down session. And the indication is that we'll probably start 30 to 40 points lower again this morning. And then we'll pick it up from there. Let's welcome our first guest on the show. Fook Hin Yap, Senior Investment Strategist at Standard Chartered Bank, is with us. Fook, great to have you in. So, we're looking at all of these moving parts and how it's shaping up post the Fed meeting. I was going through some of your notes and you said that incrementally you were getting a little cautious on US equities and, you're willing to perhaps allocate more to Asia ex-Japan equities. Just run us through the thought process there and what is it that's making you cautious on the US market now?
Yeah, no, thanks very much for having me here. And yeah, you're right. I mean, we do have an overweight view on Asia ex-Japan. I think since the middle of the year, we've been talking about positioning for a weak dollar outlook. And in a weak dollar environment, we see that investor flows, they tend to look for better returns in a non-US dollar assets because of the weak dollar environment. And so as they look towards non-US dollar assets, we expect the region to benefit would be Asia ex-Japan. So that is actually one big tailwind. The weak dollar, we believe, will be beneficial for Asia ex-Japan. But look, we're not negative on US equities. We still expect US equities to go up. It's just that we believe there's a bit more tailwind with Asia ex-Japan. Valuations are significantly better there. And you see also policy stimulus as well coming through in China, and the AI and technology developments also very much similar to what's happening in the US, but you get it all at a much cheaper valuation. So the US, of course, the story is still very much driven by your earnings growth in the AI investments. We saw that in recent weeks, actually, the backlog is painting a much firmer picture of the future. So there's a bit more certainty in terms of what we're getting in terms of the growth in the next few years. So earnings growth really is driving the US. But also, we were quite cautious with September being a seasonally weak month. And then technically, some indicators are showing to us, just technically, the positioning could be a bit overbought. And so it could be some kind of consolidation or reversal in the US markets.
Hi, Fook. Good to see you, Ben. Fook, you're talking about the dollar weakness and being a little bit positive on emerging markets. Where does India fit in? I was looking at a couple of data points. India's valuation premium, in comparison to developed markets, has come back down to the averages, around 10% ballpark. And our valuations as a premium in comparison to the MSCI emerging market, that as well has come down drastically, and now it's in line with averages. Do you think that from year on, India, after that last year's consolidation, close to 12 months of consolidation is what we have seen while the global markets have been parting, it's time for us to catch up?
Yeah, I mean, you're right. I think we see in the past year that India has given up a lot of its outperformance versus Asia ex-Japan in the past year. And look, I mean, India remains a core holding to us. I mean, within Asia ex-Japan, the region we prefer at the moment is still China, because you're right, the valuation differential has come off, but because China is still at a low valuation, that's where our preference is. The way we're looking at India, I think with the policies at the moment, we saw the recent simplification of the GST ahead of the festive season, which we believe that will be supportive of domestic demand and supportive of consumption. But we're not seeing it in terms of the earnings revision yet. The earnings revision breadth that we look at is still negative. It's very high in terms of the mid-teens earnings growth, but revisions are still being negative. So I think you want to see that turning before we see a bit more interest developing and coming into India. But I think the setup is positive for the medium term. Like I say, valuations have come off. There's policy support coming through. And then positioning, especially foreign investors' positioning, we think is low as well. And again, that could be a positive. When earnings revision picks up and foreign investments come in, we think that will be supportive. But for now, India still remains as a core holding to us within Asia ex-Japan.
Fook, any thoughts on gold?
We like gold. We like gold. I think that we're going to publish our outlook, in fact, at the end of this week with a new target price for gold. But we do expect gold can go beyond 4,000. I think that's what we've written previously. Look, there's a lot of concerns now with the geopolitics and how that's going to impact the world. I think the headlines come and go. But more than that, I think it's the flows that we're seeing in terms of the central bank flows and then the ETF inflows as well. That is coming into gold. And an environment where real rates are coming down, we think that'll be supportive for gold. So yeah, we are positive gold, something that we definitely keep telling our investors, have some gold in your portfolio to hedge against inflation, to hedge against geopolitical risk.
Okay, all right, Fook, we'll leave it on that note. Thank you very much for joining in. Good to get that perspective from you, and good to know that India remains a core holding for you. That's a view coming in from Fook Heen of Standard Chartered. We will quickly recap, some of the important stocks to watch out for in today's trading action. Plenty of names today on the back of news flow. We'll be looking at names like Glenmark Pharma, Lupin, Ipca Laboratories, Birla Corp, Crisil, Quality Power, Newgen Software, all on the back of a positive news flow. And then there's Tata Motors, Polycab, Dalmia Bharat, which have some negative sentiment surrounding them. We'll tell you why in just a bit. Okay, so apart from the top 10 list, there's lots of other stuff that's lined up as well. So here's what we have for you. At 8:35, the management of Poly Medicure will be joining in to talk about their latest acquisition of an Italian entity. They've spent about 324 crore rupees on this. At 9 a.m., we'll have Sumit Kumar of JM Financial Institutional Securities for a discussion on real estate stocks. 9:20, Pankaj Murarka of Renaissance Investment Managers is our market master of the day. At 9:35 a.m., the management of Adani Wilmar will join in to discuss the new MOU that the company has signed to lead the National Mustard Model Farm Initiative. After that, we'll be chatting with the management of Happiest Minds Technologies to talk about the impact of the H-1B visa fee hike on the sector and, of course, on their business. And towards the end of the show on It's the Economy Today, Lata discusses what to expect from the government's second half borrowing calendar with Arup Rakshit of HDFC Bank and Shailendra Jingan of ICICI Bank.
Okay, time to slip into a short break, but we've got a lot of stocks to track for you on the other side. So we'll take that break. The top 10 stocks are waiting for you on the other side of this snappy break.
Seshasai Technologies Limited, a technology-driven multi-location solutions provider offering payment solutions, communications and fulfillment solutions and IoT solutions, now launches an initial public offer of equity shares of face value of 10 rupees each, in the price band of 402 rupees to 423 rupees per equity share. Bid offer opens on Tuesday, September 23, 2025, closes on Thursday, September 25, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company. Jaro Institute of Technology Management and Research Limited now launches an initial public offer of equity shares of face value of 10 rupees each, in the price band of 846 rupees to 890 rupees per equity share. Bid offer opens on Tuesday, September 23, 2025, closes on Thursday, September 25, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
भारत सरकार ने सभी देशवासियों के हित में हेल्थ इंश्योरेंस से जीएसटी पूरी तरह से हटाकर 0 कर दिया है। इससे हेल्थ इंश्योरेंस काफी सस्ता हो गया है। पॉलिसी बाजार पर अब 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू। policybazaar.com।
Jain Resource Recycling Limited, engaged in the recycling and production of non-ferrous metals. The product portfolio comprises lead and lead alloy ingots, copper and copper ingots, and aluminium alloys. Now makes an initial public offering of equity shares of face value of 2 rupees each for cash at a premium. The 100% book-built offer being offered in a price band of 220 to 232 rupees per equity share. Open September 24th, closes September 26th, 2025. For risk factors and details, refer to the red herring prospectus dated September 18, 2025.
ऑप्शन ट्रेडिंग की सोच रहा हूँ। सोचना भी मत, बड़ा पैसा चाहिए, बेचनी पड़ेगी कार, बिक जाएगा घर बार। डर गया, पर ऐसा कुछ होता नहीं।
शेयर इंडिया के साथ इजीली गवर्नमेंट सिक्योरिटीज, इक्विटीज और म्यूचुअल फंड्स के पोर्टफोलियो को प्लेज कर सकते हैं और इस मार्जिन मनी से बेफिक्र ट्रेड कर सकते हैं। शेयर इंडिया, डाउनलोड द ऐप नाउ।
Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
EPAC Prefab Technologies Limited now launches its initial public offer of equity shares of face value of 2 rupees each, in the price band of 194 rupees to 204 rupees per equity share. Bid offer opens on Wednesday, September 24, 2025, closes on Friday, September 26, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
Welcome back. Well, let's talk about, the cues as they're shaping up. The implied open, as we just saw, was telling us at the start is going to be about 35 to 40 points on the lower side. There is some cautiousness in global markets, including in some of the Asian markets as well. So 40 lower. Let's now straight away dive into the list of top stocks to watch. Our team is standing by with all of the details. Guys, good morning to all of you. So Darshan, let's start with Tata Motors. Now this cyber attack, this seems to be costing them quite a bit.
It's a huge impact. So first it was about £5 million daily impact, and now there is another impact of almost £2 billion. And the reason, as per the fresh reports that we are getting from news agencies, JLR had failed to have the insurance coverage before the cyber attack, and because of this, company might face £2 billion impact due to this. And earlier to that, BBC had reported that because of the production pause, JLR would be facing the impact of almost £5 million per day. Now take a look when exactly this cyber attack happened. It happened on August 31, and first statement from the company came on September 2, talking about that, looking into this issue and resolving this. Next update came on September 10, extending the production pause, and the fresh statement came on September 23, in which company is saying that production pause is extended till October 1. But as per reports, production pause may be extended up to November, and that might impact not only Q2 results, but also will have an impact on Q3. Now the interesting part. In FY25, JLR's total profit was £1.8 billion. Now, if we calculate £2 billion plus £5 million per day, total impact would be much more than FY25's profit. Now, why it's important for Tata Motors? Because JLR forms nearly 70% of its consolidated revenue. Now, apart from cyber attack news, there is one news that coming from The Guardian, which says that UK government might look at buying parts from JLR to mitigate the impact of cyber incidents. So we'll have to see how exactly this whole issue pans out. We have reached out to JLR to know the impact. Okay, all right. Thanks a lot for that, Sud. Well, let's go across to Vivek, who's here to tell us about a large trade that we're expecting on Polycab. Morning, Viv.
Well, good morning. Absolutely right. You know, our colleague Nimesh hinted to our viewers yesterday that there could be a large trade that could take place as far as Polycab is concerned and in line with expectations. And also remember, you know, the promoters have been pairing stake even towards the end of June. They did pair close to 2% stake. So what we understand from our sources as well as the term sheet that we accessed last evening is that multiple promoter entities are looking to sell close to 0.8% of the total equity. The offer floor price is at close to 7,300 rupees a share, which implies a 3% discount to yesterday's closing. That takes the total offer size to a little over 880 crore. And also remember, there will be a 90-day lockup on further sale of shares. So there has been a promoter pairing stake happening over the last few quarters as far as Polycab is concerned.
Absolutely. Vivek, thank you very much for that. More pharma companies in focus. Ekta is here with those. Ekta, good morning.
Morning. Well, I'll start with Glenmark, which is in focus. They've signed an exclusive license and collaboration agreement with Hengrui Pharma. And the deal covers basically a type of cancer therapy, which is antibody drug conjugates, which is basically gaining a lot of importance now. So Glenmark has gained the exclusive rights to develop and commercialize this particular molecule worldwide, excluding certain number of geographies, which includes mainland China, Hong Kong, USA, Canada, Europe, Japan, Russia. So a lot of the countries are in fact excluded from the deal for Glenmark. So it'll be interesting to see which continents or which countries they would be, be able to sort of commercialize in. Glenmark is going to make an upfront payment of $18 million for this, and Hengrui is going to be eligible for milestone payments of up to 1.093 billion. So Glenmark, I expect, should probably be in the green on account of this. But obviously, one will have to see the timeline and the commercialization eventually of this particular molecule.
Okay, all right, Ekta, but we're not done with you. You're tracking some more stocks. IPCA and Lupin, tell us more.
Yes, absolutely. So Lupin is in focus because they've received a tentative approval for an HIV drug. Now, the tablet is bioequivalent to a drug by Gilead Life Sciences, and that annual sales is around $16.2 billion. So it is an HIV drug. Generally, such drugs always have large market sizes. So they've received tentative approval. Once they receive final approval, Lupin has said that it will allow them to enter into the lucrative HIV market. And hence we expect the stock to be in the green. IPCA, interestingly, has entered into a tech transfer and joint development agreement with a biosimilar company, Biosimilar Sciences, for the development, manufacture and supply of a biosimilar which is targeting oncology and inflammation from IPCA. So IPCA is going to be transferring their technology to BSS. Now, BSS's campus is in Puerto Rico. IPCA will be receiving defined milestone fees on account of this, as well as royalty on net sales upon commercialization. Interestingly, the press release goes on to say that the company says that capital will now be spent overseas to fund American jobs, infrastructure, as well as IP. So in a way, they are transferring this tech transfer to a company which is based in Puerto Rico, and hence it's going to probably, be in line with the localization theme that America is promoting, and Puerto Rico, which is, positioning itself as a pharma hub. So interesting news coming in for IPCA. We'll see how the stock reacts at this point, but expect it to probably be in the green.
Okay, all right, got it. Thank you very much for that, Ekta. Nigel, news on Birla Corp and Dalmia Bharat, some regulatory action.
Well, that's right. A mild green for Birla and a mild red for Dalmia Bharat. Let's tell you the news. Birla Corp, they have their arm has emerged as a preferred bidder for the Kanpa Junapani limestone block. That's by the Telangana government. Remember, the company doesn't have a cement plant, by the way. In Telangana, no plans as of now as well. Earlier this week as well, the company was declared as a preferred bidder for the Guda Rampur limestone and manganese block in Telangana itself. But why is it good? Because it secures raw material supply. It's positive in case they want to go for long-term expansion as well. So going with mild green on Birla Corp. Next up, Dalmia Bharat. Well, they have confirmed the attachment of land worth around 377 crores by the ED. Remember, Dalmia Bharat on April 15, 2025 had received a provisional attachment order of around 793 crores by the ED. So going with mild red, Dalmia Bharat is the one, not Dalmia Bharat Sugar. So we'll keep an eye out on that stock as well. Moving back to Vamakshi, she's here to tell us about some other stocks that are in the news. Vama?
Good morning, Nigel. Let me first start off with CRISIL. The company has announced an acquisition. The board has gone ahead and approved the acquisition of 100% equity in McKinsey Price Metrics by one of its arms, which is CRISIL Canada Inc. Now, this acquisition will be done at a consideration of around $38 million, which is approximately 335 crores. And Price Metrics essentially is a leading software solution provider for wealth management firms. Now, if you look at the revenue profile for this particular company, the revenue has grown at a CAGR of almost 8% from 81.5 crores in 2022 to 94.2 crores in 2024. Now they follow a December year ended calendar. Now they've managed to report 21.5 crores of profit in 2024. So therefore, the price to earnings ratio at which this acquisition is happening is at almost 15 times, which is much lower as compared to CRISIL's own around 40 to 50 times price to earnings ratio. Quality Power is the next stock that I'm watching out for, because Meru Electrical, which is a material subsidiary for the company, has signed a technology co-development agreement with Hyosung Group of South Korea, and this is for gas insulated switchgear instrument transformers, and with that it becomes one of the first Indian companies to co-develop a GIS instrument transformer for global markets. So going with the green for Quality Power. And lastly, keep an eye out on Newgen Software as well, because a couple of order wins for the company. They've received an order worth almost 21 crores from Shemark General Insurance. This is for software license, implementation and annual support services for a period of 5 years. And the other one is one by an wholly owned subsidiary which has executed a master service agreement with a customer for cloud hosting, software license and implementation services. And the aggregate value of this is around 4.22 million euros.
Okay. All right, Vamakshi, got it. Thank you very much for that. So let's quickly recap our list of top stocks to watch. The ones that have positive news flow around them would be Glenmark Pharma, Lupin, Iqbal Laboratories, Birla Corp, CRISIL Quality Power and Newgen Software. The ones that have negative news flow would be Tata Motors, Polycab and Dalmia Bharat. Okay, so that's our top 10 list for the morning. Let's now move on. We have Manisha joining in with a roundup of all the commodity market action. Manisha, good morning. So what's the big headline?
Well, while we are looking at some pause in gold and silver prices, what has really run up in the overnight markets has been the copper prices, up by between 4 to 5%. It's trading at a 2-month highs for the spot prices, 15-month highs when you look at the LME 3-month prices there. This is after Freeport McMoran declares force majeure from Grasberg mine in Indonesia. In any case, we are looking at lower supplies in this year. There have been various reports from the beginning of this year on how there is less copper and more demand in sense of energy, defense, AI, energy transition, etc. So these factors really seem to be coming together right now, and a very strong support is what we continue to see in the Asian markets right now as well. The other thing that's doing well is the crude oil prices, nearly 3% of gains overnight. And with that, we are trading at around 7-week highs for the crude oil prices also. This has to do with the decline in U.S. inventories and concerns in sense of supply coming in from Russia, from Kazakhstan, also Turkey. Markets also are looking at Venezuela concerns coming in as Chevron says that it will export only 50% of what it produces in that country. So supply concerns are pushing crude prices also higher today.
Right. Manisha, thank you very much for that. So copper in focus, oil in focus as well. Thanks very much. Well, brokerage calls of the day is what we want to focus on now. So sort of goes through a lot which comes in the morning and picks out a few. So good morning.
Good morning, Prashant. So Dixon Tech has got another upgrade from UBS, and that is the UBS's upgrade to buy call and target has given is of rupees 23,000 per share. It says company is poised for next growth phase via backward integration into non-semiconductor smartphone components like displays, camera modules, enclosures and batteries. And this will expand its margin by 110 basis points by FY28 versus consensus of 40 bips expansion. And also by FY28, it's targeting a revenue of $11 billion. That would be an increase of almost 2.5 times if you compare from the level that company had reported for FY25. Second note is on Piramal Pharma. Incred has initiated coverage with an ad call and target is of rupees 276. It says company has a diversified 3-engine model, that is first CDMO, second CHG and third is PCH. And these three businesses blend high growth outsourcing with steady and defensive cash flow, and also differentiation comes from end-to-end CDMO depth in complex modalities, and CHG is a cash-rich and defensible franchise that also will be positive for Piramal Pharma.
Okay, all right, got that. Thanks very much, Sud. So we'll keep all of those stocks on our radar as well. We have to take a very quick break on that note. We'll come back on the other side. We will be connecting with, of course, Deepan Mehta, discuss some of these stocks and some more fundamental ideas. Also, the management of Poly Medicure is going to join in to talk about their recent acquisition.
Anand Rathi Share and Stock Brokers Limited, an established full-service brokerage house in India with over 30 years of experience, now launches an initial public offer of equity share of face value of Rs 5 each in the price band of Rs 393 to Rs 414 per equity share. Bid issue opens on September 23, 2025, closes on September 25, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers, and the company.
Why is there a growing need for enterprises to become digitally resilient in this hyper-connected world? Professor Huzur Saran from IIT Delhi and Arun Shetty from Cisco discuss resilience by design, building trust into the internet's next chapter. Watch CNBC-TV18 and Cisco present Digital Resilience Dialogues at this time.
BMW Ventures Limited is engaged in trading and distribution of steel products, tractor engines and spare parts, manufacturing of PVC pipes and roll forming, and fabrication of PEBs and steel girders. The company is launching its initial public offering. The price band is Rs 94 to Rs 99 per equity share of face value of Rs 10 each. The issue opens on Wednesday, 24th September 2025 and closes on Friday, 26th September 2025. For risk factors and more details, please refer to the red herring prospectus available on the websites. The book running lead manager to the issue is Sarthi Capital Advisors Private Limited.
Love is nothing without the thrill. Unlimited love. The B6 Pack 2 starts at 21.9 lakh.
Jaro Institute of Technology Management and Research Limited now launches an initial public offer of equity shares of face value of 10 rupees each in the price band of 846 rupees to 890 rupees per equity share. Bid offer opens on Tuesday, September 23, 2025, closes on Thursday, September 25, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers, and the company.
Hello. We usually work for large investors like FPI, meaning foreign portfolio investors. If you send us a joining fee of 1 lakh upfront, we can include you in our privileged client group. But offer is available only for today.
Count me in. Wait a minute. Except under very limited exceptions, an Indian citizen cannot invest through the FPI route. Be smart and invest wisely.
Solar World Energy Solutions Limited proposes an initial public offering of its equity shares. The 100% book-built offer is being offered at a price band of Rs 333 to Rs 351 per equity share of face value of Rs 5 each. Offer opens on Tuesday, September 23rd, 2025. Offer closes on Thursday, September 25th, 2025. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, the SEBI, the BRLMs, and the stock exchanges.
Welcome back. Well, let's get to big conversation. NSE's MD and CEO Ashish Kumar Chauhan has said that SEBI will consider stakeholder views before any move on curbing weekly expiries. He was speaking on the NSE's long-awaited listing as well. Our colleague Abhimanyu asked him whether the NOC was expected from the market regulator SEBI soon, and this is what he had to say.
We have been discussing with SEBI, and
we had filed our application for settlement in June 2025, and we are awaiting the NOC. Once the NOC comes, as you know, it'll take 4 or 5 months to prepare the RHP, and then another 4 or 5 months for SEBI to clear the RHP. So somewhere 8-9 months after the NOC is when the IPO can happen.
So there has been a buzz around curbing of weekly expiries and shift towards longer expiries like fortnightly and monthly. How is this likely to go through? Have you heard anything from the regulator in this regard?
No, we have not had discussions. What we have heard from the public pronouncements is that SEBI will come out with consultative papers, and all the participants' views will be taken into account by SEBI before taking any action.
Sir, if this goes through, what is going to be the expected impact on business? Could there be any meaningful reduction in volume?
Naturally, in the initial phases, there could be, but over a period, things basically come down to normal, and it remains to be seen how overall what kind of final outcomes are there of the consultative paper.
So there's a buzz around the same-day expiry for BSE and NSE. Could that be a part of the negative from the discontinuation of weekly expiry set-off?
In a way, it was always there. A common settlement was always there for more than 25 years now. Only in last few years there have been some changes. But overall, again, it's up to the regulator of what they want to do, and then we'll have to all obey the regulatory framework.
Well, that's Ashish Kumar Chauhan, Managing Director, CEO, NSE. A bunch of issues really there. We have Deepan Mehta, Director at Elixir Equities, with us. Deepan, good morning. Great to have you with us here. Thanks very much for your time. As an NSE shareholder, feeling better? Feeling good? Deepan?
I don't. Good morning, Prashant. I don't have any NSE.
You don't have NSE. I just assumed. I mean, that's just.
I had BSE Limited shares, which I sold very early, and that will be one of the regrets of my life, because that has gone up 50-fold from the time I think I sold it back. I think about 15 years ago. So, but no, I think that certainly NSE is a great company, and there are medium-term challenges like this options volume, and also the IPO, and you could expect selling post IPO because a lot of stock is there with a lot of outside investors as well. But it's a great long-term story, 10-15 years or so, we're going to have a great capital market over here. Cash market volumes are growing, and certainly that will ensure that the company continues to prosper. So very positive on NSE per se, but there could be challenges in the short to medium term.
I just want to make, Deepan, just coming to you, let's pull up BSE share price. So we had reported sometime back, our colleague Yash has, of course, been on top of the story. We had reported sometime back that there's weekly options, the consultation paper on longer tenure derivatives is, the SEBI is going to come out with a consultation paper. I think this is about 3 weeks ago, we'd reported. And we also at that point said that the consultation with, intermediaries, large brokers, etc., is going to start as part of it. Yesterday, our sister net channel CNBC Awaz reported that consultation process has indeed started with exchanges. And I think towards the end, as they put that story out, the stock did see, that is BSE, not PB Fintech, BSE actually did see a bit of a fall. Just wanted to make that mention. I mean, we'd reported that this is happening, and SEBI chairman is on record, of course, saying that we're looking at longer tenure derivatives, maybe a move away from some of the weekly stuff. So we'll see. Nothing is decided as of yet, all in the area of proposals. One more area of proposal, of course, is in the case of insurance. And this is, again, a question for you, Deepan. Yash reported on insurance yesterday. He said essentially IRDAI is once again talking about bringing down commission costs, distribution costs, etc. I mean, the experiment of Bima Sugam presumably has not really gone anywhere. We've got a new man at the helm at IRDAI as well. And the interesting bit was that insurers basically told IRDAI that why not consider a mutual fund total expense ratio type model to do this. And they're going to come up with a proposal, etc. Again, PB Fintech sold off at one point sharply, some 6-7% yesterday, and recovered. Your thoughts, Deepan? PB Fintech?
Yeah, I think that certainly is a threat for a company like PB Fintech, which derives a large portion of its revenues from selling insurance policies. But I'm sure they have other plans as well. to counter that thing. But on the whole, I think if they go to a fixed commission model, the way mutual funds have gone, it'll be very positive for the insurance companies. I think, look, from the consumer side, the commissions are really quite exorbitant for the kind of service that the agents are offering. So it's a good move in the right direction, and will go towards improving their operating profit margins as well. But look, end of the day, Prashant, insurance is very, very heavily regulated, and there's hardly any scope for innovation. And if you see the growth rates, they are all middling. I mean, all more or less in the average range for all the companies. And private insurance companies have been listed for last, I think, almost 15 years or so. But it's not that they have really outperformed the Sensex Nifty by a huge margin. So I'm not so sure from a long-term investment perspective, they are great stocks to invest in. Any case, valuations also are quite reasonable. And last but not the least, they are highly complicated to understand, analyze, and forecast. So, very few people understand the valuation and all the other metrics which come into play.
Okay, all right, Deepan, request you to stay with us. Polymedicure, that's the stock in focus. They're looking to acquire Italian-based Medistream for around 324 crore rupees. Mr. Himanshu Baid, the managing director of Polymedicure, joins us on the show. Well, good to have you on the show, Mr. Baid. For the last many months, you were teasing us about acquisitions, and now you're making the step in those directions. So I'm going to come back to you. For the time being, just highlighting the three broad points that we want to focus on. The opportunity for them with this new acquisition, the impact of the GST rate rationalization, as well as what's the impact of tariffs, and finally, the outlook for their international business. Well, Mr. Baid, always good having you on the show. Tell us something about this newly acquired company. What's the scalability of this Italian company? I believe in the last year, it did around 17 million euros, with margins in that vicinity of around 17 to around 18%. Growth trajectory, and do you think the margins can come at par with what you're doing right now in the core business?
Good morning, Nigel. Thank you. I think, we have been working on a couple of acquisitions. So one we announced earlier in the month was Pendracare in cardiology space in Netherlands. And this is the second one, Medistream, which is a company based out of Switzerland, but manufacturing in Italy. And the most important thing with this company is they've got a long track record in the trauma and extremity space. And that market is close to around $16 to $18 billion. And majority of the market is in the US, actually almost 60%. And this company has got a FDA-approved product line. They already have a small base in the US. So this gives us an opportunity to expand into the US market with expanding their network. And also they have a direct sales force in US, Mexico, and Italy. So I think that also gives us some strength to deepen that manufacturing base there, and also leverage India in terms of cost reduction in different areas. And if you can leverage that, I think that will help us to grow this business. And I think the plan is to double in next 5 years.
Double the revenue in the next 5 years. All right. So it'll be approximately 35 million euros. With regard to that point on US, how big can the US market become for you in terms of revenues? Say as of now, what is it and where is it headed? Point number one. Point number two is you're sitting on a good amount of cash. Post this acquisition, what does the cash come down to? So on both those 2 points, US market and funding.
See, the US market, I think currently is around 3.5, 4 million. And I think the plan is to, almost take it to around 15 to 20 million by 2030. And, definitely we need to do some homework there and, increase our distribution network there. But that's the possibility from the current scenario. Though it's too early to predict, but that's what we think right now. On the cash front, I think we have used close to around 450 crores of cash in both the acquisitions. And we still have around close to 750 crores cash. Partially is going to be used for expansion in India. And that's going on, as part of the QIP proceeds. And I think balance will be used, as and when required.
Himanshu, hi, good morning. And good to see you build out various legs of this business, right? And it's such a big field, medical equipment and...
Yeah.
So good to see that. Just a quick point. I know I've asked you this before. I think exports to the US is very minuscule for you, value-wise, etc. Yeah. This company that you've acquired, does it have, you said they have distribution and sales force in the US. Do they have manufacturing in the US as well?
No, not manufacturing. Manufacturing is in Italy right now. But, now if you see our 3 European operations, all the 3 companies which are manufacturing in Europe have US FDA approvals. So that gives us this kind of a entry into the US market, with 3 companies. And of course, with India operations also focusing on the US. So I think we want to build up a substantial business in the US in next coming 4-5 years.
Okay. Now, this may be transient and we know who knows, right? I mean, the world is in a bit of a flux, but a bit about revenues doubling in the next 5 years for this company. How much of that is contingent on US sales? Because just as we speak, I mean, I saw this a couple of hours ago, that US is considering tariffs on import of medical equipment from outside. As I began by prefacing my question, who knows? And how long this will stay, whether this will happen or not. But any thoughts?
So I think US already has tariffs on Indian products and Chinese and a lot of other countries. So medical devices are not exempted and equipments are not exempted as of now. So like pharma, we are not exempted. So we still pay tariffs, but our products are going in the US. So, but being in Europe, I think that gives us a faster entry into the into the US market. And US market, let's say you asked about what could be the US market share. It could be around 40 to 50% going forward in the next 5 years.
Okay, all right. Final question then with regard to the GST, GST 2.0. It's been rationalized. How do you read it for your business? And also just revise the guidance for the company on the whole, domestic and international market as well. Q1 was a little bit softer, so I ask you.
So I think on the GST front, I think it's a great move by the government of India. I think that reduces the cost for the patients overall. From 18%, 12%, we have dropped to 5%. And I think healthcare now gets more affordable, and that will drive consumption of medical equipment and devices because they become more and more affordable. Healthcare costs will definitely go down. So that's a huge impact. And of course, it will be very hard to say what will be the real impact in the current financial year. But I think we still, stay with the guidance of 30% for domestic market growth this year. Export markets, again, little choppy, but still, between 5 to 10%.
Is Chinese dumping a problem here in India?
It is a major problem. It's a major problem.
Okay. How big a problem?
I think, wherever we have seen PLI being offered in India, I think Chinese have been dumping the product in every sector. And I think I was talking to some of senior government officials, and they've probably mapped it that out of the 14, 15 sectors where we have PLI, Chinese have actually, dumped prices in around 12 to 13 sectors.
Wow.
That's a big issue right now, I think.
Wow. So I mean, your products are having to compete with the products here from China. Obviously, price points there are much lower.
Yeah, they are lower, and I think, we have given an easy entry to Chinese products in India. Whereas, when we want to sell in China, it would take 3 to 4 years to register a product. Whereas in India, it's much easier for them to register products and sell in India. So, and also they don't have, transfer pricing issue. They don't take care of anything. So all that actually, push manufacturing back in India to a certain extent. But I think it's a matter of time where I think we will get out of this, and I think we'll become more resilient.
Okay. Hope so. I mean, maybe the government has to do something. Maybe the industry with scale becomes more competitive. It has to be a mix.
There is a lot happening at the government level also. You've seen GST reforms and other stuff. So I think we are very positive on this.
Absolutely, sir. It's an industry where I think why shouldn't Indian companies like you have more share and reduce import dependency in a big way. Thank you very much, and good luck to you as you execute. Appreciate it. We'll take a quick commercial break here. We're going to focus on the big movers on the Lal Street from yesterday. The big stocks, basically, price action, and of course, what was behind the price action, delivery stats, and so on and so forth. Coming up.
Anand Rathi Share and Stock Brokers Limited, an established full-service brokerage house in India with over 30 years of experience, now launches an initial public offer of equity share of face value of ₹5 each in the price band of ₹393 to ₹414 per equity share. Bid issue opens on September 23rd, 2025, closes on September 25, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers, and the company.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
पता है हेल्थ इंश्योरेंस आपकी फैमिली के लिए कितना जरूरी है?
इतना जरूरी है कि भारत सरकार ने इस पे जीएसटी पूरी तरह से हटाकर जीरो कर दिया है। पॉलिसी बाजार पर अब 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू। policybazaar.com।
Seshasai Technologies Limited, a technology-driven multi-location solutions provider offering payment solutions, communications and fulfillment solutions and IoT solutions, now launches an initial public offer of equity shares of face value of 10 rupees each, in the price band of 402 rupees to 423 rupees per equity share. Bid offer opens on Tuesday, September 23, 2025, closes on Thursday, September 25, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
आइए दोस्तों, भारत ने जियो कैसे बनाया उन किस्सों को सुनते हैं। ये है मुंबई के टीचर अभिषेक साठे।
बच्चा पार्टी, कैमरा ऑन करो। किसी को पीछे छूटने नहीं दिया जब हर एक बच्चे को पढ़ाया। जियो मैंने बनाया।
जियो को 50 करोड़ देशवासियों ने मिलकर बनाया।
Systematic Industries Limited, India's third largest steel wire manufacturer group with 25 plus years of incorporation serving power and transmission, infrastructure, telecom and other sectors, launches its IPO on the BSE platform with price band of rupees 185 to rupees 195 per equity share. IPO opens on 24th September and closes on 26th September. Book running lead manager is Hem Securities Limited.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ, डूबेगा नहीं।
Welcome back. You're tuned in to Bazaar Morning Call. Well, it's that time of the show when Horribles joins in to tell us about all the big movers yesterday, the large volumes, as well as delivery-based buying or selling. Harmas, take it away.
Good morning, Nigel. And the one common theme that has been dominating proceedings over the last 2 days has been the auto ancillary names. We spoke about it in closing as well yesterday. And take a look at the volumes at which they traded. In yesterday's trading session, Munjal Auto was up 15%, Minda Corp was up around 10% as well after the vision document they unveiled. Lumax Auto, another day of 7.5% gains in yesterday's session. But take a look at the volumes here. Munjal Auto, over 1.5 crore shares being traded. Minda Corp, 2.5 crore shares being traded, significantly above their 20-day average, which stands at around 5 lakh and 3 lakh shares respectively. Same is the case for Lumax Auto as well. But when you take a look at the delivery stats, well, considering the sheer amount of shares that were traded, the delivery stats don't match up to it. And the Munjal Auto, 18 lakh shares traded compared to 1.5 crore that were traded yesterday. Of course, they're significantly higher than their 20-day average nonetheless. But Minda Corp as well, 19 lakh shares marked for delivery compared to 2.5 lakh shares traded. And Lumax Auto as well, that was slightly better with 4 lakh shares marked for delivery compared to 13 lakh shares being traded. PSU banks have been another dominant theme over the last few trading sessions. Most of those banks hit a 52-week high in intraday trade yesterday. Indian Bank was one such name, and the volumes on Wednesday were the highest in the last 3 months. 55 lakh shares were traded in yesterday's trading session. 20-day average is around 11.5 lakh, and out of which 23 lakh shares were marked for delivery. And here too, the 20-day average is around 6 lakhs, so around 4x of the 20-day average was marked for delivery yesterday for Indian Bank. There are reports that are also suggesting that it could be a potential MSCI inclusion if at all the foreign shareholding limit for FIIs is raised. And Motilal Oswal today has also called it one of its top PSU banking picks as well. And lastly, Zuari Industries, another 20% circuit yesterday. The stock was up 10% the day before, and the volumes were the highest on record. Close to 60 lakh shares were traded in yesterday's trading session. The 20-day average here is only 3 lakh shares, and out of which close to 10 lakh shares were marked for delivery. Here the 20-day average is only 74,000 shares. Now the stock has turned positive on a year-to-date basis, and since the start of 2020 the stock has gone up almost 8x.
Okay, and who says this is a flat market, right? Look at the names on Hormaz's list. Big movers and shakers. Thanks for that, Hormaz. But let's revisit Tata Motors and bring Sudarshan back in. We told you earlier that the stock is going to be in focus because this JLR hit is pretty big. You'd think a cyber attack, maybe a couple million here, there, a couple of days of outage, but this is looking a lot bigger than that, no, Sud?
That's correct. So reports suggest that because JLR had failed to have the insurance coverage ahead of cyber attack, and that may impact, and total impact can be of £2 billion because of no insurance coverage. And apart from this, earlier BBC had reported that because of the production pause, daily impact for JLR was £5 million per day that company has been facing. So if you take a look at the timeline of cyber attack, so it had happened on August 31st, and first statement from the company had come on September 2, saying that it's looking to the issue and looking at restarting the production very soon. But the latest statement that company had released on September 23, in which it mentioned that production pause extended till October 1, and it has also mentioned that it will be looking to restart the production in a phased manner. But here also reports suggest that production pause may be extended till November, and if that happens, it will not only have an impact on Q2 earnings, but also will have an impact on Q3 earnings. Now, why this is very important for Tata Motors? Because you know that JLR forms nearly 70% of Tata Motors' consolidated revenue. Now, apart from this news and the impact, there is another news, that a report coming out from Guardian. It says that UK government is looking at multiple options to resolve this issue, and one of those options is that UK government may buy parts from JLR suppliers, and once JLR resumes the production, again UK government will sell them back. So just UK government is looking to support the JLR at this point, but we'll have to see how this whole issue pans out. But at this point, it's a huge impact that we can say.
So 30 seconds, this £2 billion is not 5 million per day added up to 2 billion, right? That's separate.
It's separate. It's separate.
Okay. And
£2 billion is just on the basis of no insurance coverage.
I can't quite square. How does a cyber attack and a no insurance cover cause a $2 billion? We don't know the details yet, right?
I have tried finding out the details, and just if I can add few points, if you don't have the insurance coverage, because auto companies, when you're into production, it's like very critical. So just first one is direct and indirect losses add up very quickly. And second is that lost profits because of production pause, that also you'll have to add. Third is, if JLR has agreements with suppliers or OEMs, any delay or failure may trigger penalties, claims or compensation obligations. So like this, there are so many issues that if you add up everything, they might have come with $2 billion.
I think it's the last, maybe the last one, right? Back-to-back supplies, payments, etc., which also add up. But yeah, and we'll come back and revisit this exactly to answer that question. Which are those heads, right? And how does it add up? But very useful. Thank you very much. An important story to track, important for Tata Motors. So Sept 682 is where the stocks finished yesterday. We'll take a break. We are back, and we'll come back with the pre-opening rate. Sudarshan and Mitesh are going to be with us as well. Stay tuned. Okay, welcome back. There's, a minute to go for the pre-open session, and we'll have rates coming up shortly. Well, just want to get you, we're coming to you live from the CNBC-TV18 News studios, and we are, of course, running up to market open as well. This is important information. The cabinet has approved the shipping and maritime projects worth about 70,000 crore rupees yesterday. This includes financial assistance and a development scheme for shipbuilding worth nearly 45,000 crores. The government's also cleared a maritime development fund worth about 25,000 crore rupees. CNBC TV18 spoke with the shipping secretary to understand how this will sort of play out in terms of India's shipping sector amidst global headwinds. Here is what he had to tell us.
Shipbuilding Financial Assistance Scheme builds upon an earlier scheme, which was the first version of the scheme. And the idea is to provide assistance to shipyards to bridge the gap between the cost of acquiring a ship abroad versus acquiring it in India. So this difference was about 15 to 20%. So this scheme incentivizes the cost of acquiring a ship, and it gives you a subsidy of 15 to 25% depending on how big the ship is and whether it is a green vessel and so on. Some of the largest ship builders in India are either in the defense sector or in the sole one is the CSL in the under the shipping ministry. The net result of having only a few shipyards in the public sector and a couple of them, in the private sector like in Pipavav or L&T or Shaugule, etc. But the thing is, we don't have capacity. Other countries, Korea and Japan and China, even Vietnam, they produce a lot more of tonnage every year. So this scheme was brought in, one, to improve the capacity of the brownfield shipyards so that they can, they get about 25% subsidy. The cost of capital cost of setting up new infrastructure in a brownfield shipyard, up to 25% we will give them.
Well, we'll play out excerpts of this interview through the course of the day. And that's the shipping secretary for you. Deepan is with us. Deepan, any stocks you like here in the shipping sector?
No, Prashant, I think that largely the shipbuilding industry is concentrated with the PSUs, and they've all been pretty well discovered, likes of Masgaon, Cochin Shipyard, Garden Reach. And that's more of a defense play than actual shipbuilding. There's only one, I think, private company which is listed. I think operations yet to start is Swan Defense, which was earlier Reliance Naval, I think. So with that also the revenues are not yet coming through. So I'm sure it's positive for that particular company. But on the whole, I think it's very good policy by the government. But large beneficiaries will be the PSU defense shipbuilding companies, which may now diversify into commercial shipbuilding as well, I think. So generally positive and in line with all the reforms taking place in the country.
Okay, all right. Deepan, I wanted to ask you about Polycab. From the time it's listed, I think the market cap was around 8,000 crore rupees. The promoter holding at that point of time was around 68%. Now the promoter holding post this likely sale, which sources indicate that it could be the promoter entity, could be down to around 61.5%. The wealth has gone up from around an 8,000 crore market capitalization to around 1.1 lakh crore market capitalization. What's your view? How would you approach the stock? One way of looking at it is promoter selling. The other way of looking at it is they've created so much of wealth. They've grown the company to such an extent. So maybe taking a piece of the pie is okay. Your view?
Well, I'll tell you one thing, Nigel, that even promoters are astonished at the valuations at which their companies are trading. And it is just too tempting that they should at least sell part of the holdings and encash it. But that's not a problem because whatever they sell is going to come back into the market directly, indirectly. A lot of family offices, mind you, are sitting on a huge amount of cash. They find the valuations uncomfortable, so they're not buying as of now. But whenever there's a correction, I think you will see a wave of money coming in from family offices, especially promoters who have sold stock in the last 2-3 years because of very high valuation. And I think Polycab remains a very strong performer. From time to time, we have seen the numbers coming through exceptionally well. And also the fact that, the entire infrastructure, real estate, capex cycle is improving. And that benefits companies like Polycab, especially Polycab is very strong on the retail side with their brand. So positive on the company, just valuations a bit on the higher side.
Okay. All right, Deepan got that. Thank you very much for joining in. Great conversation as always. You have a good day and we'll connect again soon. Just about 9:05. The pre-open is indicating a 60-point lower start, so a little more than what the implied open was suggesting and the gift Nifty was suggesting. Weakness in some of the large tech names, Infosys, etc., are still down, and the large financial names, ICICI Bank, Bajaj Finance, I can see some of these on the screen. So financials and tech, maybe a quiet start. Good time to bring up our technical experts for some ideas. Sudarshan Sukhani is with us, as well as Mitesh Thakkar. Gentlemen, good morning. Great to have you both in. So now we've gotten into a consolidation phase again in the market, last 2-3 sessions at least. So Mitesh, what would be your approach for the day?
Good morning, sir. Yesterday I mentioned that trading below 25,150 was a slight negative, and while the broader trend still isn't showing signs of a reversal, I think capturing that level is important for the markets to maintain some kind of an upward buoyancy. So I think till that happens, I think we are quite on the index, but on a stock-specific basis we are trading. In case you get past 25,150, I look at 25,500. But if it doesn't happen, then I think we might be in for a bit more pullback to the gap level of around 24,920.
Okay, got that. What about you, Sudarshan? How would you approach the markets? We've pulled back a little bit. Do you think that 20 DMA holds out? Your view?
Yeah, good morning. My view is that this market is not tradable. This was the view I said on Tuesday morning, and yesterday, Wednesday morning, and today, Thursday morning. The markets are choppy. Choppy markets are very difficult to trade and almost always end up in losses. Now, let the choppiness end. The market will give us a direction sooner or later, but we can't force it. So the best trade for the last 2 days and for today is not to trade the Nifty. Focus on whatever stocks you can.
And Sudarshan, which stocks would those be then? Let's come to your list.
Yeah, that's fair enough. See, I have two intraday shorts, Wipro, where a short can be made with a stop above 247, and DLF, where a short trade can be made with a stop under 746. Two buying ideas, CanBank, stop under 120, buy CanBank, and buy ONGC with a stop under 234. It's a mixed bag and the markets are going to be choppy.
Okay, got that point. Mitesh, what about you? Stocks for the day?
I also have a mix of buy and sell, slightly more biased towards the buy side. I think Power Grid was one stock which gave a good breakout yesterday. So buy here at the stop below 289 for a target of around 305. Similarly, LIC Housing Finance has given a pullback in the last 4 days, trading near the support area. So the call is to buy around 577, 576 with a stop below 569 for a target of around 595 to about 600. Also a buy on GRSC Shipbuilders. That's one thing. The stock is a part of my portfolio, so disclaimer, there is vested interest. But it's managed to get past the critical resistance levels of around 26.7580. So keep a stop below 26.60 here. Look for targets of 28.30. And one sell call, that's IDFC First Bank. Keep a stop at 71.25 and look for downside targets of around 67.5.
Okay, all right, gentlemen, got that. Thank you very much for your trading advice this morning. Let's quickly shift focus to the real estate pack. Yesterday, we saw a fair amount of selling pressure on realty stocks across the board, Mumbai, non-Mumbai, all over. We have Sumit Kumar, who tracks the sector at JM Financial Institutional Equities, now joining in. Sumit, thanks very much for being here. We'll get to your overall sector view in just a bit, but on yesterday's selling, is there anything particular that perhaps could have been the trigger, or do you think it was just one of those routine market profit-taking days?
Yeah, I don't think so. We should read, too much into a single-day performance of all these stocks. I think in terms of demand, obviously, first half of the financial year is a seasonally weak quarter with Shad and, non-auspicious days. Quite a few of them are there in this period. So the developers also hold back on the launches. Obviously, there's been the impact of rainfall, etc. All of that, the footfalls at, the sales offices have been down. So this is just a short-term impact, which is probably sort of a manifestation of what's happening externally. There is a good launch pipeline for all, the tier one developers, the reputed developers, the listed developers. All of that is being bunched up in the second half. And the absorption at launches has still been healthy. Obviously, we've not seen many sellouts, as that has been the case in the last 2 or 3 years. But yeah, the absorption still at about 50% of the inventory that is put up for sale. And we hope that second half will actually be quite good, for our coverage universe at least.
Okay, yeah, I think some of the stocks that you like a lot, we'll just put up the list for our viewers as well. I think it's Godrej Properties, Sobha and Keystone, from what I have. So you like them. Do tell us why you've picked out these three, and also address, concerns in some parts of the market. At least I've been hearing and reading about this, that the super luxury end of the market, that seems to be plateauing now.
See, I would say it's more of a consolidation phase. Obviously, we've seen good growth from a period of FY22 onwards till even till FY25, the sector grew at about 25% plus. So obviously, there will be certain periods where the industry or the segment will consolidate. Obviously, a lot of it is linked to the wealth creation in the economy, the stock market, the up rounds of startups. All of that is linked to wealth creation in the broader economy, and that helps bring some momentum in residential sales as well. But even if you look at ignoring, the last 6-7 months where we've probably have some sort of a time correction in prices, as well as the volumes have been a little muted. The last 3 years growth has been quite impressive. In the luxury segment, it's upwards of 25% plus, as I told you. And there will be some periods where, you will have muted numbers, but overall the trend seems to be positive. Supply still is at about 12-14 months across all markets, especially in the luxury and the...
Okay. Got your point, Sumit. So you're not in the camp that is getting a little worried about super premium luxury. Let's come to your stock picks, Godrej, Sobha and Keystone. Why these over some of the others?
A little slowdown in volumes. There will always be some bottom-up stories. Keystone has been very aggressive in business development. They've added quite a few big redevelopment projects. GTP Nagar in Sion is one, and we see that all coming into the P&L and the in the balance sheet. And there is a decent upside to that name, we believe. Sobha has a good pipeline of launches for H2 this year, and we hope and we believe that they'll do about 30 to 35% growth in pre-sales, and hence the valuations are up for a re-rating. And GPL, the powerhouse of Indian real estate, they have a good launch pipeline, including some large projects in Mumbai and Navi Mumbai, and they are on track to complete or achieve their FY26 target, which is about 32.5 thousand crores. And I think the stock has taken a beating, but there is again a case of a re-rating, and I think it can easily move up maybe 15-20% over a period of time.
Okay, got that. Sumit, very quickly, last point, data centers. And we've been speaking to several developers. We spoke with Lodha yesterday, Prestige, I think, last week. And most of them are talking about getting into this data center business and opportunity. But how have you started valuing it? And these would be, from a real estate perspective, these would be just, centers. I don't think real estate developers themselves are getting into the tech of the data center. But what is your read-through? And from an earnings perspective, how much does it add? From a margin perspective, is it going to be margin accretive?
So I think I would look at it more from a sort of a annuity business, because I don't think so. Most of the developers are looking to set up racks and the associated infrastructure that we, that we think of a data center. They will be probably providing the real estate part of it. So I would look at it more like an annuity business, where the yields would be somewhere between 9.5% to 10% to start. This is on cost. And overall, I think the return expectations would be on a levered basis somewhere between 18 to 25%. So it's more like an annuity business. Obviously, this is one tailwind that almost everybody associated with this segment is looking to tap. And there is obviously from a small scale, this can grow to a sizable amount. But at this point of time, except for a few REITs, I don't think so many developers, except for maybe a few, have tie-ups with either institutional players or they have their own businesses to talk about. But yeah, it's an emerging sector, and from a small base can grow to a big base. Yeah,
9 to 10% sort of yield and a bit of an annuity sort of.
Yeah, it will be more like an annuity because they will be connected to the real estate part of it. I don't think so. The allied infrastructure will be in their scope.
Okay, all right, got it. Thank you very much.
Thank you.
Well, that's real estate in focus. Just a quick recap of things, right? I mean, stocks that we've put out as part of news flow and brokerage calls, etc. Tata Motors should come up. I don't think we have time for this. We will come back. Tata Motors, Polycab, Glenmark, Lupin Ipca, Dalmia Bharat, Birla Corp, etc. So a bunch of this will react as markets open. What do we have? 25,025 is where the Nifty is at. It's unchanged, nothing at all. The Nifty Bank got slightly lower, 0.14%, 55,033. Nifty Bank, the Midcap index is in the green, but barely so. 1:1 out of the gates as far as advanced decline is concerned. Small cap index is absolutely unchanged as well. So 18,060 is where the Nifty small cap index is now trading at. So this is a very, very quiet Thursday morning start. Nifty heat map comes up on your screen. It's absolutely evenly balanced. Some 2022 names are higher and the rest are lower to begin this morning. 40 points lower on the Nifty at about 25,000 levels. Surabhi.
I just want to point out before I get to the Nifty stocks, one stock, PB Fintech, it's starting lower once again. Remember, yesterday was down 4% after Yash, put out the story around the possibility or some discussions at least beginning about capping insurance commissions. PB fell 4% yesterday, now 1%, 1.2% lower this morning. So let's keep that on our radar as well. On the large cap screen, 47 to 50, actually 50 points down on the Nifty. Tata Motors, and Suresh explained that very well to us. It's a huge hit. Over 2 billion pounds is what we're talking about here because of that cyber issue, 2% lower on the stock. The other weak names include actually Maruti Suzuki, Hero Moto, Bajaj Auto. So all of auto is cooling off. Profit taking is the order of the morning at least. Titan, Eternal, these are some of the other names from the consumer side that are weak. Reliance is not helping the bulls case this morning. It's down about 0.4% at this juncture. And there's some selling in insurance names like Bajaj Finance, HDFC Life, SBI Life. So some of these non-banks are also down. On the upside, however, you've got Hindalco up 1%. Bharti Airtel up 0.7%. And the FMCG plays, Nestle and Lever are having a decent session today. Even Tata Consumer, actually. So small gains over there. But all put together, little change. 25 lower on the Nifty now. Nigel.
Well, that's right. You know, the Polycab, there was a large trade out there. That got executed in the pre-open. And in fact, the large trade actually was almost double its size. But yet the stock has recovered from the day's low. It's more or less flattish as we speak. So just keep an eye out on that name. Another one that's doing very, very well is Finiotex Chemicals. I'm looking at the BSE exchange. They are saying that, in fact, they will be considering an interim dividend, share split, bonus on the 27th of September. That's when they have their board meeting. So that stock, in fact, is running away. Finiotex Chemicals, that's a stock, yes, now up close to around 15%. So massive up move is what we're seeing on that name. Zuari Industries, well, that one this week itself is up close to around 35%. It's not a name we talk about very, very often. But for today's trading session, it's one of the top traded stocks. So that's why it's up close to around 6%. Adani Power saw some profit taking yesterday. Today it's resumed its winning ways. Hindustan Copper, that's the only pure play on copper price moves. And as Manisha told us, there's a bit of a supply issue. Demand as well has been steadily increasing. So that one continues to build on to gains, up close to around 2% or thereabouts. Newgen, some positive news flow that did come in on that stock. So that's why that one is up and about in today's trading session. What else has come for some profit taking? Edelweiss Financial, well, that's one stock that's falling on rather decent volume. So just pointing that one out. All in all, I think it's a fairly decent start to trade. You have Quality Power. That's another stock actually that's seeing a good amount of up move. Positive news flow came in overnight. That stock is well up close to around 5% as we speak. Prashant.
Okay, no, absolutely. And, 20 points lower is what the Nifty is now trading with. 20-point cut, 10 points. Nothing very much. It's flattish, so to speak. Adani Power is the top volume-led gainer right now on the NSE. So Adani Power had this rocket-like move And it basically went from 120 to 170, 180 in 3 days. From 180, highs of 183 basically, yesterday it sold off in 2 sessions to 140. And now at about 150 or so. So huge volumes on Adani Power. Actually, the entire Adani Group stocks had a very large move after that SEBI clean shit. And then, of course, they all corrected over the last 2 days. So we'll keep an eye on the others as well. Hind Copper, Nigel mentioned, Garden Reach is up 2%. Zuari is up 8%. Zuari's got very heavy volumes. Cochin Shipyard is coming up with about a 1.25% cut. There is what else? Hindalco up 2%. Copper prices are higher. KPI Green is another one. Market breadth is closing. The gap was, but this is, of course, very, very early in the session. But 1,200 lower and about 1,000 stocks are higher at this stage. Tata Investment Corp has been another one of those rockets. So from 7,300 in 2 days flat to about 9,000 bucks. And today it's just pulling back a little bit, not very much, 3.5 odd percent. It's all relative to, of course, the size of the moves, which have been very large. Okay, Pankaj Murarka is with us, CEO and CIO at Renaissance Investment Managers. Pankaj, great to have you with us here. Thank you very much for your time. Individual names, Pankaj, I mean, you got to be in them. Otherwise, you just see them shooting up like rockets all around you. And so many of these, right? You just sometimes, and as someone was lamenting, everything that I don't have keeps going up. I think. How are you looking at things, Pankaj? We had a nice up move and a bit of a pullback now. What's the view?
Morning, Prashant. Prashant, I think as far as markets are concerned, meaning our views, while primarily we still remain, the underlying trends still remain bullish. So we are very much in a bull market. But I think we think probably over the next couple of years, the gains from markets will be far more moderate than what we've seen in the last 3-4 years. The fact is that we are in the 6th year of bull market in the most expensive equity market in the world. And more importantly, we are now coming out of 6 quarters of earnings slowdown. The good thing is that probably earnings have troughed and probably starting this quarter, could be a bit slow again because of that slowdown in sales and retail, which happened in the month of September, for the first 3 weeks of September. But I think markets will be looking forward to the next quarter, the 3rd quarter earnings, where the spillover effect will be visible. So probably the good thing is we'll start seeing earnings acceleration now after 6 quarters of slowdown. Yet I think, while the index, what we've really seen, if you see over the last 4 quarters, is while index have held steady, but the broader market is where there's been a lot of action. And as you were rightly saying, there are a lot of stock-specific action. But I think that's also partly a reflection of the pockets of market where we see a lot of fraud. So I think investors should be very careful in terms of what they're buying into and probably take a slightly more medium-term view.
Okay. But you are saying that earnings should pick up after several, dull quarters. And that's good to hear. Pankaj, good morning. Surabhi here. So the question really is that, what next? Because while the index has remained flat, individual stocks have done really well. Even the large cap ones, for instance, auto. Now, on the whole consumer piece, do you think this is going to be a durable move that will last? And if yes, in what part of it? Should one be in the auto space? Do you think that QSRs or other formats of discretionary consumption, or maybe even, regular staples, it'll be their time in the coming few months?
Morning, Surabhi. I've been saying this for a while, and now there is even more credible data points to suggest that. I think we're in for a very healthy consumption recovery in the economy over the next 4 to 6 quarters. We're coming out of a very sharp slowdown in consumption over the last 8 quarters. I think what the government has done in terms of the combination of monetary and fiscal stimulus that's been injected into the economy, on an aggregate basis, that adds up to about something like about $50 billion across tax cuts, 100 basis points of rate cuts from RBI, and now there's GST cuts. That's close to like 1% of GDP. So I think that's a very meaningful stimulus that's been injected into the economy. Consumption recovery, we've seen from past cycles, when they happen after such a prolonged slowdown, it takes a while. So while there'll be an initial burst or frenzy of the pent-up demand, because some of the discounts and lower prices will tempt marginal buyers, But more importantly, I think we'll see a more sustainable recovery in consumption over the next 4 to 6 quarters. And I certainly think so. One should be invested into consumers. We maintain a overweight stance on consumer stocks after almost a gap of almost 6 years, where I'm finding valuations are more reasonable in consumer stocks across both staples and discretionary. And we are looking for acceleration in earnings growth. And I think so is the case with autos as well, because you look at some of the data points in autos, the two-wheeler sales today are lower than what they were in 2019. Or passenger vehicle sales, especially small car sales today, are the same as they were in 2019. So it's been about 5 or 6 years of anemic volume growth that the sector is coming out of, which effectively means there is a lot of pent-up demand that exists in the system. And now with this stimulus, I think that will act as a very strong driver for growth in this sector. So I think consumption across both staples, discretionary and auto remains one of our preferred bets.
Okay. Hi, Pankaj. Good to see you. When I wanted to ask you about the public sector banks. I was reading a Motilal Oswal note. They have pointed out the market cap has jumped nearly 5x in the last 5 years. Yet they're trading at reasonable valuations. The ROEs remain at around 18% odd, ROAs at around 1%. And now they're pointing out that public sector banks, they could outpace private sector growth, loan growth, for the first time in nearly 15 years. What's your view on the PSU banking names? The reason I ask you this is, just in the recent past, we have seen actually some bit of outperformance coming back into play after going through a period of underperformance. So what's your take?
Well, Nigel, PSU banks have come a long way in the last 7 years from where we had seen in 2018. These banks had huge losses because of bad loans and all of that. And government went through one round of consolidation in PSU banks. And from there, obviously, profitability has improved. But I would still say, if you look at on an operating basis, barring SBI, the operating metrics for most of the PSU banks are inferior or somewhat lower than private sector banks. So as far as quality in terms of ROA or capital efficiencies are concerned, private sector banks are much better than state-owned banks. Obviously, valuations, if you look across the board, in case of state-owned banks, are much cheaper at points, depending on the bank you're looking at, somewhere between 0.6 to 0.9 times price to book. Most of these banks are trading on a 1 year forward basis below book value. So I think there's been some noise around government looking at one more round of consolidation among state-owned banks and government allowing higher voting rights for foreign shareholders and a higher increase in the voting cap of 20%. I think eventually, if the economy is to grow, and given the fact that state-owned banks are still almost like about 60% of loan market share, in the industry, these banks will need capital. Government in the past 6-7 years has given them enough capital, but government will have to, allow these banks to raise more capital in that sense and allow the restrictions, lift the cap on foreign holdings. So in valuations are reasonable, but I still think there's some more work that these banks need to do to improve their operating metrics. So I think there could be a valuation catch-up trade. And if at all the government goes ahead with, whenever we finally see the execution of IDBI divestment, because that's in the works for almost like 6 or 7 years, and probably there's another round of consolidation, I think that can help to improve valuations in state-owned banks.
Yeah, you've been a fan of PSU banks. Remember SBI was a top idea, right, Pankaj?
Yeah, so our preference still, Prashant, is for private sector banks. Within PSU banks, the one we own is State Bank of India, because we essentially like the franchise, because it's a very strong brand, very strong franchise. And in terms of most of operating metrics and capital efficiencies, be it ROA, ROE, or asset quality, State Bank actually is almost at par with most of the leading private sector banks. So despite being a state-owned or government ownership, it's one of the best-in-class banks that exist in India.
Give us one or two ideas, Pankaj. Something looking interesting, away from the large cap, well-discussed names, where you think there is value.
Okay.
With full disclosure, please consult your advisor before investing. But yeah, go on.
Yeah, absolutely. All the disclosures apply. But I think we should not be hunting for value in this market. As I said, in the 6th year of a ferocious bull market, in the most expensive equity market in the world, obviously there's no value on the table. stocks and markets are priced to perfection. But the good thing in India is, given India's secular and sustainable growth story, you can find a lot of growth stocks where you make money out of future growth, and buying them, I will not say at value, but at a reasonable price. So let me share a couple of ideas which I find interesting at this point of time. I'll give you a context. One, I am very positive on discretionary consumption coming back, as I said, because we're coming out of 8 quarters of very sharp slowdown in consumption. So just think about it. We have about 50 million people who invest in stock markets or trade in stock markets. And the organized pizza industry just has about 10 million customers. So Jubilant Foods is a company that we own in the space. They dominate 70% of the organized pizza market. I think that space can really expand significantly. I would like to believe that everyone who's trading or investing to stock markets can at least afford to have one pizza, a quarter or something like that. And if that be the case, that the TAM for that space can expand very significantly. So that's one we like on the discretionary consumption side. Apart from that, we like this whole the whole internet space I've been talking about for a while, because I think the growth visibility there, sustainability of growth, high growth for a long term looks very much possible in those sectors. So we like the food delivery sector. We own companies like Swiggy and Paytm there, and I think these companies can sustain growth which is north of 20% for the next 5-7 years. So even while the starting point of buying is not so attractive, but I think the next growth over the next 4 or 5 years will compensate for all of that, and one can still make healthy returns from these names. As I said, all disclosure applies because we have ownership in all of those names I spoke about.
It's interesting you mentioned the pizza company, and you mentioned Swiggy as well. Actually, I don't know if you think about it, before Swiggy and food delivery became such a phenomenon, right? Maybe that was the inflection point for, in a negative way, for Jubilant, right? Because now you could get Chinese, you could get Indian, you could get whatever you want delivered to your doorstep. Before that, it was Jubilant with their, delivery, and if you don't get the pizza in time, you get the pizza free, and used to do very well.
Yeah, that's true. But over the last 4 quarters, if you see Jubilant, they've been making a lot of pivots in their business so as to enhance the TAM. They've introduced, I don't know if you are a consumer, but if you're not, you should try their what they call the square pizza that they've launched, which is a much bigger pizza, and they've added more value to the meals and had multiple other offerings, kind of a thing. So which is really leading to very strong growth that we've seen in the last 3 quarters. And this is happening in an environment where consumption spending has been slow. So when consumption picks up, I think they should be a beneficiary of all the investments that they've made in the business over the last 4 quarters.
And valuations are okay here?
Valuations are rich across the board, Prashant. If you want to buy a high growth, high quality franchise, there is nothing that is available cheap in this market. So one should reconcile to the fact that we'll end up buying some of these stocks probably expensive, but the future growth will compensate for that.
Yeah, okay. Buy, pay up for growth. That's been the mantra here. Thanks very much, Pankaj. Really appreciate your time, and good chatting with you. And of course, all disclosures, once again, as you said, Swiggy, I think there was Jubilant, and there was Paytm in terms of single stocks that we spoke about. Markets are up about 15 points, and the market breadth has swung to the other side. About 1,400 stocks are higher, and about 1,150 stocks are lower at this stage. So lots of stocks into the mix, and I'll sort of cover them in just a bit from now. But I think we have our first management post-market open with us. Surabhi.
Absolutely, and it's management from a very hot sector that's in the news, and I'm talking about IT services. Well, this morning we have the management of Happiest Minds joining in. Venkatraman Narayanan, Managing Director at Happiest Minds Technologies, is with us. Venkat, thank you so much for taking out the time. As you can imagine, we have many questions. I just want to lay out sort of a broad framework for our viewers to outline what we really want to discuss. Obviously, we'll talk about this whole US H-1B visa issue, the impact, not much on this company. They don't send too many workers on these visas to the US as of now, but we'll find out what it really means. And then, of course, we'll discuss demand trends in the second quarter and the rest of the year. And, of course, the outlook on Gen AI. Happiest Minds has a dedicated unit. We'll find out what's happening. So, Venkat, thanks so much for joining in once again. Let's start with the first one, H-1B. Now, our colleague Rima was explaining to us that you folks, a large part of your model is built offshore. You don't send too many people to the US. I think only 3-4 people, I think, on these H-1B visas. So while this is not big for you right now, I'm sure you would have been having a lot of discussions around this because you have your own aspirations of touching $1 billion in revenue over the next couple of years. So is this going to be a big dampener eventually for you and overall for the sector?
So first, to clarify, I think you got the numbers right. We don't send too many people on H1. We've got about 4 people last year and 3 people up until today for this current financial year. So as that shows, we are not very dependent on H1s going from here to US. For our requirements, we do local hiring. And, we had acquired a couple of companies. They have also brought in the talent that we have been looking to, add on site as required. As far as you said about our aspirations, there is going to be both an organic growth, which means we'll continue to do a lot more the same model or a similar model that we are doing of substantial offshore business. But we'll also be growing in geographies of other than US, because H-1B is kind of a small dampener for the industry as far as US is concerned. But, you have to spread yourself across the geographies. The last couple of acquisitions that we did has taken us to countries like Africa, Europe, and even Asia Pacific. So that's one thing which will help us broad base our revenues. Sure. On top of that, we'll also grow through acquisitions, on-site companies, companies based out of US. Those will all be the ways we'll tackle the growth objectives while also, being able to surmount this temporary H-1B visa hike for the industry.
Got it. So, Venkatraman, you have your plan in place, but if I could ask a broader question, I'm sure these conversations would have already happened over the last 4-5 days since this news broke. I mean, just to understand at this juncture, the cost of getting that work done on site with a local hire versus sending someone on an H-1B visa with this higher 100,000 fee, what is the offset? And do you think companies will still take the hit and still keep sending Indian personnel over there?
See, you'll have to look at the expertise and the economics put together. Until now, expertise was, paramount. Economics was always there because, you were moving people from India to US. But as you go forward, you'll have to look at both of them. And, typically in a large project with, let's say, 100 people offshore, you may need 1 or 2 people on site. So there could be an element of investment that, both sides, the customer and we'll have to make sure that on-site presence, if required, we'll be able to, send that those kind of people who can then be the connect between us and the customers, offshore connect or the on-site connect that we call, could be that person. So obviously, economics and expertise will go hand in hand. And in those cases where we have to make those investments, we'll make those investments, because I think it's an investment in the customer, in a technology offering, in our offerings rather, and in a particular technology. We look at it holistically. So it's not like I don't want to use the word body shopping, but we don't get into that kind of a business on an H-1B. It's always been expertise based for us.
Okay, so good to speak with you, and as always, Prashant here, Mr. Narayan. So, one is H-1B, the other point is Gen AI, and I think you would have expected that question. So, use cases are rising. I spoke with Jamie Dimon, a CEO of JP Morgan. He said, well, within JP Morgan, there are now some 500 use cases. Last night, Mr. Vinod Khosla was interviewed by an Indian founder who said that because of Gen AI, and maybe a little dramatic on his part, he said that most companies can be run with 50% of people. They just don't know how to do it. For a company like you, and you've said that you were also advancing use cases and how this will really fit in. What are the billable use cases right now? How many are there? At what rate is this growing? Just give us a sense.
Yeah, like we said, we started with almost close to 200 plus use cases, and that's growing by the day. And, when we are in touch with customers, because when we started the unit, it had to be kind of a show and tell. You had to have use cases to go talk, make the customers see the importance of AI and how it could make things easy for them. But moving from there right now with the unit, or the GBS unit that we talked about has broken even last quarter, which was something that I did touch upon. And that's been only because there has been tangible evidence of what we are doing for our customers through use of Gen AI services. But like you said, there is a lot of research happening on how can you use this to automate. So there is the low-hanging fruit, which is use it for customer support, call center activity, automation of certain basic research activities, repeatable functions. What earlier used to be done through automation can be done through Gen AI. So there is a lot of these things which are the low-hanging fruit, which is getting addressed very quickly. On the supply side, when I say all of this is on the demand side, but on the supply side, we are also seeing, coding using Gen AI. So something that we are tracking very closely is how many of our people are now Gen AI trained, how many of them are using the various tools that are available in the market today to make their coding that much more efficient. We are looking at that coding efficiency improving substantially, and to a certain extent, what earlier used to require 10 people to do in terms of coding, we would now require, let's say, 8 or 9 or 7 kind of people to do the same kind of work. So there is a lot of generative AI being used at the coding end. Today, you must have read there is a company which is in the area of vibe coding, which has got quite a bit of decent funding. That's about how you're able to automate our own internal tasks, which we use to deliver services to a market. So to our customers. So there is a demand side and the supply side. On the supply side, we are looking inwards, working very closely with customers. There is a task force which is going into each of the projects and seeing what part of the work that we do for them.
But Mr. Narayanan, this would be all services, you're not building products for this.
No.
I mean, for example, I'll give you there's a company called Cursor. I heard about it recently, but I'm sure you're aware of it. I think about 20 months old, $10 billion valuation. And it just enables people to code using ChatGPT as the underlying platform. It basically sits between ChatGPT and the coder. Apparently, I was told 80% of software engineers who write code in India use it. But I'm saying, but you will be looking at services, not building products like that.
We will be using companies like Cursor.ai or Vibe kind of companies which are using those platforms to use and automate our coding experience for our customers, Prashant. That's the way we'll go forward. On top of that, yes, these companies will also become part of our high-tech customer landscape, because they will also want all of it cannot be automated. It's not that you just tell the machine, build me a product called Cursor AI. They are also going to be our customers tomorrow. And they'll also be we'll use our own technologies to help them build this platform. Kind of a thing. So yeah, there is demand in the form of existing enterprises adopting or adapting to AI. There are new emerging companies completely in the field of AI. All of whom we'll be supporting.
Okay, got that. That's of course medium-term perspective and helpful. But Venkatraman, just to come back to the near term, I mean, earlier in this year, you have been guiding for double-digit growth, right? Yeah, double-digit constant currency growth. What are US clients saying right now, particularly in that geography, given the up and down and the uncertainties? I mean, how are spends shaping up, decision-making? How is all that shaping up? And are you on track with that guidance of double-digit constant currency revenue growth and margins, I think in the band of 20 to 22%?
We are holding on to both those numbers as now. I don't want to get into specifics because we are just going to get into the silent period for Q2. As far as margins are concerned, again, I'd cautioned that there will be slight adjustments for the wage hike that we'll be going through. We have gone through in the current quarter. But other than that, we are holding to those numbers. As far as US as a geography, I would have loved for my colleague and CEO Joseph to give you a first-hand view, because he's there traveling extensively, speaking to customers. things are slowly opening up, and the entire industry is looking for a better second half. That's how the story right now is, because there is going to be a little bit more of fixity on the way things are moving in the US economy. Obviously, this H1B thing is a little bit of a, it just does set some sort of a disturbance, but, we should be able to quickly overcome that and get on to talking about business. But that said, we are looking at a very healthy pipeline. It's been building up. We had put in place our new business head and the whole organizational restructure that we did. We are looking at those starting to pay dividends, and we are seeing a good pipeline build for, second half and onwards.
Yeah, but what you said is really important to wrap this up. This whole H1B issue, is it going to lead to delays in deal closures? Because now when a US client is looking to sign on an Indian IT services company, I mean, onshore, offsite, that whole mix, visa costs, like you said, I mean, whether the client will chip in, etc. All those negotiations come in the picture as well. So does it mean, as opposed to the expectations of a strong second half, does it actually mean potential delays in closures?
I don't think so, because we are talking about all of these new changes happening from the next filing season, which starts next March. So right now, discussions will be based on people that we have with us today. Most of the companies do certain amount of advance filing, and they have a few set of people already available who can be, deployed immediately or put into the project immediately. Local hiring is something that we have been focusing on. That's something that we'll dip into quickly. So I think in terms of ramping up, the challenges will be almost similar, whether it is on-site or offshore. That's what it'll be.
Okay. All right. Great to have you on, and it's good perspective for us, for your shareholders, and of course the viewers as well. Thank you very much for taking out the time today. Good luck for the rest of the year. Well, that's a view from Happiest Minds. We'll take a quick break. On the other side, we continue with our management conversations. We'll be putting the spotlight on Adani Wilmar and talk about the company's new MOU to set up the National Mustard Model Farm Initiative.
Welcome back. Well, the markets are down mildly, down close to around 20 points or thereabouts. Nothing really to talk about on that front. But a couple of stocks actually are moving up. You have Inox Green. That's bucked the trend, moved to the high point of the day. And you have Max India. That's another stock that's up close to around 8.5%. Maharashtra Seamless winning an order finally, 250 crores. The street has been a little bit worried. Order book has been dry, but 250 crore order book, order win, street will like that as well. Let's move on then. We have Anshu Malik, the Managing Director and CEO at Adani Wilmar, who joins us on the show. Hi, Mr. Malik. Thanks a lot for joining in. Well, we've got a few queries for you. But before that, let's just highlight the big talking points that we're going to be looking at from this conversation. Synergies from GST rate rationalization. What's the outlook on edible oil pricing as well as on margin? And the MOU to lead National Mustard Mission. What's the benefit on that front? Well, sir, thanks for joining in. Let's talk about GST 2.0. Do you expect volumes to improve in the second half of the year because of GST rationalization, given the much talked about boost for consumption? And in that sort of a backdrop, do you think you'll increase your volume growth guidance that you had given early of around 7 to around 9%? Please go ahead, sir.
I think the reduction in GST has been the most best decision, I think, which has happened from the consumer's point of view, and particularly food, packed food, cosmetics, personal care, everything has now come under the 5%, which is very, very reasonable. This will help not only improve consumption, but it will also help national brands or bigger brands to fight the local competition. That makes it much better for all of us. That is one. Two, overall, the consumption story is very robust now, with very good monsoon and very good kharif production that we estimate, one, and two, lower inflation. All this is going to put a lot of money in the hand of the consumers, and consumption story is very robust. I look forward to a very good second half. From one, marriage season is coming up from 15th November, Diwali and Dussehra October, and all this put together till March, at least I see very good consumption story.
Okay, all right. But will you go ahead, sir, and increase your volume growth guidance of 7 to 9%?
I think in edible oil, we have always said that it will be single digit, but it will be a strong single digit. In foods, we have been growing in double digit, and which we will continue to grow. We are sure about it.
And food and FMCG, I think it was around 10% of your total mix, and you're looking to take it up to high double digits, high teens. Could you confirm that? And by when does that happen?
Yes, we are looking at growing this. We have been growing food business at around 20% last 3 years. This first 3-4 months have been a little slow, but I think again it will start picking up from now onwards. Going forward, we see achieving around 9,000-10,000 crore turnover in food business by exit March 27. That is what we have been planning, and that is how we are working on.
Okay. Sir, just coming to this MOU that you have signed for this, the mustard plan. Can you just tell us how this is going to add to your revenue? What is the investment that you'll be making, and over what period of time?
Okay, see, in this collaboration, what we are doing is that we have identifying 3,000 model mustard farm in 9 districts of Rajasthan, Madhya Pradesh and Haryana. These model farms will demonstrate regenerative agriculture practices. We will have climate resilient, climate control monitoring system, satellite-based monitoring system, and soil health. On all of these, we will be working with the farmers. This initiative will bring around 20,000 farmers together, where we will have field demonstrations, we will have field classrooms, and then we will give them digital advisories on how to do best practices for sustainable mustard oil, mustard seed growing. We expect that this practice will help increase 30% almost yield for the small farmers, and that will help in the overall contributing to the national mission on oil and oil seeds that the government of India is doing. This program, we are investing almost 4 crore rupees in 2 years to work closely with the farmers and take this to a bigger scale and showcase this to other farmers that how to grow higher mustard. And I think mustard seed with 40% oil content will contributes on a large basis to the edible oil.
No, sir, just trying to get, so that's the model, we understand that. But we're just trying to also assess what is the revenue implication for you. And if you could also, maybe it's in the medium term, maybe it's not year one, maybe it's not in FY26. What is your FY26, revenue estimates or, your growth guidance? And when will this mustard start contributing, and how much will it contribute from a revenue perspective?
See, it's not that when we participate, we look at increasing our own production. We are looking at overall economy, driving economy through higher production and higher yields. And our mission is that can we grow higher mustard seed as the other nations are growing? And can we contribute in any way? By the way, we are the largest mustard seed processors and crushers in the country. And we have the largest mustard oil brand in the country. So our link with the farmers is that when the farmers grows more, we are able to also absorb them and buy them out and help them get better yield and better money. So the overall objective is that the country should start growing more mustard seed. And let me tell you, in the last 6 years, from 85 lakh tons, it has now increased to 115 lakh tons. We see a great opportunity for country to grow more mustard seed.
Okay, fair point, sir. I mean, beyond mustard, let me just broaden this out. So like you discussed in the opening remarks, there are the GST cuts that have come in. Also, just tell us how the whole year is looking now for your total business overall. What is the volume increase that you are expecting now? And, what is the outlook on margins given how input prices are moving?
See, on volumes, as I said, the year should end at a single digit in edible oil, double digit in higher double digits in food. Overall turnover will cross 65,000 crores for sure. But when we look at margins, the margins are stable. Edible oil prices are stable, which helps us in ensuring the stable margins. And looking forward, if you look from here, the consumption story is very robust. And if that happens, the margins will improve. Overall, the mood of the consumers are much better. And I look forward to higher consumption coming ahead.
Okay, all right. We'll leave it on that note, sir. Thank you very much for joining in. Good to get that perspective from you, and good luck for the coming quarters as well. Thanks for joining in. Well, that's a perspective from AWL coming through. Let's go back to the market and see what the screen is telling us. Very flat and actually recovery. Recovery from what was a near 50-60 point cut when we started trade. So at least we're at the flat line, but it's still choppy, you'd have to say. Nagaraj Sethi is with us for some technical trading ideas. Nagaraj, thanks very much for joining in. Index, any trades today, Nifty or Bank Nifty?
Hi, good morning. Yes, market has been in a downtrend over the last 4-5 sessions, and looking like at the place at the support, the selling momentum seems to be decreasing. Market is nearing a strong support around 24,900 to 25,000 levels, and I'm expecting Nifty to bounce back from the lower levels in the next day or two, and we could see some good amount of bounce back from the lower levels. I think it's an opportunity to accumulate the longer levels for the both Nifty as well as the Bank Nifty.
Okay, all right. Hi, Nagaraj, good to see you in. What about individual stocks? You'll be having a couple of ideas for us.
Yes, I have two stocks. First one is Cochin Shipyard. Chartically, Cochin Shipyard, after forming a bottom reversal around 1600 level, has bounced back gradually, and after a small decline recently moved up very well. The overall chart pattern is looking positive, and the volume breakout as well as the positive indication of RSI is indicating a more positive bias for the stock price in the near term. Currently trading around 1940 levels, one can look to buy at this point of time. The upside target would be around 2050 levels, and one can face a stop loss of 1890. Second one is Oil India. Oil India was in a consolidation phase recently, and today it witnessed a sustainable upside breakout of the consolidation and moved higher. Currently trading around 421.85, one can look to buy at this point of time. 445 is going to be the initial target, and one will face a stop loss at 400.
Okay, all right, Nagaraj, got that. Thank you very much for the updates and for all the trading advice. Back to the screen for a quick check. BEL is an interesting mover. It's finding takers this morning. It's a Nifty winner right now, and it's suddenly sort of shot up from being absolutely flat. Yeah, so there you go. Morning highs on BEL. Hindalco is continuing its good form, and Apollo Hospitals is finding some traction as well. So beyond the usual, we've gotten so used to seeing only FMCG or auto stocks up. Today we have some new names on the screen.
Well, that's right. Even Oil India, another stock, I think, from the broader markets that's seen a bit of a correction. That's moved to the high point of the day. So I think we should get that stock. Even ONGC, I think from the day's low has seen a bit of an uptake. So some of these stocks, that have some kind of a crude oil play in it, they have moved a little bit high. Even Vedanta has some bit of crude oil in there. So all of these names doing quite well, particularly in the last few minutes. Finiotex Chemicals was the one that we spoke about earlier. That's up close to 15%, waiting for the outcome of the board meeting where they could consider a lot of issues like bonus and the likes. So that's one of the top movers in terms of volume as well. 15% higher, massive volumes on that name. Vinny joins us, sir, to tell about a company that won an order overnight and is doing well today. Newgen Software. Vinny.
Hi, good morning. So yes, Newgen Software is a small cap, mid cap IT company that we're keeping an eye out on. They're growing their international portfolio, and that is why we're seeing the stocks here run up. Now, the company is UK-based, wholly owned subsidiary, has actually executed a master service agreement with Tata Consultancy Services in Belgium. This deal value is around 4.2 million euros, will provide modernized cloud-based enterprises, records in terms of management of platform as well as end-to-end customer use services in Belgium. Other than that, they've also got a domestic order, or a small order of 21 crores approximately from Keshma General Insurance. This is for software license implementation as well as annual support services as well. This is for a period of around 5 years. Do not forget that the stock has actually been underperforming its other peers, and in the last 3 months, it's down almost 19-20%. While Nifty IT, when you look at it, in the last 3 months, it was just down 10%. So yes, the move also comes in because it was underperforming, but a good order win on the global front is keeping the stock abuzz as well.
Okay, all right, got it, Vinny. Thank you very much for that. Quickly hopping across to Vamakshi to take a look at Quality Power. This stock has been surging right from the time the market opened, almost 5-6% higher. Tell us about the news, Vamakshi.
Well, Surbhi, the stock is in focus because Hero Electrical, which is a material subsidiary of the company, has signed a technology co-development agreement with Hyosung T&D India. Now, this is for gas insulated switchgear, which is GIS instrument transformers. Now, this development is quite positive for the company, and that is because, number one, it enables the Meru to diversify into the GIS value chain. In addition to that, it also positions Meru as one of the first companies in India to co-develop GIS instrument transformer tech for the global market. So the technology essentially will be provided by Hyosung, while the manufacturing will be taken care of by Quality Power. Now, other than that, what they're also highlighting is that Meru will be able to leverage Hyosung's expertise in eco-friendly gases and compact equipment design, and they will be able to address new demand segments such as metro, rail, offshore wind, data centers, as well as high voltage urban transmission projects. Now, what they're highlighting is that the development and commercialization of the initial set of transformers will be expected in the next 12 months. Overall, a positive development for Quality Power, and resultantly, the stock is trading higher in the trading session today.
Okay, all right. Thanks a lot for that, Vamakshi. Time to slip into a short break, but on the other side, Manisha Gupta is standing by. She's going to tell us what's going on in the commodity space. You don't want to miss this.
Welcome back. Well, it's time to talk commodities, and we have Manisha in the house to tell us what the latest is. Manisha, yesterday you said the sparkle is moving to platinum. Today morning, what's sparkling?
Copper.
Oh gosh.
Copper is the new gold is a headline that I've seen in some of those publications today. But absolutely, look at the kind of gains that we've seen in the overnight market. So even as there's a bit of a breather that you're seeing in precious metal prices, it is the base metal prices that you should be looking at right now. So 4% of a gain. We're looking at spot prices trading by 2-month highs, and the 3-month LME, which is traded on a longer term basis, is trading at a 15-month highs right now. So very strong gains coming in for this. So the major reason, of course, has been the Freeport McMoran declaring force majeure from its Grasberg mine in Indonesia. There have been some issues that Indonesian mine have been looking at for some time, but this latest incident that happened on 8th of September seems to be ballooning right now, and there are some hazard concerns also coming in from those mines, and is the reason you're looking at prices gaining up. Now, Grasberg mine is important because it is the second largest source of copper in the world. Also, Grasberg accounts for nearly 2 to 3%, rather 3.2% of global mined copper, and much of that clearly comes in from the Freeport mine there. Now, when you look at the overall output from Freeport as a company, 30% of its copper comes in from Indonesia, and 70% of its gold also comes in from here. Now, Freeport already has cut guidance in sense of production for this year and the next as well. So when it comes to copper, they have cut their sales guidance by 4% and gold by nearly 6% on the lower side. Interestingly, there have been various other reports coming in as well. McKinsey, for one, says that they're looking at 880,000 tons of supply being affected in 2025, not just because of Freeport, but various other mines as well. And I'll quickly come to that. But first on, when you look at Freeport, they have temporarily halted operations at Grasberg with 30% mine operating at this point in time, is what we understand. Well, that is about Freeport. But then apart from that, copper also seems to be looking at a lot of support coming in, especially from China, where the demand has been resilient. Second, it's not just about Freeport, because take a look at suspensions that we've seen in Chile at that El Teniat mine there, which is extended longer than what the street was anticipating. And whenever it starts, would be happening in on a phased manner there. And then you also have the Hudbay Minerals. They also have shut operations at a mill in Peru because of the political protests there. And then it also has been about the Constance mine. We also are looking at concerns coming in from there as well. So it's not just one, but various areas in the world where you're looking at copper supply getting affected. This is a price chart in sense of copper for last many years. And as you can see, in last 5 years, it was only in 2022 that we saw a 14% decline. All other years have seen stronger gains, and 2025 standing with a tall 21% gains in sense of copper at this point in time.
I mean, remember 2021, right out of the COVID year, right? There was this huge excitement around copper, that copper is...
Energy transition and AI and EVs. And,
go berserk. But, you know, as many things in life and markets, it doesn't always play out that way. And very, very useful sort of historical context as well to what's happened there. But 20 points lower on the Nifty, 25,036, 25,035 is where the Nifty is at. So it's very, very quiet. It's been that way from the morning. I'll just quickly outline what's moving with the maximum volume. So Adani Power is the number one pole position, 3.5% price gain. Garden Reach is up 2%. Hindustan Copper is up 4%. Cochin Shipyard is up about 2.5%. And something like a New Gen is up about 5% or so at this stage. By the way, a lot of new stocks into the mix, stuff which was not there in the morning. Inox Green is limit up. Stocks done very well lately. It's up 5% on the day, 206 on this one. On the downside, I mean, I think Tata Motors should be there. Yeah, it's the number one volume-led loser, 2.5% cut. Tata Investment Corp, I was talking about this in the morning, went up like a rocket, 5% lower. Aether is down 4.5%. Edelweiss, Astral, and so on and so forth. But volumes much lesser on the downside than they are with stocks which are moving up. So it's a good sign, I guess, in the overall scheme of things. What we'll do is take a quick commercial break here. On the other side is our special segment, is the economy. Lata discusses what to expect from the government's second half borrowing calendar with Arup Rakshit of HDFC Bank and Shailendra Jigan of ICICI Bank. There's an interesting chat coming up just after a quick break.
Welcome to It's the Economy. The government will announce the second half borrowing program possibly this week itself, today or tomorrow. Here is the math. The government said in the budget it will borrow 14.82 trillion rupees through government securities in the full year. In the first half, the borrowing was 8 trillion rupees. So, obviously, the government will borrow 6.82 trillion rupees in the second half if it is sticking to the deficit. Now, this isn't large. The worry is there is very little appetite for long tenor bonds. In the first half, 35% of the borrowing was done via 30, 40 and 50-year bonds. The market is worried about this high percentage of long bonds in the second half because demand for long bonds in India and world over has been dwindling. To discuss more about bonds, interest rates, I have with me Arup Rakshit of HDFC Bank and Shailendra Jingan of ICICI Bank, both heads of treasury in their banks. Arup, Shailendra, good morning and thank you very much indeed for your time. Arup, first up, is there a fear of the borrowing number being more than 6.82 trillion?
Lata, honestly, good morning. We don't expect it to be actually more than 6.8 trillion. I think they will manage it. They have been very candid about it. The GST cut, even in spite of the GST cut, I don't think the borrowing program is going to go up. If they need later on, they will possibly cut a little bit of government expenditure if it has to come to that. But 6.8 trillion seems to be the number they have in mind, and I don't think they are likely to increase the number.
Yes, Dr. Somanathan has been almost Brahminical about this austerity program. But, you know, it's about a 1.5 trillion giveaway. So that's why I'm wondering. And at a time when tax tax earnings, collections have been much lower than anticipated in the first 5 months. Shailendra, a quick word on the total number. Will there be a fiscal slippage and therefore 7 trillion or something? But more importantly, what is the percentage of long bonds that you're penciling in?
So, Lata, we really don't anticipate, like Arup said, any kind of increase in the borrowing number. There might be a marginal slippage on the fiscal deficit side, but the government has enough buffers. One thing which markets are not really looking at is the fact that the small saving collections this year could be significantly larger. If need be, they can announce higher T-bills if there's a bit of a slippage. But the impact of GST on the current year is not that significant. You're right about income tax, collections being slower, but we know that, there are other buffers in the form of higher RBI dividend. So in that sense, I mean, there is absolutely, very little probability, I would say, of any kind of slippage.
Fair.
The absolute number. Now, coming to the, you have kind of brought up the point about the long bonds. And why the spreads have been rising and the yields have been rising on the long bond. And just to give a context, I mean, till about 5 years back, the government of India borrowing at the long end used to be about 20%. It went up to 35%. A lot of it happened because the domestic institutional investors, had very large flows. I mean, we know that, the non-par product of insurance companies started picking up. There was a very strong growth in, pension funds, provident fund AUMs, and they were all long end buyers. I think if you look at the last 2 years, there has been a very distinct shift in the profile of financial savings. I mean, for instance, last year we had 64 billion of inflows into equities, from DIIs. And this year, this number has already, by September, it has reached almost same level. And it is not just mutual funds, we know, who are getting these inflows, even let's say in insurance, most of the flows seem to be going to ULIPs. Somewhere the government is also incentivizing, for pension funds. I mean, the minimum allocation for equity used to be 15, it has gone up to 25. So their allocations are increasing. So, there's a shift. And that needs to be recognized. And because of that, I mean, there's a need to shift, the supply from the longer duration bonds to shorter duration bonds. Just one more point here. I mean, it's not just about, these institutional investors. I mean, if you look at, the bank's investment norms, which came from FY25 onwards, I mean, the HTM has become a real HTM. So, the appetite of banks to buy long end in HTM books is also coming down.
Yes.
So our sense is that, they shift about 4 or 5% from the long end and move it to the shorter end tenors. I mean, that's how, this will look like.
Okay. Arup, very quickly, would you want to add to this disappearance of buyers from the bond market that Shailendra has argued very well? And assuming the government, instead of 35%, brings down the 30-40-year bonds to even, say, 30% or 25%, that's a large fall. Will that really make any difference to the 10-year? Will that make any difference to the actual cost of capital for corporates?
See, actually what has happened is because of the 35% coming in that bucket, the demand from the banking industry has been a lot lower, which Sandeep did refer to.
Yeah.
And even if at a 10-year is around 26% and 15-year is around 14%. So if you really look at it, our expectation is that some amount of shifting will happen in the 5 to 7-year bucket, which can bring in a little bit of a demand. Today, it's the supply which is far outstripping the demand. So our expectation is it will be more in the 5 to 7-year bucket.
Okay.
See, the 3-year bucket is normally used for the switch, which they have been doing over during this year itself.
Yes.
So yes, 5 to 7 year, you will possibly see a little bit of a cooling of the yields, which really shot up to that 665 level on the 10-year benchmark in August. So that can have a little bit of a...
Okay, so that's all. They can issue more in the 5 and 7 year, you're saying, and less in the 30-40.
Yeah, about a 5 to 7% kind of a shift.
Okay. Well, the other big issue is what the Reserve Bank says. Now, what do you want to hear from the Reserve Bank, Shailendra? Cut or no cut, or what else? The bond market has really lost its verve altogether.
I think in terms of the policy, I mean, when we look at the inflation profile, Lata, for instance, our target for the current year average inflation is 2.4%. I mean, this is significantly lower than the 4% which RBI targets. Agreed, next year inflation will go up, but whichever way you slice or dice the inflation data, let's say you exclude veggies and look at inflation. The inflation is definitely running below 4%. I mean, the ex-veggie CPI is at 3.7%. Post GST cuts, I mean, the core inflation number also will come down to 3%. So, from the inflation side, there is scope to cut rates. Now, coming to growth, I mean, we think that growth this year will be close to 7%. I mean, there's a negative effect, which is coming from the tariffs, but the GST cuts are coming. And I think there's a quirk in the deflator. So let's say you're getting a nominal GDP number of 8.5%. I mean, the deflators are likely to remain low, so the real GDP will be 7%. But I think what the policymakers need to look at is the continuous fall which has happened in the nominal GDP number. Just to give a context, in FY23, the nominal GDP growth was 14%. It came down to 12 in FY24. 9.7 in FY25, and this year, we expect it to be 8.5%. Now, this kind of nominal GDP growth has huge implications, not just for debt sustainability, but, for things like profit growth. I mean, we know what's happening in equity markets. I mean, the P's are high, but earnings are not there. I mean, so from all perspective, I think, RBI needs to move towards accommodation. Whether they cut in this policy or it's a dovish hold, I mean, I don't want to take a guess on that. But definitely, I think the bias, the talk will be more dovish. And, the policymakers should be looking at the nominal aggregates and the way they have been coming down.
Okay, 2.4 is the average. I thought it was closer to 2.8, but if...
Post GST cut, our average estimate has moved down to 2.4.
Fair enough, fair enough. I think a poll is in order, and perhaps 2.4 is what I'm going to get. Arup, any thoughts on what you want from the Reserve Bank in addition to what Shailendra said?
No, I think, we are not expecting a rate cut in October for sure. I think it's more likely that they will see what action happens on the growth front post GST cut and then take a call in December on how it moves forward. Also, the tariff, some sanity on the tariff discussions may come through by December. So depending on how they look at the growth coming through or not in this business season, credit growth offtake, that can determine whether there will be a cut in December or not. Whether they go for an accommodative, October to me looks a little difficult to change any stance. I think they will just maintain the same stance, and because there's just too much geopolitical uncertainty which is playing out. So rather than do anything else, they will play it out in that manner. See, currently, if you see, the liquidity has dried up. I mean, it has. Yesterday was actually a deficit.
Okay.
So in that situation, to make announcements differently, they will play it out. And rupee is also not supporting the way it has moved. For them to take any new call at this juncture is my feeling of it.
But you don't expect them to make any pro-liquidity noises. I know yesterday was a deficit, but that's just because, okay, advanced tax and rupee have...
It's a temporary one because the full CRR cut has to yet come back in the system. But if rupee starts trading the 88, 89.50 up to 89.50 kind of levels, which one expects it can go up, then obviously there may be some need to come into the market, which can then suck out the rupee liquidity also.
Okay. Shailendra, very quickly, do you expect them to say or do anything about liquidity? And, well, I have another separate question, but very quickly on liquidity.
So I think liquidity, like you rightly said, I think it's more driven by, currently by GST outflows and advanced tax outflows, which were larger this time because, the personal income tax filing date also got delayed. So the system has come in deficit, but the core liquidity is still at a very, huge surplus of 5 trillion. So I think in the near term, there is absolutely no worry on liquidity, or there's nothing which is required to be done on liquidity. So, and this, like Roop said, the CRR cuts are playing out. So I think they'll wait for that. Maybe at some stage later, they might have to, do OMOs. Our sense is that, they could be OMOs or buy-sell swaps, which might come. But that will be a last quarter story.
I was just waiting for the word OMO because I think that's what the bond market will really be exhilarated. I don't see how they can introduce the word I will buy bonds from the market, in this policy itself, but that will be music to everyone's ears. Very quickly, Arup, what I couldn't concentrate on, state borrowings. The second half state borrowings can be very high because they did only, I think, 6 trillion in the first half. You think that can just spoil the play for corporates who are wanting to borrow from the bond market?
Yes, state borrowings are likely to slip, give a little bit of a slippage out there because it can be really high. And we had seen the gap increasing up to almost 100 basis, though now it has come down to about a 40-50 basis. But yes, that is something which can play out in the second half.
And
we do expect states to borrow a little more.
And that can spoil the game for NBFCs and others who are tapping the bond market?
I don't think that will have too much of an impact for the NBFCs and all, but let's see how it plays out. Because yes, the NBFCs have tapped the bond market quite well in this quarter.
Okay.
Effectively, see, the credit growth offtake has still not really picked up in that sense. It's still in the around that 10 to 10.5%, 11%. So if there will be opportunity for even the NBFCs to hit the market and get some. Whether the price may be a little higher than what they would have expected because of this, the state loans also being there. But otherwise, I think liquidity would be there for them to get the bond.
Yep, but who is to say if there is a cut on October 1st, then perhaps borrowing from banks also will become attractive. Let's wait and see.
Unlikely that we will. I don't expect the cut on October 1st.
You're not expecting on October 1st. Arup?
No, I'm not expecting a cut on October 1st.
Okay. Well, we have the Citizens MPC, CNBC-TV18 Citizens MPC meeting tomorrow. Let's see how the vote goes over there. Thank you very much, Arup and Shailendra, for preparing us for the borrowing program and for the policy ahead. We have to wrap up on Bazaar. On that note, Chatbusters coming up.
Tata Motors is the top Nifty loser as reports suggest the automaker is said to be hit by a $2 billion hit due to lack of cyber insurance. This follows the cyber attack related production shutdowns at its Jaguar Land Rover units.
Sharp surge in Hindustan Copper as copper prices rise 4% overnight to 2-month highs. The stock also rises about 4%.
The US FDA gives its tentative approval to Lupin for a HIV drug, which had an annual US sales of around $16.2 billion. The stock is higher by around 2%.
Nugent Software subsidiary wins a £4.2 million deal in the United Kingdom. It also bags a 21 crore rupee order from Kishma General Insurance. The stock, as you can see, is up around 4.5%.
Shares of Quality Power rise in trade as its subsidiary signs a co-development agreement with Hyosung India to diversify into gas-insulated switchgear value chain. Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Ekta Batram. And the headline index is more or less flattish. But today, after a while, the real action is taking place in the broader markets, Ekta. And that's why you have the Midcap index is doing a relative outperformance. Even the number of stocks advancing, they're outbeating the number of stocks declining. So in that sense, portfolios actually will feel a little better today.
A little better, Nigel. It's up around 0.2% currently for the mid-cap index. Let's see whether we manage to build on those gains as the day goes along. The advanced decline ratio as well, just about around 1:1 at this point in time. But the frontline indices are consolidating. However, how do you approach trade in today's market? We have Sachidanand Uttekar joining in from Trade Bulls for a technical check on the markets. Sachidanand, welcome to the show. Well, it's definitely turning out to be a session where we are consolidating, just about biding time at this point in time. What's your sense in terms of a strategy for the Nifty?
Good morning, Ekta. Good morning, Nigel. Clearly, if you look at the Nifty, it has been, in a lower top, lower bottom sequence in a bearish trend. But if you look at the, daily chart, we have not seen any significant long range bodies on the negative side. Eventually, we have seen narrow range bodies, which is again an indication that there is some demand which is again flowing in. If you look at the levels, we were expecting a move towards the 20-day exponential moving average support, which is placed at around 25,030 levels. We've already seen that particular level today, and I think this is the zone wherein the Nifty may stabilize and probably in a day or so may reverse its journey on the higher side. So I think for the day at least, there is good amount of evidence that 25,000 psychological support will not be breached on a closing basis. We may see some slippages, but I think it's a good level wherein some long positions can be considered when it comes to the index. One can keep a stop loss at 24,940 on closing basis. And again, we may see a rebound towards 25,350 levels in a day or so. So if you look at Nifty Bank as well, the support that we were looking at was around 55,150, 55,000 kind of a zone. And I think this is a good zone wherein some aggressive long positions on the Bank Nifty can be considered. One can keep a stop loss at 54,940 on closing basis. And probably in a week's time, we may see the Nifty Bank again outperforming. So I think when it comes to indices, it's a good zone wherein some long positions on the counter side can be considered.
Got it. All right. Long positioning is what Sachi is looking at. Got it. Sachi, what about individual stocks? What's on your radar?
Good morning, Nigel. Nigel, Tata Motors, I think there is still a good amount of downside which is evident. And we continue to, recommend building fresh short positions here. On a pullback towards 665, 666, I think that will be an ideal zone wherein fresh shorts can be considered. One can keep a stop loss at around 670 on a closing basis. The immediate intraday target is placed at around 654, but we eventually see the stock falling towards its long-term support, which is placed at around 640. So a short call on Tata Motors. And on the long side, we have seen some good build-up in metal counters. Categorically, if you look at Vedanta, it has been showing or displaying a higher top, higher bottom sequence since last few months. If you look at the overall sequence, it looks like a bullish flag formation on the daily scale, which has got activated with a breakout at around 460 level. The pattern target is placed at around 496, but from a trading perspective, one can build some long positions for a target around 481. One can keep a stop loss at around 454 on closing basis.
Okay, just quickly before we let you go, would you have a chart check on Lupin?
Ekta, I think if you look at the data, one thing is very evident that the stock was facing a lot of supply pressure at around 2050, 2060 zone. We have not really seen a very significant bearish reversal formation yet. But if you look at the overall data range, we may see it oscillating within the range of around 1940 on the lower side and 2050 on the higher side. So probably it's a range-bound cycle which is ongoing, and probably after a breakout about 2060, we may see some bouts of strong momentum play on the directional front.
Okay, all right. Thanks a lot for that, Sachi. By the way, the markets have taken a bit of a leg down. Sachi, if we still have you, the support level on the Nifty was what? Just to refresh that.
Nigel, actually, if you look at the overall data set, 25,000 is very significant. We are expecting slippages during the day, but on a closing basis, we don't expect the Nifty, to close below the 24,940 mark. So I think from here on, in case if we see slippages at 25,000, I think that would be a good opportunity to create some long positions. But from a closing perspective, we don't expect the Nifty to close below 24,940.
Got it. 24,940. That's where the 20 DMA comes in at. That's a lot, Sachi, for joining in and giving us your take. Well, it's that time of the show where we turn our attention to our special segment, where we get you a few ideas for profit from Money Control Pro. Anand Chaudhary of moneycontrol.com joins us to talk about a stock that he's tracking rather closely. Anand?
We are discussing about the stock which has corrected by 35% from its high price in last 1 year. The stock is Crompton Greaves Consumer Electricals, a strong brand in the consumer durables and lighting space. It is a leading player in fans with a market share of 28%, also having a healthy market share in pumps, LED lighting and geysers. The company is well positioned to benefit from shift towards premium and energy efficient products. Crompton targets to reach 40% market share in next 3 to 4 years by increasing the share of premium ceiling fans. Though last 2 quarters has been subdued, primarily due to a weak summer season and unseasonal rain. However, recent GST reforms are expected to boost consumer sentiments and increase demand. Pump segment has been growing fastest, especially solar pumps, where revenue doubled in Q1 FY26. While lighting continues to show flattish numbers due to continuous price erosion. Butterfly Gandhimati Appliances has been gaining market share across core categories, driven by better execution and recovery in distribution. Pricing has also improved, particularly in retail, reflecting a clear preference for premium products. Stock trades at 29 times on FY27 earnings, which appears attractive to us.
Okay, well, on that note, we'll take a short break, but we'll get you a lot more on the markets. A lot of stocks buzzing around, though it might be a quiet day on the frontline indices. Stay tuned for more.
Well, Tata Motors is a stock in focus. JLR is likely to be hit by around $2 billion pound as it's not insured against a cyber attack. Sudarshan breaks it down for us. Sud?
So Tata Motors stock is under pressure, currently down more than 3%. This we have got to know from the reports. FT reports that because the company did not have the insurance coverage ahead of cyber attack, there might be an impact of £2 billion. And ahead of this, because of production pause, already company was facing the impact of almost £5 million per day, and that was as per report done by BBC. Now, if you take a look at the timeline of cyber attack, it was first reported August 31, and the company's statement first came on September 2, in which company informed about cyber attack and said that it's looking into the issue and will be restarting the production soon. And going forward, all the further statements came from the company. The latest came on September 23, in which it has extended the production pause till October 1 and said that the production will be restarted in a phased manner. Now, what will be the impact? So, if you take a look at FY25 earnings, company's profit after tax of £1.8 billion. Now, if you calculate total £2 billion because of no insurance coverage and £5 million per day because of the cyber attack issue and production pause, the impact would be more than company's profit for the entire fiscal. Now, apart from these reports, there is another report came from Guardian in which it's saying that UK government is looking into multiple options to resolve the issue, and one of those options is that it might look to help JLR through getting the parts from suppliers, and once JLR resumes the production, it will supply back to the company, and through this, it's trying to help the company. Now, why it's important for Tata Motors? Because if you remember, JLR forms nearly 70% of its total consolidated revenue, and that's the reason today you are seeing a big fall in the stock, and in last two sessions, it's down almost 5 to 6%.
Okay, all right. Thanks very much for that. Definitely a down day for Tata Motors. As you can see, that stock is down around 3.5%. Sudarshan bringing us that news. Thanks very much for that. But we do have two stocks within the pharmaceutical space which are in focus. So that's Lupin as well as Ipca. Glenmark as well. But nonetheless, just talking about Lupin and Ipca Labs. Lupin is in focus because they've received a tentative approval from the US FDA for an HIV drug, which is basically the bioequivalent to Biktarvy by Gilead Sciences. Remember that Gilead is really at the forefront when it comes to HIV drugs in the world. Now, it has an annual sales of around $16.2 billion. So what Lupin has said that is once they get final approval for this particular drug, it will be opening up a market for them when it comes to HIV drug supply. Now, Ipca separately is in focus because they've entered into a technology transfer and joint development agreement with a biosimilar company, Biosimilar Sciences, for a particular antibody or biosimilar which Ipca will be transferring to BSS. Now, the development and the supply will be managed by BSS's campus in Puerto Rico, and Ipca will receive defined milestone fees. They will receive royalty on net sales upon commercialization as well. Interestingly, what is happening is, Nigel, Puerto Rico is, becoming a bit of a pharma hub for the US. And, the press release also does mention that this particular tech transfer will allow capital that would have been spent overseas to now fund American jobs, infrastructure and IP. So that localization theme seems to now be playing out closer to home, with Ipca doing this tech transfer with a particular biosimilar company which will have its operations in Puerto Rico.
Okay, all right. Thanks a lot for that, Ekta. By the way, at the bottom of your screen, I think we had some flashes that were up. My colleague Parikshit is bringing us this news piece. He's saying that the Ministry of Defence is likely to formally sign a contract for 97 Tejas Mark 1A fighter jets with Hindustan Aeronautics later this afternoon. I think some part of the work was done, and now the formal signing will be taking place later this afternoon. Explains why HAL has spiked up actually, even though this was something that the street was looking forward to. The formal signing will conclude later today, so that explains why a bit of an uptick is what we're seeing on that stock. Yeah, HAL is the stock we're talking about. But let's move on. Well, the Cabinet has approved shipping and maritime projects worth around 70,000 crore rupees. This includes financial assistance and a development scheme for shipbuilding worth around 45,000 crores. The government also cleared a maritime development fund worth around 25,000 crores. We spoke to the shipping secretary to understand how will this help India's shipping sector amidst all the global headwinds. Let's listen in to what he had to say.
Shipbuilding Financial Assistance Scheme builds upon an earlier scheme, which was the first version of the scheme. And the idea is to provide assistance to shipyards to bridge the gap between the cost of acquiring a ship abroad versus acquiring it in India. So this difference was about 15 to 20%. So this scheme incentivizes the cost of acquiring a ship, and it gives you a subsidy of 15 to 25% depending on how big the ship is and whether it is a green vessel and so on. Some of the largest ship builders in India are either in the defense sector or in the sole one is the CSL in the shipping ministry, under the shipping ministry. The net result of having only a few shipyards in the public sector and a couple of them, in the private sector, like in Pipavav or L&T or Shaugule, etc. But the thing is, we don't have capacity. Other countries, Korea and Japan and China, even Vietnam, they produce a lot more of tonnage every year. So this scheme was brought in, one, to improve the capacity of the brownfield shipyards, so that they can, so they get about 25% subsidy. The cost of capital cost of setting up new infrastructure in a brownfield shipyard, up to 25% we will give them. What we are trying to see is whether we can ring fence ourselves, which means, one, we have to protect ourselves as far as shipbuilding capacity is concerned, which means we have our own ships and we are able to register, own, finance, build ships within the country, and we are not dependent on the rest of the world. And one statistic which is worth sharing is that 95% of our cargo at the moment, in the current times, is moved on foreign chartered vessels, and therefore there is a need to de-risk this, to have our own fleets, our own ship vessels, and so on.
A lot of focus from the center on shipbuilding and that particular segment as well. We'll have to see how things pan out from here on. Well, for the time being, we slip into a short break. On the other side, continue to focus on markets and on stock-specific action.
Welcome back. Well, for the markets, it's extremely quiet. So we have the Nifty, which is just about lower by around 42 odd points. We have the Midcap index, which has also given up a little bit of its gains. So an intraday chart will tell you more in terms of how the midcaps have panned out. Remember that when we started the show, the Midcap index was up by around 0.2 to 0.24%. So currently is just about higher by around 0.17%. If you look at a couple of these key indices in terms of, the indices such as the IT index, that's showing a little bit of profit booking today, so down around 0.2% at this point in time. Overall, an extremely quiet day, you'd have to say. So let's see how the second half of trade pans out. If you're talking about specific stocks, it is Tata Motors, which is, really grabbing all of the limelight on the negative side. So that one is down around 4 odd %. And we have a couple of others such as Asian Paints, Dr. Reddy's, all of these stocks down anywhere between 1 to 2 odd %. And like I mentioned, the IT stocks continue to be under pressure. So TCS, for example, is currently down around 1 odd %. But on that note, it's a wrap on Chartbusters. Stay tuned. Trading Hour will come up next with all of the top stories.
Good morning. It's time for Trading Hour. In this penultimate trading session of the week, we are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Harmis Patakia. With me, as always, Rima Tendulkar. Rima, good morning. The bulls are fighting tooth and nail to protect that 25,000 mark on the Nifty, so much so that the low of the session is 24,999.5. So it goes to show the significance of that 25,000 level. Of course, the broader markets are doing fairly okay for themselves, but it's been a rather quiet day, a range bound day so far. Of course, today being the BSE monthly expiry as well, that needs to be considered into focus. So as of now, the index continues to hover around that 25,000 mark, and the recovery that we saw at the initial part of the session was quickly sold into, Rima.
Indeed, the question is whether 25,000 mark can hold by the close of trade. On the way down, it continues to be Tata Motors, so that is reeling under pressure, and I think extending the fall now on the way down. But outside of that, a couple of these consumption-related names are on the back foot. So you've got softness in Asian Paints, a Titan, even an Eternal Trend. These are stocks which are trading with some losses. IT continues to remain weak. So TCS, HCL Tech at the index level, it's down close to about 0.2%. But individual stocks like TCS have a cut of more than 1%. And auto names, M&M and Maruti, are seeing some profit booking. On the way up, well, it's PSUs, BEL, ONGC on the buying list, at Coal India, and then throw in a couple of metal names, Hindalco as well as Tata Steel. But on the whole, things are on the quieter side, at least this Thursday morning. But let's talk about individual stocks. That's where all the action is. And you're seeing that Dhamaka. Hormus is now at the big wall with the top movers at this hour.
Some interesting names that have sprung up in today's trading session. Some of them are news driven. We'll start off with Hindustan Copper in today's trade. Now 6% higher on the stock. This is the fifth straight day of gains for the company, and it's up 17% in this 5-day gaining streak that the stock has had. Now in the last 4 weeks, there have only been 4 instances that the stock has ended lower on a closing basis. And today's volumes are on the higher side. Now we have already had more than 2 crore shares that have been traded, almost a 6x compared to their 20-day average of around 30 lakh shares. And courtesy of this move, the stock is already up 43% in the month of September, making it the best month that the stock has had since December of 2023. The other one on the list is Finiotex Chemicals. And the stock is cooled off slightly, still 12% higher. At one point was up 16%, the biggest single day gain since May of 23. And volumes today are also on the higher side. Now 91 lakh shares have already been traded on Finiotex Chemicals in the first couple of hours of the trading session. The 20-day average here is only 73,000 shares. Of course, the announcement that was made by the company yesterday that the board is going to meet on the 27th to consider a bonus and a stock split. This will be the first instance where the company will be giving bonus and stock split after 2015, and finding some resistance in that 200-day moving average. It went close to that level of 267, but has cooled off slightly, has a Finiotex Chemicals. We've been talking about auto ancillaries all through this week, and the name that springs up today is RACL Gear Tech, a small company, and it's gained in 3 out of the last 4 trading sessions this week. And look at the volumes here. We've had more than 2 lakh shares that have been traded. The 20-day average at this time of the day is only 3,000 shares, and we had a similar instance last month as well, where more than 6 lakh shares had changed hands in a single day on the 21st of August as well. And as has been the trend over the last month or so, the stock has taken support yet again at its 50-day moving average of 926 and has then rebounded from those levels. And lastly, Texmaco Infra, not Texmaco Rail, the stock here is also up 6%. At one point was up 8.5, so this too has cooled off slightly from the highs. Now today's volumes are already at the highest level since March of this year, and we've already had 11 lakh shares change hands compared to a 20-day average of only 30,000 shares. It's broken above its 50 and 100 DMA of 97. It's at the 100 DMA right now, which is at 99, and the 200 DMA on the upside comes to levels of 106. So that's another important level to watch for Texmaco Infra. The stock is down 20% so far this year, was up 20% last year, so the returns over the last 2 years is just 0.
Thank you very much for that, but let's get to the stock of the day. Tata Motors in focus and continues to trade with losses. This is after JLR Land Rover is likely to be hit with a $2 billion pound bill. as it was not insured against the cyber attack. Sudarshan is here with the details and the numbers.
So it's a fresh trouble for Tata Motors and say indirectly JLR also. And the reason is that JLR did not have insurance coverage before cyber attack, and because of this, Financial Times has reported that it might see an impact of £2 billion. And apart from this, because of the delay in the production and company had extended the production pause, already company has been facing £5 million impact on a daily basis. Now, if you take a look at the timeline, so on 31st of August, cyber attack had happened. First statement from the company was released on September 2, in which company had talked about that it's looking into the issue and will be restarting the production very soon. The latest statement was released on September 23, in which company has said that it will be looking to restart the production in a phased manner. But now after that, there is no update. So if you take a look at the impact, overall impact, so in FY25, total profit after tax of JLR was £1.8 billion. Now, if you calculate of not having the insurance coverage and impact because of this, £2 billion and £5 million per day impact because of production delay, impact would be much more than company's total profit that it has reported in FY25. Now, apart from this, Guardian has today reported that UK government is looking into several options to resolve this issue, and one of those options is that government is looking to take the part supplies directly from suppliers, and once JLR resumes the production, government will supply back to JLR, and in that way it can help the company. Now, why is it important for Tata Motors? Because JLR forms nearly 70% of its total consolidated revenue, and because of this major impact, in the last two sessions you have seen a big fall in the stock, down somewhere in the range of 6 to 7%, and today also it's down 3%.
Top loser on the Nifty, a slight recovery, if you could call it that, because at one point was down 4%, now down 3% is Tata Motors, was down 3% in yesterday's trading session as well. So underperforming is Tata Motors among the top losers on the index. So the other stock that is on the radar today is RBL Bank, and there are multiple triggers that you need to watch out for on this stock going ahead, be it the stock being in the F&O ban and a lot of other triggers as well. Gaurav is here to tell us exactly that. Gaurav.
Well, yes. For RBL Bank, I'll give you two reasons why you should focus on the bank. First is that Citi's note. Now, Citi met with the management of RBL Bank where they have given some optimistic guidance. First is that when it comes to net interest margins, management has said that net interest margins has bottomed out, and from second quarter we will see some kind of improvement. In terms of advances, they believe that it will be driven by secured as well as commercial banking, while on the other hand, when it comes to MFI, they say that the disbursements are now outpacing repayments, and that is the reason why the rundown risk is eliminated. When it comes to some of the asset quality constraints, the JLG subsidies as well as credit cards is taking longer than what it was expected. But on the other hand, the core fee income that is likely to increase and improve from here on. Management also said that the cost control measures are underway, and from third quarter we will see some kind of benefits. And as a result, for Citi, although they have now closed their 90-day catalyst watch, they have remained positive on the stock. They have given a target price of 300 rupees with buy rating. Other than that, second reason is that the AGM is going to happen tomorrow. Remember, board has already approved fundraising in the tune of around 6,500 crores, out of which 3,500 crores are going to be from QIP. Although board said that this resolution and this approval is enabling approval, tomorrow they will seek for shareholders voting and approval, and that is the reason when it comes to stock price, both these reasons are supporting the stock price right now. As we speak, it is more than up more than 1% today.
Thank you very much for that. Another stock you should watch because of a potential trigger is Glenmark Pharma. Today, of course, it's in focus on account of that in-license deal for an oncology drug. But tomorrow, the board will be meeting to consider an interim dividend. And remember, the company got about $700 million upfront on account of their deal with AbbVie. Now, Nomura says that even assuming a 20% tax, the return debt of about $150 million, pay that back, $200 million for R&D, and some in-licensing cost, $150 to $200 million is what the street is anticipating will be returned back to the shareholders via the interim dividend. So that will be a stock to watch, Glenmark Pharma. The key catalyst is the interim dividend announcement tomorrow as the board meets. Get into a break. On the other side, crypto markets with Manisha Gupta and Santiago Santo will be joining in.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
As promised, let's shift our focus now to the space of crypto, and Santiago Roal Santo, who is Chief Executive Officer at Inversion, now joins us to discuss more. Santiago, hi. What's your sense really when you look at the kind of rally that we have seen in the crypto space so far? Your take on this year, and how are you looking at 2026 likely to be?
Hi, Manisha. Thanks for having me on. 2025 has been a hallmark year for crypto. We have a very different regulatory environment, and you've seen more and more institutions adopted. Certainly, crypto asset prices have reflected that, but we're at a pivotal inflection point in the industry where finally it's more legitimate, it is more recognized, and businesses, not only in Wall Street, but in Main Street, are realizing the opportunity to really harness the technology, which is blockchain, which has been in development for a better part of a decade.
As you mentioned, well, yes, crypto technology is growing, and massively so. How do you read into that, and how will it evolve into real-world asset classes?
It's a great question. You know, the reality is crypto is still not relatable for people in the same way that the internet wasn't in the early 2000s. Crypto finds itself in that similar situation where you are seeing tokenization endeavors by the likes of BlackRock. You're seeing stablecoin adoption. Companies like Visa and Revolut and other large financial institutions are adopting stablecoins. But that's really just the tip of the iceberg. What we see at Inversion is a great opportunity to adopt blockchain technology and infrastructure into traditional businesses to make them vastly more efficient. And you're already seeing that play out in certain businesses where companies are using, like Visa, are using stablecoin rails to settle 24/7 and instantly in a faster, better, cheaper way.
Santiago, you have transferred and acquired traditional businesses using blockchain, etc. How many companies is that, and how do you look at the overall ecosystem from here on?
I mean, as I said, the opportunity is vast. You know, it's not just tokenization and stablecoins. Every business will be using blockchain technology over the next 10, 20 years, in the same way that they started using the internet over the last 20 years. And that's, I think, the real opportunity that we see at Inversion, which is adopting blockchain technology and applying it to businesses like a remittance operator. You just saw yesterday, one of the largest remittance operators, MoneyGram, start using stablecoins to move money cross-border faster, better, cheaper. And so really, when you think about the opportunity at hand, we have businesses that continue to use antiquated infrastructure. The financial system predates the internet. And that's all really you need to know to appreciate the opportunity, which is blockchain and decentralized finance. All of this technology that's been developed for the better part of the last 10 years is mature enough to be applied at scale. And so when we think about the businesses that we want to go to acquire, we have very specific sectors that we like telecom, finance businesses, especially if it's cross-border trade. Those are the type of businesses where we see a material cost improvement and the opportunity to change the unit economics of that business in its own right.
I get your point there, but in US right now, what we're looking at in sense of legislations is for stable coins, and market seems to be believing that this can come for tokenization and even real world cases. Your take on this?
That's certainly the way it's been playing out. You know, there are a variety of flavors of stablecoins, from Tether to USDC, which is launched by Circle. You're seeing Stripe launch its own payments-based blockchain. So it certainly seems to be fragmented in that sense. And you have sovereign, central banks explore with stablecoins. So I think we'll continue to see a proliferation of companies that have distribution, that have the ability to utilize this technology, which is open source and available to anyone. And so, for instance, Visa is using its own settlement rails to process now over $1 billion of stablecoin settlement volume, which is 4x what was done last year. So I think you're going to continue to see that trend. It is still quite early, in my opinion, but more and more companies are at the board level seeing what Visa is doing, seeing what BlackRock is doing, and Stripe, and some of the leading companies, public companies that you cover in your segment, and they're saying, gosh, why don't we have a crypto strategy? Why is it that we're not using stable coins or tokenizing certain parts of our business? And that's really, I think, talks to what you're talking about, which is an increased adoption of this technology. And certainly you see different flavors. As you know, there's many different blockchains and type of stablecoins. So I think that trend is going to continue to persist.
Santiago, I get your point when you say that most traditional asset classes and companies perhaps would be looking at blockchain as a technology in next 10 to 20 years. How would you look at tokenization, though? Is it going to be limited to some, or do you see a widespread of that too? And what macros from here are you looking at?
Certainly, look, you just saw a rate cut, which is monumental in the U.S. I think that's obviously incredibly important. Crypto is a risk-on asset class, so of course rates and Fed policy factors into that. I think as it relates to tokenization, you're going to continue to see crypto companies go public. You just saw, of course, earlier this year, Figure Technologies went public. You had Circle go public, and that's been well received by the market. I think there's a lot of excitement from market participants to continue to get exposure to this asset class. And Figure is a great example of a company that took a particular product in the financial services industry, which is HELOCs, and has made it more efficient by utilizing blockchain. And so that is a really interesting case study of how companies can apply crypto to make their back-end infrastructure more efficient, which is a little bit unique in the sense that most people have thought about crypto as a speculative asset class, which is it's Bitcoin, it's some of these crypto asset prices and tokens. And, the industry is large, it's come a long way, but it's still not, again, very relatable. A lot of the conversation with crypto is just about crypto asset prices. I think you're going to continue to see over the next 5-10 years, more and more conversation about the actual technology and how large companies, public companies of all sizes, utilizing this technology. And that's one of the things that's most exciting. Of course, macro plays into the equation. But the analogy is, companies are not making a decision of whether to use AWS or Azure because the price of Amazon or Microsoft went down 20, 30, 40%. They're using those infrastructure services because they render a really good service. And I think that's the next chapter of crypto, which is, yes, prices are important, but the actual technology will take more of a driver's seat in the conversation with businesses. And that's something that you've just never seen in crypto before.
Oh, absolutely. These are those times that we have seen the cryptos do quite well. And the kind of conversations that we are looking at globally also have been quite supportive. Santiago, thank you so much for that conversation. And with that, we slip into a short break. More news and developments on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
per day.
Welcome back. There's some recovery from the lows of the day, but the overall trading range throughout this session has just been 90 points between the day's low and the day's high. So what is exactly the FNO data indicating between this tug of war between the bulls and the bears? Sudarshan is at the FNO desk to tell us just that. Sudarshan.
You have correctly said that it's a tug of war between bulls and bears, and that's what. So in this tug of war, what we are going to see that market is expected to remain in a range from 25,000 to 25,100, and there is a reason to it. So the velocity of call writing that we were seeing yesterday, that velocity has reduced, and even on the put side, the premium increase that we were seeing yesterday, that we saw even at the close of yesterday, that also now for the put options, both 25,000 and 24,900, that it has almost become flat, and that it's being reflected even in the put call ratio. At the close yesterday, it was at 0.91. Now it has fallen to the level of 0.82. So two call options that I have taken, 25,100. You will see the fall in the premium, but at the rate we were seeing yesterday, now it has come down. So for 25,100 call, premium is 82 versus 110, and for 25,000, premium is 135 versus 171. But on the put side, if you take a look, 25,000, premium has seen a minor increase to 68 from the level of 62. So if I put my neck out and if I have to say, for now, the data suggests that Nifty is likely to hold 25,000. So immediate support will be 25,000. If we fall below that, next support comes around 24,900. Resistance remains around 25,330. As far as Nifty Bank is concerned, support is around 54,600, that is 20-day moving average. And resistance remains around 50-day moving average, that is 55,434. I've taken three stocks. First one, on the back of sharp increase in copper prices, you are seeing a big move in all the names like Hindustan Copper and all the metal stocks. So one stock from that pack is Vedanta, which is up almost like 2 to 3%. HL, Hindustan Aeronautics, you have seen that government is going to sign the Tejas order very soon, today, this afternoon. And on the back of that, this stock is also seeing fresh longs. And on the short side, fresh shorts being seen in the name of Astron.
Thank you very much for that, Sudarshan. So for now, data seems to suggest 25,000 could hold. In fact, let's ask Sneha Sheth from Angel One. She joins in for a quick technical check. Sneha, today is also the monthly expiry for BSE. What's your sense? How are we likely to close? And do you think this 25,000 mark will hold? Is this a good time to go long, considering markets have been sluggish or weak for the last couple of days?
Very good morning. Yes, I mostly like if you look at the data yesterday, even though we saw some selling pressure from the higher levels, we did not see any major unwinding in the put side. So if you talk about 25,000, which is in support zone, there also we haven't seen any unwinding. So overall, looking at the data, I believe market may rebound from here on. So we have been suggesting going ahead and buying 25,100 call option if someone is interested. And for now, I believe the support is around 24,900, 25,000 would be acting as a support. Any move above 25,300, 350 would be interesting. Banking index, again, it has been trading near the support zone. And from here, the risk reward ratio looks very good. The index is taking support near the 89 EMA, and we expect an up move from here on in this index as well. So I believe one should be taking a long position at this point in time and avoid any, being very aggressive. Look for the levels on the higher side. For Nifty, around 25,200, 300 would be the levels to watch out.
And stocks?
In individual counters, like metal stocks has been showing some buying interest, and I believe Hindalco has been showing decent strength recently, continuously trading about 20 DEMA and has been consolidating around those levels only. Now, looking at the overall chart structure, I believe this counter looks poised for a move above the record high even. So I would suggest going and buying this counter with a strict stop loss of around 735, and the target expected will be around 780. Apart from this, the another counter which I'm liking is L&T. Now this counter, if you see, from quite some time, it has been taking resistance around 3,700, 720. Those zone has been acting as a resistance. But looking at the overall chart structure and the kind of move we have seen recently, I believe we may see an up move above this resistance zone even. So I would suggest going ahead and buying this counter with a strict stop loss of around 3,600. Upside target would be around 3,820.
Sneha, thank you for sparing time and joining us today with your views on the index and on specific stocks as well. Take a short break. On the other side, we continue the conversation on the markets, and George Thomas from Quantum AMC joins in on the other side.
Welcome back. George Thomas, Fund Manager, Equity at Quantum AMC, is now joining in to talk about market fundamentals. George, great to see you this Thursday morning. Let's talk about insurance, because the last time you said, I think you like insurance sector as a whole over the medium term, and there is a case to be made, rising penetration, etc. But just yesterday, we were discussing with a colleague that how the IRDAI wants the commissions paid to distributors to come down, and it's still source-based information, but they've asked the companies, insurance companies, to explore a model which is similar to that of mutual funds, where the total expense ratio is capped. What are your thoughts? If this were to come to pass, does it change the investment thesis in insurance companies?
See, if you look at the broader insurance sector, the penetration levels still continue to be very benign. And there has to be, it's too early for a pull model to work where customers would come and demand, and then you would have to sell some of these products. So there has to be a certain kind of incentive in terms of promoting the penetration, and of course the awareness would increase over a period of time. So our sense is, even if there were to be some cap to become into the sector, it's very unlikely that the commission rates might vary very in a very aggressive manner. And the point to note here is, some of the players where we are positioned, they are slightly more established, and then if this incentive is this scheme were to come down, it's very unlikely that they would see a material deterioration in terms of their competitive positioning.
George, good morning. Thank you for joining in. We have had enough and more conversations about how the GST rationalization has been a good one for the auto sector. But the sector that has been in the spotlight over the last week or so has been the auto ancillary names. Now, auto companies have come out with reports, at least some of them, saying that the first day of Navratri was really good. We'll be watching out for their sales numbers next week. But does that also mean that it is also a benefit for the auto ancillary space, considering if demand picks up in the auto space, it's good for them as well?
Yeah, obviously, as the auto volumes increase, that will percolate down to some of the auto ancillary companies as well. But looking at the stock movement in terms of how the prices have reacted since August 15, when there was an indication that there could be GST rationalization, our sense is, a lot of the stocks have rallied by almost 15, and some of 15 to 20, and some even up to 25%. So our sense is, looking at the GST impact, the most likely event which can happen is some of the people who are sitting on the fence, they would come down and decide on their buying decisions, and there could be a near-term pent-up demand. But the longer term, how the volumes progress is more dependent on how the fundamentals move, like how the incomes shape up and stuff like that. Of course, there is a possibility that the bottom of the pyramid, where affordability was hit to a larger extent, we would see some volume benefit coming up there, and that number could be slightly better in the near term. But the longer term volume growth assumptions would still continue to be contingent on the fundamentals of how the income growth and affordability pans out.
What about IT? I remember you seeing value in IT stocks after the underperformance, still down more than 15% on a year-to-date basis. But now there has been this additional setback on account of H-1B visa. And while it may not impact EPS in a great way, it could even be neutral. As of now, it does create a lot of uncertainty. So at such a time, does it still make sense to invest in technology names?
So we continue to have a large allocation in the large IT service companies. So if you look at the notification which came out, it kind of mentioned very distinctly that some of the unemployment numbers in the fresh graduates in US have gone up. And if you look at the H-1B filings for Indian IT service companies, the share of filings in those level 1, which is the lower tier of job profile, that's very minimal. But of course, that number is slightly higher if you go to the big tech and some of the US-based MNCs. But from an Indian IT service perspective, our sense is, the fundamentals still continue to be higher, especially if you look at the large IT service companies who can stitch larger deals, do end-to-end work. Their thesis continues to be strong. But of course, investors need to be cautious in some of the names where margins are a lot lower. And in case, there has to be some wage pressures which would happen in the interim, there could be EPS impact in the near term. But of course, on a longer term basis, as long as the cost arbitrage between on-site and then offshore resource continues to be favorable, they would be able to pass on some of these incremental cost to the end customer. So the major revival in the IT service would be in terms of where we would see a revival in growth. And that typically happens when there is a pickup in terms of implementation of new technology. For instance, right now, Gen AI is gaining traction, but we are seeing less number of use cases to be enrolled or to be rolled out at an enterprise level. So as that implementation gains space, some of the Indian IT service companies would start reporting reasonably good growth numbers.
What about metals, George? They too have been in the spotlight recently with almost all metal prices heading higher, gold being at record highs, copper being at the highest level in a year. Do you believe that the cusp of is the metals market on the cusp of a super bull market, as a lot of the analysts globally have been mentioning about?
See, as far as metals are concerned, there are 2-3 variables which we need to be cognizant. One, of course, the rate cutting cycle. The rate cut cycle is positive for them, and generally that is assuming that the global growth generally picks up when the rate cut starts, and therefore that gives some bit of tailwind for metal prices. But the bigger question here is how the China exports or Chinese volume would pan out. Until now, we have not seen a material deceleration in exports from China. And if at all, and we have heard announcements that China would curtail production in certain metals, contingent on reducing the pollution levels and stuff like that. So if that were to happen, and if the markets become tight, the demand supply scenario becomes more balanced, then we can expect a reasonably strong rally in metals. But the prime thing to note is how the global growth pans out. So even now, we are not seeing a material acceleration in some of those segments in China, which holds more than 50% of demand in many of these metals, like construction or real estate. We are not seeing a big acceleration in those pockets. As for a material rally in metals, I would assume that would be essential, along with some bit of production control in China.
Thank you very much for that, George. Get into a break. On the other side, we'll put the spotlight on the shipping sector in our special segment, The Big Story. Stay tuned.
Welcome back. On to today's big story, which is on the shipping sector. And after the slew of reforms that were announced by the government after the cabinet meeting yesterday, the cabinet having approved the shipping and maritime projects worth over 70,000 crore rupees. Now, this includes financial assistance and a development scheme for shipbuilding worth nearly 45,000 crore. The government also cleared a maritime development fund worth nearly 25,000 crore rupees. Now, speaking to CNBC-TV18, Shipping Secretary spoke to us, and we spoke to him to understand how will these reforms impact India's shipping sector amidst all the global headwinds that the sector currently faces. Here's what he had to say.
The Shipbuilding Financial Assistance Scheme builds upon an earlier scheme, which was the first version of the scheme. And the idea is to provide assistance to shipyards to bridge the gap between the cost of acquiring a ship abroad versus acquiring it in India. So this difference was about 15 to 20%. So this scheme incentivizes the cost of acquiring a ship, and it gives you a subsidy of 15 to 25% depending on how big the ship is.
Speaking about the shipbuilding development scheme, which is of 19,989 crores, how will this actually encourage ship manufacturing in the country and making it a larger exercise beyond the PSUs as well?
Yeah, so at the moment, some of the largest ship builders in India are either in the defense sector or in the sole one is the CSL in the shipping ministry, under the shipping ministry. The net result of having only a few shipyards in the public sector and a couple of them, in the private sector, like in Pipavav or L&T or Shaugule, etc. But the thing is, we don't have capacity. We produce only about 50 to 60,000 GT per year. And therefore, one reason we found was lack of capacity. So this scheme was brought in, one, to improve the capacity of the brownfield shipyards so that they can, they get about 25% subsidy. The cost of capital cost of setting up new infrastructure in a brownfield shipyard, up to 25% we will give them. Then in the new clusters, which are to be set up about 2 or 3, they call it shipbuilding mega clusters. We have programmed to give about 3,000 plus crores per cluster, and this cluster will be jointly implemented with the state government.
You also have a maritime development fund, which is pillar number 2, and the important component in this is the maritime investment fund of 20,000 crore that will be set up. Could you give us a sense of how this will incentivize ship makers in the country, allied sectors? There is also talk of private equity investors coming in, blended finance structures. How will this work? What do you really envision with this?
One of the reasons, like I said earlier, for the shipping industry not being a non-starter in India was that there was lack of finance. And so we've tried to do two things. One, like I said, the debt portion. The other is the equity portion. So we have brought in this MDF, the Maritime Development Fund, with a corpus of about 20,000 crores. Half of it will be, 49% will be contributed to by the government. The rest will come from the ports, from private funds and other international sovereign funds, pension funds, and so on. So that there is a corpus of about 20,000 crores spread over a period of about 10 years. And it can be much larger than that. And this can be then leveraged. So we expect that, about 7 times this will be the kind of investments that can be generated.
Okay, that's a very large sum, 70,000 crore boost. Ria is now joining in. Ria, first explain the impact, what are the implications for the sector?
Well, yes, this is a big push for the overall shipbuilding industry in India, which currently holds a very negligible share of the global shipbuilding market, estimated to be less than 1%. The scheme aims to support an overall investment of rupees 4.5 lakh crores into the sector as a whole. It also aims to support around 4.5 million gross tonnage of shipbuilding capacity, with the potential to reach around 8.2 million gross tonnage in shipbuilding output. These schemes have actually been designed to strengthen domestic capacity capacity, improve long-term financing, promote greenfield and brownfield shipyard development, and also enhance technical capabilities as well as skilling. Now, specifically the Maritime Development Fund, this provides long-term financing for the sector, reduces the effective cost of debt, and also improves overall project bankability. In terms of the Shipbuilding Development Scheme, this supports mega shipbuilding clusters in the country, infrastructure expansion, and it also aims to establish the India Ship Technology Center under the Indian Maritime University. Now, overall, we can expect an additional port capacity of around 250 million MMTPA with additional vessels over 2,500 as a result of these measures. These shipbuilding and maritime development reforms are to be spread across the next 10 years, and shipbuilding is also expected to have an overall employment multiplier effect of around 6.4 and an investment multiplier effect of 1.8, and the government is also expecting an additional 30 lakh jobs as a result of the Maritime Development Fund. In terms of the stock impact today, Cochin Shipyard and Garden Reach are trading higher by around 2.5 to 3%. Mazagon Dock is also seeing some gains of around 1% over the last 1 year as well. All of these stocks have performed quite well.
Okay, all nice sounding announcements, but it's spread over 10 years. And stocks are higher in trade, but you aren't seeing a lot of exuberance in them, just up 1, 2 to 3% odd.
Right.
Okay, thank you very much for that. We'll come back and get you more on the market. Stay tuned. Welcome back. Now 25,000 level has been taken out. The Nifty is extending the fall down close to about 68 points. And Hormus was just telling us that we had a 1,000-point rally from 24,400 to 25,400. And from that level, about half of it, 500 points, has been given away.
500 points knocked off, and it's a 1,000-point rally in just 14 days. So we're seeing some bit of retracement from those highs. You take your leave on this edition of Trading Hour. From Rima and me, thank you for watching. Halftime report on the other side.
Stocks oscillate between gains and losses as the street awaits fresh cues after digesting the GST fillip and the H1B concerns. Industrials and metals eke out gains while auto and realty drag.
In fresh troubles for Tata Motors, JLR reports suggest that automaker failed to secure insurance against cyber attacks in time, and this could spell a £2 billion hit. The Guardian also suggests that the UK government is looking at ways to support JLR's vendors till the situation normalizes.
Glenmark Pharma inks an exclusive worldwide license agreement for an oncology formulation. Lupin gets a tentative US FDA nod for a $16 billion drug, and Ibka Labs moves its discovery into joint development with a biosimilar player in Puerto Rico.
The government's rupees 70,000 crore shipbuilding scheme will build local capacity and bridge the gap in acquiring ships overseas. India's shipping secretary tells CNBC-TV18 he expects rupees 1.5 lakh crore of investment in India's shipping sector. Hello, good afternoon. You tuned into Halftime Report coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala, with me Ekta Batra as well. And today, a bit of a muted day again coming in for the Indian markets. Last week, we'd seen all green. This week seems like we're going in for the day, again, a fourth day of decline that we're seeing for the Nifty as well. Ekta, good afternoon, but markets not doing much, right? And especially in that last half an hour, 40 minutes, we've seen a bit more of a fall coming in.
Hi, Vinny. Yes, absolutely. You know, we've seen the Midcap index, in fact, slip into the red just as it was being resilient as compared to the Nifty and the Sensex. And we've seen the Nifty also decline around 70, 80 odd points. So it's been a fall or profit booking at the day's high, which has come through for all of the indices. And that's basically the texture of the market at this point in time. A little bit of trepidation, a little bit of nervousness, which still remains at this point. The advanced decline ratio, that's what's concerning, because we have around 981 stocks advancing to around 1,771 stocks declining on the National Stock Exchange. And as you can see, that gap is only widened, and we've not even, we have around 3.5 hours of trade left. So let's see how the broader markets trend. And it was looking precarious from the start. So it seems as though the markets are now showing that bit of a decline now. But nonetheless, even though it's a bit of a tentative market, we do have lots of stocks to focus on. This is our Movers and Shakers segment on Halftime Report, where we will be getting you all of the top buzzing stocks in trade. And first up, we have Amakshi who joins in. She's looking at Quality Power, which is holding up today. What's powering the stock of Amakshi?
Well, Ekta, you know, the stock is really, trading higher today, and that is because Meru Electricals, which is a material subsidiary of the company, has gone ahead and signed a technology co-development agreement with Hyosung T&D India. Now, this is for GIS instrument transformers. GIS is nothing but gas-insulated switchgear instruments. Why is this development positive for Quality Power? It's because the development will enable Meru, which is a material subsidiary of the company, to diversify into the GIS value chain. Other than that, it will be one of the first Indian companies to actually co-develop GIS instrument transformer tech for the global markets. So essentially, the tech will come from Hyosung, expertise in eco-friendly gases and compact equipment design, while the manufacturing will be taken care of by Quality Power. With this, they will be able to address new segments such as metro rail, offshore wind, data centers, as well as high voltage urban transmission projects. And what the company is saying is that they will be able to develop and commercialize at least the initial set of transformers within the next 12 months. So opens up a new opportunity for Quality Power, and resultantly the stock is buoyant on the back of this news flow.
Okay, Amakshi, thank you so much for that. But let's focus on Ekta. We have Lupin that's in focus in the pharma pack as well. What is the latest update that we're picking up here today?
Well, yes, for Lupin, you know, they've received tentative approval from the US FDA for the HIV drug, which has a market size of around $16 billion. But obviously, there's a lot of, dynamics with regards to this. The tablets are the bioequivalent of Biktarvy by Gilead Life Sciences. So Lupin has said that once they do get final approval, it will help them enter into the HIV market. And that will be, eventually a range of products which analysts are expecting Lupin to probably file. But nonetheless, positive news. However, the stock is off the day's high with just about a gain of around 0.7% at this point in time. But Vinny, back to you. You're looking at Newgen Software.
Absolutely. We have Newgen Software that's in focus. And, the stock has actually been underperforming the Nifty IT in the last 3 months, 1 year. But now what is changing for the company? We're seeing a lot of orders that are coming. Now, today there was a news flow that came in that they're furthermore growing their international portfolio. Their UK-based wholly owned subsidiary has executed a deal that is with master service agreement with Tata Consultancy Services in Belgium. The deal value is 4.22 million euros, and this will provide modernized cloud-based enterprise records, management services for platforms over there as well, and end-to-end customer services support is what they'll be providing for TCS Belgium, and this is going to be mainly in the Belgium region. Now, other than that, there's a domestic order that has come in as well. This is around a 21 crore order that they've received for software license implementation annual support services for a period of 5 years from Keshmar General Insurance. So that is a small order, but nonetheless, we're keeping an eye on this stock because it's managing to hold on to gains of almost 3 to 4% in today's trading session. While those were the top movers and shakers in today's trading session, we have a whole host of these other stocks that are buzzing in trade, and Vivek is here to take us through that list. Vivek.
Well, thank you so much for that. Like you mentioned, especially at the start of the show, the market breadth, especially in the broader end of the markets, has cooled off quite significantly. It has deteriorated now, more declines compared to advances. But quite a few stocks are doing quite well in the session. Hindustan Copper, this particular stock, management has come out with a detailed investor presentation a couple of weeks ago. You also seen copper prices surge overnight. In fact, doing very well out of the back of that. This stock higher, almost 6% in this session today. Intellect Design Arena, one of the other names from the Midcap IT pack that is seeing a bit of a bounce back today amongst the top NSE 500 gainers. V-Guard, this particular stock today, significantly higher volumes compared to the typical 5-day or 10-day average that we look at. So V-Guard is the other stock on our radar that's doing quite well. Cochin Shipyard, most of the defense stocks as well as shipyard or shipbuilding companies are doing quite well. Cochin Shipyard, no different in our cabinet note 2, coming through for almost 70,000 crore for shipbuilding. That stock doing very well. And Polymedicure, the street clearly likes the recent spate of acquisitions this particular company has announced, higher by another 3% today. On the other hand, quite a few laggards as well. Tata Motors, clearly negative news flow doesn't seem to be ending or abating as far as JLR is concerned. Reports indicate a significant hit that could come in from the lack of cyber insurance that reports are indicating that the company did not opt for. On the back of that, almost 3% low for Tata Motors. Tata Investment Corp stock, was hitting a series of upper circuits in the last couple of trading sessions. Today, cooling off a little bit. Metropolis Healthcare, again, one of the top laggards as far as the NSE 500 index is concerned. And lastly, Astral, this particular stock in the F&O space, seeing significant selling pressure. That stock near the day's lowest point.
Okay, all right, Vivek. A lot of buzzing stocks as well as a lot of stocks in our movers and shakers segment. But we need to take a short break with the news that we have the Midcap index, which is currently down around 0.2%. On the other side of the break, we'll get you lots more stocks which are in focus. Stay tuned. Welcome back. Well, let's in fact focus on one of the big sectors which have been making news. We do have the shipping sector, which is in focus, but we will get to that in just a bit. But before that, let's get the Midcap index up, which is just about under pressure. So it's just about lower by around 0.14% at this point in time. We have the Bank Nifty, which is just about lower by around 0.1% as well. The advanced decline ratio currently absolutely on the declining side, and in fact is extending at this point in terms of the declines that you can see. So as you can see, the red and green lines are just about extending. But nonetheless, the cabinet has approved the shipping and maritime projects worth around 70,000 crores. This includes financial assistance and a development scheme for shipbuilding worth nearly 45,000 crores. The government's also cleared a maritime development fund worth 25,000 crores. CNBC-TV18 spoke to the shipping secretary to understand how this will aid India's shipping sector amidst global headwinds. Listen in to what he had to say.
Shipbuilding Financial Assistance Scheme builds upon an earlier scheme, which was the first version of the scheme. And the idea is to provide assistance to shipyards to bridge the gap between the cost of acquiring a ship abroad versus acquiring it in India. So this difference was about 15 to 20%. So this scheme incentivizes the cost of acquiring a ship, and it gives you a subsidy of 15 to 25% depending on how big the ship is and whether it is a green vessel and so on.
Okay, that's the update coming in there on the shipbuilding side, and from the shipping secretary, some commentary there. But let's move on and talk about what we're watching out for actually in the world of F&O. We have Sudarshan from the F&O desk who's joining us to tell us what we should now be keeping an eye out on. Afternoon.
So in the last few minutes, things have become a bit worse. So Nifty has slipped below 25,000. Again, it's a fight going on between bulls and bears, and Nifty is trying its best to hold the levels of 25,000. But as of now, it's below that level, but near the flat line. There is nothing much to worry as far as advanced decline is concerned. It remains neutral. On the put call ratio front, again, it remains around the same level of 0.80 versus yesterday's closing level of 0.92. So what does options data indicate? Now, on the call side, take a look at 25,100. So last time when I was here, that time there was a not sharp fall, there was a minor fall in the premium, but now it has fallen a bit more. So currently the premium is 63 versus 110. On the put side, again premium has increased sharply, and now it has moved higher for 25,092 versus 62. So there is a call writing happening, but not aggressively. So support as of now remains around 24,900 for Nifty, and resistance would be again same 25,330 for Nifty Bank. Also support would be 20-day moving average of 54,600. Resistance would be 55,430. That is 50-day moving average. In the stock list, Dixon Tech, there was a positive brokerage note from one brokerage firm, UBS. It has upgraded the stock to buy, and target has given is of rupees 23,000 per share, and that's the reason this stock is seeing fresh longs. And on the short side, because gold prices have moved lower in the last 2 days, and that's the reason gold financials are under pressure, and Manappuram Finance is seeing fresh shorts.
Okay, Sudarshan, thank you so much for that. We'll be keeping an eye out on all these stocks also that you mentioned in the world of F&O. But on that note, we're actually going to slip into a very short break. Don't go anywhere. After the break, we have Sudeep Shah from SBI Securities who will join us to talk about his trading strategies.
Welcome back. Well, for Lupin, just wanted to point out that, the most important thing with regards to the particular drug approval that they got, Vinny, is that even though it's a $16 billion market, its expiry, patent expiries in 2033, and it is a tentative approval at this point in time. So it'll be interesting to see how things pan out. But nonetheless, it's a very long-term opportunity that we're talking about when it comes to Lupin. But nonetheless, positive news, like I mentioned, for Lupin. But for the markets, it's a bit of a recovery which has taken place for the Midcap index. So that really seems to be flitting between red and green at this point in time, just about flattened out. And so has the Bank Nifty flattened out. But nonetheless, there's no real up move or a significant move that we're seeing. It's mainly consolidating within a tight range. But let's get you a conversation from the Genome Valley in Hyderabad. Laurus Labs has invested around 500 crores in the Genome Valley and has committed another 2,000 odd crores to expand their operations. I did catch up with Mr. Chava, who's the CEO of the company, and began by asking him how the investments are contributing to the business. Listen in to a slice of that conversation from Genome Valley.
We started our research labs in Genome Valley 2006 April with a strength of 10 members. Today, we have over 1,000 scientists here, and we have 500,000 square feet R&D space here, and we invested 500 crores in R&D itself as of now, and investing in a phased manner 2,000 crores with our joint venture partner Karka from Europe. And we also just broke the ground for cell and gene therapy and antibody drug conjugates. Here is a 7,000 square meter facility with an investment of over close to 200 crores.
So when does that come on stream?
The GMP pilot plant for cell and gene therapy and ADCs will be up and running by end of next year.
Okay. All right. So by the end of next year, when you said ADCs and cell and gene therapy, what really came to mind is the CDMO opportunity, which seems to be emerging for India at this point. Companies have indicated to us that they've got multiple RFPs from innovator companies at this point. Is that the same case for you?
There is an increased flow of opportunities for sure for us as well. As you're aware, we play after phase 1 and commercial. Our main area of offering our services is in science and scale. So we try to blend science and scale. We invest in chemistry. We have about 1,400 scientists as of now. And we also invest in capacity. We have 8 million liters reactor volume, and we have 10 billion doses of solid oral capacity. We have compliance, very good compliance track record. All our facilities went through multiple regulatory approvals. And we have competence. We have delivered multiple programs in phase 3 commercial. And the biggest strength of us is the scale. As you can see from our antiretroviral services, we produce APIs and formulations for 1/3 of HIV population in the world. We service every third HIV patient in the world made by API or formulations made by us.
That's absolutely commendable. But the CDMO business, just wanted to narrow down on this ADC opportunity and the overall opportunity that Indian companies are possibly seeing because of, say, the China +1, Euro +1 factor. Could you quantify or paint a picture for us in terms of how big that opportunity is for Indian CDMOs and for Laurus as well?
I'll give a bigger picture. So the CDMO opportunities for Indian players is very huge. It all depends on how much we can deliver. It has two dimensions. One is scientific talent, and the second one is the available spare capacity to get more business in the chemical manufacturing. It all depends on how much investment we are doing in this space, both in R&D space and also in the manufacturing space. The second biggest enabler, which all of us have to think and act, is easing regulations to help the CDMO companies, to get the test licenses, to get the import-export, to get the reagents, biological reagents clearance. These are taking very long time. that's where Indian companies are losing or potentially may lose bigger opportunities if you don't ease these regulations to help the CRDMO companies.
So let me put it this way. How many RFPs have you got, say, compared to last year?
I will give in percentage wise, the RFP flow is gone up by, say, 30-40%.
And how much of that has now culminated into business?
If you are running a large program from RFP to commercial, it may take 24-30 months. It's not you get RFP today, you get the revenue tomorrow. Depending on the complexity of the molecule, if you are doing a one step, you get an RFP, you get revenue in 12 months. If you are doing a 20-step synthesis, it will take 2 years. If it is even more complex, GLP, peptides and all, you need 3 years to RFP to commercialization. So we have multiple programs at various stages. We are very happy the way things are going. And we see our opportunities are very big.
So the China Plus One, the US Biosecure Act, which again is under consideration, though it might be a watered down version, would that be a windfall opportunity for CDMO companies such as yours?
I would say companies who invest in technologies, flow chemistry, continuous manufacturing, biocatalysis, continuous hydrogenations. People who have these technology capabilities and people who have the scale, they are going to be winners. So we are trying to overlap science and scale. We believe we have good opportunities. And
do we have the scale?
We have the scale. We have the science. We are blending those two to offer solutions to our partners. Ultimately, these days, winners has to deliver not products. Winners has to deliver solutions. And these big companies have to think the Indian CDMOs as an extended arm of theirs. Then only the real partnership will come.
So based on what you're saying in terms of the increase in terms of RFPs, etc., are you in a position now to give us FY26 guidance?
No.
Why is that? Could it
we
exceed
stop
your
giving guidance for various multiple reasons. Ultimately, the numbers will tell. So I think we believe we are in a comfortable situation right now. I think we are investing in infrastructure, we are investing in R&D, we are investing in technology platforms. I think things are good.
So 130% growth is what you saw in your CDMO business in Q1. Are we going to see that kind of growth in Q2 or in coming quarters?
When compared to last year, FY25 to FY26, we still see significant growth in CDMO revenue. CDMO revenue is very difficult to give you quarter-wise. It all depends on when we deliver the program. We see significant growth when compared to FY25 to FY26.
You had guided, I think, for around 2,000 crores of CDMO revenue in FY26. Is that on track?
We will be on track.
Okay, so you should probably finish at those levels. Margins, 24.6% is what you did in Q1. You said that you will eventually see an improvement in terms of margins. Are you in a position to guide where the margins would be and the range?
See, previously we had 30% margins, EBITDA margins. We went down to 15. We went to 20 last for the entire financial year last year. In the Q1 we were close to 25. I think with this financial year we are confident to maintain that EBITDA percentage 25.
25. And when you get back to 30?
We'll see. I think we all depends on how many programs we are going to be successful in the next 12 months.
So this US Biosecure Act or maybe the China Europe Plus One, when will it start showing extremely tangibly in the numbers for CDMO companies? Will it be in FY26 end, FY27? When do we see it culminate into real numbers?
I think 27, 28. FY27.
So it could be a great year for CDMO companies?
Companies in the next 2 years.
Welcome back to Halftime Report on CNBC-TV18. As of now, the Nifty is down almost 0.3%, 70-point decline, almost in the day's lowest point. Not much of a recovery that we can talk about. But let's bring on board Sudeep Shah from SBS Securities, joining in with us to talk to us about his trading strategies, as well as what we should keep an eye out on in terms of the market. Sudeep, good afternoon. Thank you so much for joining us on the show. Quick check in terms of Nifty as well as a bank Nifty. What levels now we should be keeping an eye out on? Today, Nifty is not managing to hold on to the 25,000, right? It's trying hard, but again, we're seeing a fall coming in.
Good afternoon, Vinny. Vinny, what we're seeing in Nifty is that last 5 days, if you see the structure of the index, it is forming a lower top, lower bottom formation. And now in this current weakness of this last 5 days, we feel that supports are closer to 24,900, 24,930 zone. Which is almost the 50% retracement of the entire previous swing up move from 24,400 to 25,400. So roughly this zone of 24,900 plus minus 20-30 points should hold as an important support. And in this correction now, from a reversal perspective, 25,050, which is the 20-day exponential moving average from an extreme short-term trading perspective, will be an important number to watch out for. Unless and until 25,050 is not crossed, even from an intraday perspective, we might not see any major reversals. And about 25,050, we could see a reversal back to 25,200, 25,250 on the upside. So all in all, what we feel is that the markets in the next few sessions could be in a range between this 24,850, 24,800 mark on the downside and 25,200, 25,250 level on the upside.
Okay. And Sudeep, what are your top trading strategies?
There are a couple of them. One is from the defense space. We've seen in the morning, since morning and since the last few days, defense stocks are once again on an up move, and there's a continuation pattern which is being observed there in a lot of these defense names. And within those, one of the strongest of the pack is BEL, Bharat Electronics Limited. On a structural uptrend, there was some kind of a correction in the last few days from higher levels. But once again, the stock has taken support at its 20-day exponential moving average and rebounded back. So we recommend a buy here with 393 as a stop loss and 425 as a trading target. The second stock is from the NBFC space, and that is Poonawalla FinCorp. Here also, there was a breakout on last Thursday, and post that breakout there was some kind of a corrective move or a consolidation that we were witnessing in the last 2 to 3 days. Now today we are seeing some kind of a resumption of that structural uptrend, and we feel this can be bought with a stop loss at 480 on the downside and a trading target of 515 on the upside.
Okay, all right. We're going to leave it on that note. Sudeep, thanks very much for joining in and taking us through all of those strategies. We'll do one thing. We'll take a short break, but we'll put the spotlight on commodities on the other side. Stay tuned for that.
Welcome back. Joining us on the show now is Harshal Barot from Metal Focus. Harshal, hi, thank you so much for joining in. First of all, your sense on the gold and silver prices. A bit of a pause is what we've seen in the last 24 hours, not hitting all-time highs yet again. How are you reading it? It is sustainable. Are we looking at some more healthy profit-taking, or do you think it's being bought into?
Good afternoon, Manisha. I think the pace and extent of the rally definitely, warrants some kind of consolidation, if not outright, substantial profit booking, as far as we believe. But overall, I think from a medium-term perspective, the drivers for gold remained strong. The diversification argument, as far as institutional investors are concerned, remains as is. Central bank buying remains healthy overall, even though it's not at par at levels where we saw in 2022 or 2023, but overall still healthy. So I think there are some very structural supports for the gold price at the moment. But to what extent these justify, the frenzy that we've seen in the price in the recent few days is definitely questionable. So we believe that, 3,800, 4,000 levels we've been saying for a long time is where the price might pause a bit. So I think we are looking for some bit of consolidation here for both gold and silver.
4,000 for gold, and what's your sense on silver prices going forward?
Silver, see, longer term, we definitely have much higher targets as well. But on an immediate basis, I think $45 to $46 is where you could probably see some kind of halt coming in, provided that gold prices also pause. But if the gold price rally continues, then probably $50 is where the next big target for silver is.
While we are looking at a rebound and higher highs, expectations in gold and silver, how are you, Harshal, reading the notification that came in yesterday about silver jewelry imports into India? I mean, I'm looking at the timeline, really. This is happening even just as we are into festival season, just ahead of Diwali.
So I think, from what we're looking at the data, the imports of such jewelry were around 200 and 250 tons annually. So it remains to be seen, because there were concerns that some part of this was just to be exploited because of the duty differentials and was used as bullion in India. But from what we gather from conversations, a large part of this is for actual usage and was not misused per se. But we'll wait and see. I don't see any material impact on the market from that per se. India's silver demand at the moment remains very strong based on our conversations. The import numbers that we probably come in for September and October are going to be high. So retail investment demand and festive buying for silver has not changed much.
Harshal, we import 5,000 to 6,000 tons of silver per annum. The kind of imports of silver jewelry that we do, is it a part of that overall number, or is that separate?
No, that's separate. So what we count in imports is the bullion imports. Jewelry imports are part of India's silver consumption figures for us. So, that might shift to domestic players. So we don't see any material impact on India's bullion imports per se because of this.
Harshal, what is your sense on the kind of numbers that we might end this year with? I mean, we have Jan to August done. I'm assuming September is a month that you must be still awaiting numbers on. But with the quantum that we've seen in the last couple of years, much on the higher side, how are you looking at numbers for this year?
If you're talking about import volumes, going by what we are hearing from the market, see, there is definitely an impact on the weights that are being purchased by consumers for jewelry, be it gold or silver, even for silver articles and silverware, there's definitely an impact of that as well. But investment demand for both of them has been, very strong. So that is offsetting some of the declines that we see in jewelry. So I think while it's very difficult to put a number, given that we still have festive months coming up ahead, but expect at least, 15 to 20% decline in volume terms.
Also, a final word in case of the Indian demand when it comes to gold and silver at this point in time. A lot of people seem to be believing that silver could be better placed in sense of buying than what gold could do.
So, yes, I think this is purely a factor of affordability at the moment. So investors who think, gold is too expensive at the moment, see that there's still scope for silver to outperform, so the silver is benefiting from that as well. But jewelry demand, from what we see, over the past few weeks, anywhere between 20 to 30% down as far as gold jewelry is concerned. Silver not affected as much, as I said, could be down just 5 to 10%, but investment demand is the story for the markets over the past couple of months, I would say. And even in the festive season, I think from what feedback that we get, investment buying is still very strong.
Okay, all right, Manisha, thanks very much for that. So that's silver demand and the outlook there. We need to take a short break with the markets just about lower by around 87 odd points for the Nifty. The Bank Nifty has just about moved into the green. We'll take a break and be back with more stocks. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. Nifty 24,970, almost near the day's lowest point is what the Nifty is trading at. 0.3% of decline that we're seeing coming in for the Nifty 50. Nifty IT, that continues to be under pressure as well, down almost 1% in today's trading session. And on the flip side, in the IT pack, when you talk about it, the smaller end of the IT companies, you have Nugent Software as well as Netweb Technologies. These are something that are outperforming in terms of a move for the IT pack. Both are managing to hold on to gains of almost 4 to 5%. So that's what we'll be keeping an eye out on. But as of now, not much of an excitement coming in terms of the market. Midcap is also down and muted. As of now, 0.05% decline is what we're seeing for the mid-cap space as well. And Nifty 50 trading almost at the day's lowest point. With that, we're going to wind down this edition of Halftime Report. Thank you so much for tuning in. Up next, your business lunch, and they'll be taking you through all the market action. So don't go anywhere.
Key indices slipped to day's low as the street awaits fresh cues after digesting the GST flip and the H1B concerns. Industrials and metals eke out gains while auto and realty drag. In fresh trouble for Tata Motors, JLR reports suggest the automaker failed to secure insurance against cyber attacks in time, and this could spell a £2 billion hit. The Guardian also suggests the UK government is looking at ways to support JLR's vendors till the situation normalizes. Glenmark Pharma inks an exclusive worldwide license agreement for an oncology formulation. Lupin gets a tentative US FDA nod for a $16 billion drug, and Ipca Laboratories moves its discovery into joint development with a biosimilar player in Puerto Rico. The government's 70,000 crore rupees shipbuilding scheme will build local capacity and bridge the gap in acquiring ships overseas, India's shipping secretary tells CNBC-TV18. He expects 1.45 lakh rupees crores of investments in India's shipping sector. Well, hello and welcome to Business Lunch live from the CNBC-TV18 Motilal Oswal studio. I'm Amakshi Doria, and the markets are showing another day of subdued moves. For now, the Nifty is down almost 75 points. We've managed to slip below the 25,000 mark. That was a very important, crucial psychological level as well, because, that level was where the Nifty was facing resistance and tried really hard to cross that level earlier. So we've slipped below that all-important 25,000 mark. Pressure continues on the Nifty. Where is the pressure actually coming in for the Nifty? It's largely from names like Infosys, TCS. Some IT names are taking a hit. The auto pack is also seeing some bit of profit booking for now. But what has actually managed to slip in the last hour is actually Hero MotoCorp, because we've seen the stock fall by almost around 0.2% from the highs. Some bit of cooling off there. Dr. Reddy's continues to lag under pressure. Asian Paints is also down, and Sun Pharma is also seeing a sharp knock in trade. It is off the day's highest point by almost 1% or so. But the mid-cap end of the market, that for a change is actually doing slightly better as compared to what the benchmark indices is doing. And there's support, of course, coming in from the Bank Nifty, which continues to be in the positive territory. So that is how the market is looking like for now. But, let's put the spotlight on Tata Motors then. It is in focus because Jaguar Land Rover is likely to be hit with a £2 billion bill as it was not insured against the cyber attack. Sudarshan is here with more details. Sudarshan?
So Tata Motors is today top Nifty loser. It's on the back of the fresh reports we are getting to know with respect to JLR. Today, Financial Times has reported that JLR had failed to get the insurance coverage before the cyber attack, and because of this, it might see an impact of £2 billion. And also, apart from this, BBC had earlier reported that because of the production pause that company had taken, and due to that, impact on JLR is up to £5 million per day on the company. And now the impact, if you take a look at the timeline since the cyber attack, it had happened on 31st of August, and first statement from the company had come on September 2nd, in which company had announced that it's looking into the issue and will be looking to resolve very soon and will start the production. But as per the latest statement that company had released on September 23, it extended the production pause till October 31st. And regarding the resumption of production, it said it will happen in phased manner. Now, if you take a look at the impact, so for FY25, total profit after tax for the company was £1.8 billion. Now, if you do a calculation of the impact because of the insurance coverage, that is £2 billion, and because of the delay in the production, that is £5 million per day, so total impact would be much more than the profit after tax that company had reported for FY25. Apart from the impact, Guardian has reported about the UK government looking into several options to resolve this issue, and one of those options that government will buy parts from these suppliers, and once the company resumes production, those supplies can be given back to JLR. In that way, government is looking to resolve this issue and help the company. Now, why this is very important for Tata Motors? Because JLR forms nearly 70% of its total consolidated revenue, and that's the reason since this news about the impact has come, stock has been going down, and in the last two sessions, it's down almost 6 to 7%.
Absolutely, Sudarshan. Thank you so much for joining in with all of those details. That explains why the stock is under pressure. In the last 7 days, the stock has declined by almost 6.5%. But Sudarshan, do stay on with us. This is because Karnataka Liquor is set to give license to shops via auctions. Can you share some more details on this front, Sudarshan?
So in the last few years, I'll say 1 or 2 years, so many licenses licenses have either discontinued or lapsed. So in the budget earlier this year, in the budget that Karnataka government had announced that it's looking into this issue and will come out very soon with the option how to again give the license. So now today it has released the draft note and the stakeholder will be giving the replies on that draft note. But as per the draft note, Karnataka government is saying that it's going to give the liquor shop license and that would happen via auction, and it would be for those which are either lapsed or have not been renewed. And one important part is that it has mentioned that it will also cover the refreshment room or bar. Basically, restaurants can also take part in this auction. So it's positive for all these companies. Why it's positive? Because supplies will increase, and those shops which were shut because of license, either not license was not renewed or lapsed, now that will happen again, and it will be positive for these liquor companies.
Absolutely, Sudarshan. Positive for some of these liquor names for sure, but I think also positive for those who would like to grab a cold one. But anyway, on to an exclusive now. Sources are telling CNBC-TV18 that the Ministry of Defence is likely to sign a big-ticket fighter jet order with HAL. Now, according to sources, Defence Ministry is set to formally sign contract for 97 Tejas Mark 1A fighter jets with HAL. Now, the contract is likely to be worth approximately 67,000 crore rupees. The Modi government had approved the acquisition proposal way back in August 2025. The Defence Ministry had signed 47,000 crore rupees contract for 83 Tejas fighters in February of 2021. Now, given that HAL in focus, that stock is up almost 1%. Moving on then, the cabinet has approved shipping and maritime projects worth 70,000 crore rupees. Now, this includes financial assistance and a development scheme for shipbuilding worth nearly 45,000 crores. The government also cleared a maritime development fund worth 25,000 crores. CNBC-TV18 spoke to the shipping secretary to understand how this will impact India's shipping sector amidst global headwinds. Here is what he had to say.
Shipbuilding Financial Assistance Scheme builds upon an earlier scheme, which was the first version of the scheme. And the idea is to provide assistance to shipyards to bridge the gap between the cost of acquiring a ship abroad versus acquiring it in India. So this difference was about 15 to 20%. So this scheme incentivizes the cost of acquiring a ship, and it gives you a subsidy of 15 to 25% depending on how big the ship is and whether it is a green vessel and so on. Some of the largest ship builders in India are either in the defense sector or in the sole one is the CSL in the under the shipping ministry. The net result of having only a few shipyards in the public sector and a couple of them, in the private sector, like in Pipavav or L&T or Shaugule, etc. But the thing is, we don't have capacity. Other countries, Korea and Japan and China, even Vietnam, they produce a lot more of tonnage every year. So this scheme was brought in, one, to improve the capacity of the brownfield shipyards, so that they can, so they get about 25% subsidy. The cost of capital cost of setting up new infrastructure in a brownfield shipyard, up to 25% we will give them.
Well, that was the shipping secretary, but Ria is now joining us to decode the impact of this development. Ria, what's the expected impact and how are all of these stocks performing?
Well, yes, ma'am. Actually, yesterday the cabinet approved these schemes worth nearly rupees 70,000 crores for the shipbuilding industry. Now, just coming to the impact directly, this is expected to support an overall investment of 4.5 lakh crores over the next 10 years. Shipbuilding capacity addition of 4.5 million gross tonnage is also expected, with the potential to reach around 8.2 million gross tonnage in the future as well. Now, specifically, the Maritime Development Fund provides long-term financing for the sector. It also reduces the effective cost of debt and improves project bankability. The shipbuilding development scheme supports mega shipbuilding clusters and also infrastructure expansion. Now, overall, these schemes are also expected to add additional port capacities of 250 million MMTPA and also additional vessels in excess of 2,500. So that is the expected impact of these schemes. But also taking a look at why this matters for the entire industry as a whole. As of March, at the end of March 2024, the Indian shipping tonnage was at around 13.6 million GT, and Indian flagged ships carry just about 4.1% of India's overseas trade in FY24. Now, India's share in the global shipbuilding industry is also pegged at less than 1%, with global leaders including China, South Korea and Japan that together control over 93% of the new shipbuilding tonnage. So India's share at the moment is very less, and India actually aims to reach around 5% of global shipbuilding capacity by 2030, and also develop 10 shipyards through public-private partnerships as well as international collaborations. So these schemes that were announced, that were approved yesterday, will add some benefit to the entire industry as a whole. As a result, stocks are also performing positively in today's trade. Garden Reach, Cochin Shipyard as well as Mazgon Dock up around 1 to 3.5% right now.
Well, thank you so much for giving us some perspective on that news story here. But moving on then, pharma stocks are in focus on the number of reasons. Ekta is here to take us through that. Ekta, over to you.
Well, yes, I'll start with Glenmark, which is in focus. They've signed an exclusive license and collaboration agreement with Hengrui Pharma, and the deal basically covers an antibody drug conjugate. The Glenmark is going to gain exclusive rights to develop and commercialize this particular molecule worldwide, excluding key geographies such as, the US as well as Canada, Europe and mainland China. Glenmark is going to be making an upfront payment of $18 million, and Hengrui is going to be eligible for milestone payments of up to around $1 billion. Lupin, they've received a tentative approval for Gilead's HIV drug. The market size of this particular drug is around $16 billion. But remember that this particular patent expiry is in around 2033. So it's going to be a long way off in terms of, coming to market. And one will have to see once they get final approval whether or not Lupin does have any plans then. But in terms of IPCA, that particular stock is in focus because they've entered into a technology transfer and joint development agreement with Biosimilar Sciences, which is a company which will be basically looking at the development, manufacture and supply of biosimilars targeting oncology and inflammation from IPCA to BSS. Interestingly, BSS's campus is based in Puerto Rico. IPCA could receive milestone fees as well as royalty on net sales upon commercialization with regards to this particular tie-up. Interestingly, the press release also mentions that the capital that would have been spent overseas now funds American jobs, infrastructure and IP as well.
Well, thank you so much for that, Ekta. The Department of Telecommunications will host the latest round of stakeholder advisory committee meetings with top telecom leaders at 3 p.m. today. Heads of major operators including Reliance Jio's Akash Ambani, Vodafone Idea's Abhijit Kishore and representative from Bharti Airtel are likely to attend the meeting. Now, this meeting will focus on the upcoming Mobile Congress and also on the investment and capex plans by the telecom companies. It is important to note this meeting comes a day ahead of the AGR hearing in the Supreme Court tomorrow. Remember, in the previous hearing, the government was batting in support of relief to Vodafone Idea, where it has a nearly 49% stake. Well, on that note, let's take a very short break then. More news and updates follow on the other side, so don't go anywhere. Welcome back. You're watching Business Lunch on CNBC TV18. Take a note of the flashes at the bottom of your screen. There are some comments coming in from JLR's CEO, who's saying that the company has managed to pay off £5 billion in debt and is in good position to secure additional short-term liquidity. He also adds that Tata Motors and JLR are closely monitoring the company's working capital position, and of course we'll have Parikshit join in with more details on this. But for now, Sud was just highlighting the news flow on Tata Motors. The stock continues to deal under pressure, down almost more than 2.5%. But moving on then, Finance Minister Nirmala Sitharaman launched the GST Appellate Tribunal yesterday in a bid to expedite resolution of disputes between businesses and the tax department. Now, the finance minister added that the GST tribunal helps centre and states strengthen cooperative federalism and that it will act as a national appellate tribunal from April 2026. Listen in.
With the GStat coming in now, centre and states on board, we open a new era of predictable, specialized jurisprudence. This is cooperative federalism in action, and at its best providing a single, reliable appellate spine for the GST across the country. I actually think it's one of the strongest skeletal structure. The spine of the entire GST system is going to be provided by the GStat. Jargon-free decisions in plain language, simplified formats, and checklists, digital by default filings, and virtual hearings and time standards for listing, hearing, and for pronouncement. From April 2026, the principal bench of the GStat will also act as the national appellate authority for advanced rulings, providing businesses with clarity and ensuring consistency across states. This makes GStat not just a tribunal, it makes it a one-stop comprehensive forum for GST disputes, both before initiation and after initiation of the proceedings.
All right, as we slip into a very short break, a reminder for our viewers: unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access, our premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits. Thanks for staying tuned into Business Lunch. Let's bring you an update from Leh, where 4 people were killed during protests for statehood. The border town has been calm today with no reports of violence. Restrictions on the assembly of 4 or more people are still in place. Meanwhile, to protest police firing and in solidarity with Leh, Kargil observed a complete shutdown. A large number of police and paramilitary forces have been deployed to keep the situation under control. And in the latest edition of the Guinness Book of World Records, that it has been released, and it features a bunch of very interesting and bizarre milestones. The first is the story of Derek, the world's tallest living donkey, who scales 5 foot 5 inches at the tallest point of his body, excluding the neck and ears. Derek's owner also has Bamboo, another donkey who has set the record with the world's longest ears. However, the owner believes that despite the long ears, Bamboo is deaf. Then is the story of Norbert, the fastest pig on a skateboard. Norbert set the record by covering 10 meters on skateboard in an electric 11.30 seconds. And then there is Eddie John Brown, who managed to set the record for the most full-body revolutions with 38. All this while maintaining a chest stand. With that, it's a wrap on this edition of Business Lunch. Thank you so much for watching and stay tuned, because Midcap Radar will take all of the action forward.
If you were a bull and the markets were a test match, you would be happy that today is day 5, but you'd be hoping that the losing streak does come to an end in the last couple of hours of the BSE monthly expiry. You're watching Midcap Radar. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Horbis Fatakia. With me, as always, is Vivek Iyer. Vivek, good afternoon. There was some intraday recovery, but the trend of the day has been that every intraday recovery that's been taking place is being sold into, but a very, very narrow range for the Nifty so far.
That's right. Good afternoon, Hormaz. Like you mentioned, fourth trade session where we're actually seeing this particular week itself after the kind of fall that we saw on Friday. We have a lot lined up on the show, and we'll also see what exactly is transpiring, some of the key stocks that are moving around in today's trading session. Let's start off with the top headlines. Stocks oscillate between gains and losses as the street awaits fresh news after digesting the GST fillip and the H1B concerns. Metal leak out gains while IT and realty drag. Midcaps relatively perform better.
A sharp surge seen in Hindustan Copper as copper prices have risen 4% overnight to the highest level in 2 months. The stock has gained over 5%.
Newgen Software subsidiary wins a £4.2 million deal in the United Kingdom. It also bags a 21 crore rupee order from Shema General Insurance. The stock rises over 4%.
The government's 70,000 crore rupee shipbuilding scheme will build local capacity and bridge the gap in acquiring ships overseas. India Shipping Secretary tells CNBC-TV18 he expects close to 1.5 lakh crore rupee worth of investments in India's shipping sector.
All cargo terminals in focus ahead of its analyst meet today and is up for the 4th straight day, logging almost 30% returns in the last 4 trading sessions. Well, in Midcap Radar, a few stocks from the banking pack are the ones that are managing to hold their head above water. Look at a couple of names like AU Small Finance Bank, that particular stock near the day's highest point. Even RBL Bank ahead of the AGM tomorrow, that particular stock is doing quite well. Amongst the large cap banks, not too many movers, but the Nifty Bank Index is the only one that's managing to stay in the green territory or managing to stay in the positive territory. Amongst the broader end of the market, some of the wind turbine companies, both Inox Wind and Suzlon, both of these stocks seeing a bit of pressure today. But a whole host of stock spotting is what Hormaz has done. This is our special segment, Midcap Movers. Hormaz is by the wall to take us through the midcaps that are moving around in the session.
A very choppy moves seen today and typical of an expiry session as well. The midcap index has now given up most of those gains. And well, other than most of the pockets, there is one specific pocket. Large cap IT has been hammered over the last few days, but small cap IT is doing well in today's trading session. You take a look at eClerx, the stock is up 3%. NetWeb Technologies is up 5%. Intellect Design Arena is up 4.5% as well. So small cap IT is bucking the trend of sorts in today's trading session. Some of the other movers in today's session, and they also belong to the defense space, and of course that was the reforms that were announced to the shipbuilding space, some comments with regards to Ukraine from Donald Trump, and the stocks doing fairly okay. Garden Reach has although slumped to the lows of the day, still holding on to gains of 1.5%. But the newsmakers in today's session, and that presents an interesting list because we mentioned Hindustan Copper. Of course, a lot of these metal stocks are doing well, be it Vedanta and the likes as well. Newgen Software after the order win and Finiotex Chemicals at one point was up 16%, is halved those gains but still holding on to gains of 9% ahead of its board meeting for a bonus and a stock split. Now, on the stocks that have done very well in today's session, some of them that have seen double-digit gains today, you take a look at Max India. Auto ancillaries continue to move higher with TVS Electronics, Chemcon Specialty, State Trading Corporation. Mind you, State Trading Corporation does not have any or very little free float in the market, so you need to keep that on your radar. And lastly, stocks that are bucking the trend today, Jai Bharat Maruti, one of those few auto ancillary names that are not doing well, is 3.5% lower there. Shankara Building, another lower circuit. Some profit booking in Tata Investments after a 30% move in 2 sessions. And Cross, something that Sonal highlighted in her Under the Lens segment just a few weeks earlier, that too seeing losses of around 5.5%, Vivek.
Thank you so much, Hormaz, for taking us through the list of stocks that are moving around as far as the broad end of the markets are concerned. Well, another stock from the broad end of the markets, one name from the telecom space is Idea. That particular stock is doing quite well. Remember, tomorrow is the all-important day where the Supreme Court will decide on whether any relief is to be granted as far as the company's AGR dues plea is concerned. But it's a good time to welcome Rajesh Palvia from Access Securities for a quick technical check on the market. Good afternoon, Rajesh. Thank you so much for joining us. Well, this particular trend has been continuing where any brief intraday recoveries are being sold into. Do you feel market has now a bottom in place, or you feel further selling pressure from here on?
Good afternoon. So Nifty is now almost trading near to 20-day moving average support area, which is placed at around 24,970, 950 zone. So I think these levels are very critical and important for the Nifty. If Nifty manages to hold these levels, then only, yes, some recovery we may see from current level, as already we have corrected from the recent high of 25,500 to all the way now we are below 25,000 level. So almost 50% correction of entire rally is almost in place. Looking at the banking stocks, yes, there is a buying interest. Bank Nifty is showing sign of strength. 55,000 is comfortably holded by the Bank Nifty. So some of the PSU bank and private banks are showing sign of buying interest. So Bank Nifty may show some outperformance, but on the Nifty, still one needs to be cautious, as if it breaks below 24,950, then we may see more liquidation in Nifty. On the higher side, 24,150 needs to cross. If it crosses, then only we may witness some short covering action in the near term perspective. But for Bank Nifty, we hold our bullish view, and we believe that, till 55,000 is intact, there is a possibility we may see higher level of 55,400 to 500 for Bank Nifty, and maybe we may see a support from the PSU banking basket, as well as some of the private banks are also showing sign of strength.
Rajesh, good afternoon. Thank you for joining in. Now, very quickly, you mentioned if it breaks below 24,950, do we see test of the 61.8% retracement of this rally coming up to around 24,800 in that scenario? Part one, and of course, your stock recommendations for the afternoon.
Yeah, so definitely if he breaks below 24,950, yes, possibly a Nifty may attempt to move lower to 24,800. That would be the next level for the Nifty if it continues to trade below 24,950 zone. On the stocks front, two stocks idea, both on the buy side. First one is AU Bank. If we look at the overall structure, this is the third consecutive day where stock is attracting buying interest, and towards the end of this expiry, I think we may see further more continuation of uptrend. Stock managed to give breakout on daily as well as on the weekly chart. So we expect a target of around 765 to 770 for AU Bank. On the downside, one needs to keep stop loss towards 736. The second stock where we are focusing is GMDC Limited. If we analyze the overall structure, stock managed to give breakout of its previous swing high, and the kind of buying interest we have seen in this counter in last couple of weeks, that clearly gives us sign that, yes, there is a potential to continue further more upside. We are projecting target of 635 to 645. On the downside, one needs to keep a stop loss towards 605.
Thank you so much, Rajesh, for joining us, giving us a view on the markets, your Nifty levels, as well as your individual trading picks. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. The stock that has been in focus since the morning has been Tata Motors, and after reports suggesting a nearly £2 billion bill over the recent cybersecurity attacks, the company has come out with a clarification. Jaguar Land Rover has come out with a clarification, and Sudarshan is joining in to share us just that. Sudarshan, tell us more.
So first, talking about the cyber attack impact, Financial Times has reported that because company did not have the insurance coverage ahead of cyber attack, it might have an impact of £2 billion. And apart from this, BBC had earlier reported that because of the delay in the production, restarting the production, company has been extending the production pause. And because of this, company is facing the impact of almost £5 million on a daily basis. Now, if you take a look at the timeline of the cyber attack, it had happened on August 31st, and first statement that company had released was on September 2, in which company had talked about its impact and also has said that it's looking into the issue and will be starting the production very soon. But as per the latest statement that company had released, it was on September 23, in which it has extended the production pause till October 31st and has also said that it will be restarting the production in a phased manner. So now take a look at the impact on its earnings. If you compare with the earnings, so in FY25, company's JLR's profit after tax was £1.8 billion. Now, if you calculate the impact total, because of no insurance coverage, £2 billion impact, and because of the delay in production, £5 million on a daily basis. So total impact would be much more than company's profit after tax that it reported in FY25. Now, why it's important for Tata Motors? Because JLR forms nearly 70% of its total consolidated revenue. Now, apart from cyber attack impact, Guardian has today reported about UK government looking into several options to resolve this issue. One of those options is that UK government may talk to the suppliers and take parts from them, and once JLR resumes the production, will supply it back to JLR. In that way, UK government is looking to help JLR. Now, we have got a reply from JLR CEO, in which company has basically replied to UK Parliament Committee, in which JLR CEO is saying that Tata Group is in close touch with JLR to offer advice and support, and also company has paid £5 billion in debt and is good position to secure additional liquidity. But on cyber attack impact, company is saying that it's very premature to comment anything about that at this point of time.
Thank you so much, Sudarshan, for joining us and trying to make sense of this ongoing production shutdown that is being seen as far as JLR is concerned. The stock has, however, recovered a little bit from the day's lowest point. But moving on, this is our special segment, Midcap Spotlight. Vamakshi joins in with details on Quality Power.
Well, Vivek, the stock has been doing quite well in the trading session today, and that is because Meru Electrical, which is a material subsidiary for Quality Power, has signed a technology co-development agreement with Hyosung T&D India. Now, this is for GIS instrument transformers. GIS is essentially gas-insulated switchgear, and this development is positive for Quality Power, and that is because it will enable Meru Electricals to diversify into the GIS value chain. In addition to that, it also positions Meru as one of the few Indian companies that will be co-developing GIS instrument transformer tech for global markets. Meru will also be able to leverage Hyosung's expertise in eco-friendly gases and compact equipment design. So essentially, the technology for this would likely come from Hyosung, while Meru will be involved in the production for the same. Now, with this, they will be able to address new demand segments such as metro rail, offshore wind, data centers, and high voltage urban transmission projects. So it opens up a whole new customer base for them. And what the company is saying is that the development as well as commercialization of the initial set of transformers is expected within the next 12 months. So positive development for Quality Power. Resultantly, the stock is flying high in trade today.
Positive development indeed. Vamakshi, thank you for that update. 4.5% higher on the stock. The other one that's doing well is something that we highlighted in our mid-cap mover segment as well. Nugent Software is one of them, and a couple of contracts that the company announced last evening. Vinny is here to tell us just that. Vinny.
Yes, the stock is buzzing in trade because of those couple of contracts I've seen. One is a big one, right? Because it's an international portfolio which they're further expanding. Now, the company's subsidiary that's based in UK has executed a master service agreement with Tata Consultancy Services NV Belgium. This service agreement is mainly going to be for the Belgium area, where the deal value is 4.22 million euros, as well as they will provide modernized cloud-based enterprise records, management platforms, as well as end-to-end customer services for Tata Consultancy Services in Belgium. The other one is a domestic order. They have received an order from Keshma General Insurance for 21 crores. It's a small order, but mainly it's a software license, implementation and annual support services. And this is a contract for around 5 years. Do not forget that the stock has been underperforming in terms of the other IT companies as well. IT as a whole was not doing anything well in the last 1 year. Now, Newgen was further more of a underperformance versus Nifty IT as well. So that is why also we're seeing a run-up. But obviously, the order that has come in, especially in terms of the Belgium market, that's a positive one and a big one for the company.
Thank you so much, Vinny, for joining us and taking us through all of these details as well. That particular stock, Newgen Software, cooled off a little bit from the day's highest point, but still higher by 3% today. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, the Cabinet has approved shipping and maritime projects worth 70,000 crore rupees. This includes financial assistance and a development scheme for shipbuilding worth nearly 45,000 crore rupees. The government also cleared a maritime development fund worth 25,000 crore rupees. CNBC-TV18 spoke to the shipping secretary to understand how this will impact India's shipping sector amidst global headwinds. Here's what he had to say.
The Shipbuilding Financial Assistance Scheme builds upon an earlier scheme, which was the first version of the scheme. And the idea is to provide assistance to shipyards to bridge the gap between the cost of acquiring a ship abroad versus acquiring it in India. So this difference was about 15 to 20%. So this scheme incentivizes the cost of acquiring a ship, and it gives you a subsidy of 15 to 25% depending on how big the ship is.
Speaking about the shipbuilding development scheme, which is of 19,989 crores, how will this actually encourage ship manufacturing in the country and making it a larger exercise beyond the PSUs as well?
Yeah, so at the moment, some of the largest ship builders in India are either in the defense sector or in the sole one is the CSL in the under the shipping ministry. The net result of having only a few shipyards in the public sector and a couple of them, in the private sector, like in Pipavav or L&T or Shaugule, etc. But the thing is, we don't have capacity. We produce only about 50 to 60,000 GT per year. And therefore, one reason we found was lack of capacity. So this scheme was brought in, one, to improve the capacity of the brownfield shipyards so that they can, they get about 25% subsidy. The cost of capital cost of setting up new infrastructure in a brownfield shipyard, up to 25% we will give them. Then in the new clusters, which are to be set up about 2 or 3, they're called shipbuilding mega clusters. We have programmed to give about 3,000 plus crores per cluster, and this cluster will be jointly implemented with the state government.
You also have a maritime development fund, which is pillar number 2, and the important component in this is the maritime investment fund of 20,000 crore that will be set up. Could you give us a sense of how this will incentivize ship makers in the country, allied sectors? There is also talk of private equity investors coming in, blended finance structures. How will this work? What do you really envision with this?
One of the reasons, like I said earlier, for the shipping industry not being a non-starter in India was that there was lack of finance. And so we've tried to do two things. One, like I said, the debt portion. The other is the equity portion. So we have brought in this MDF, the Maritime Development Fund, with a corpus of about 20,000 crores. Half of it will be, 49% will be contributed to by the government. The rest will come from the ports, from private funds and other international sovereign funds, pension funds, and so on. So that there is a corpus of about 20,000 crores spread over a period of about 10 years. And it can be much larger than that. And this can be then leveraged. So we expect that, about 7 times this will be the kind of investments that can be generated.
Mostly off the highs of the day now are all of these shipping names. But with that, we call time on this edition of Midcap Radar. From Vivek and me, thank you for watching. The tug of war between the bulls and the bears enters its last leg of the trading session. Stay tuned.
Hello, good afternoon and welcome to MF Corner on CNBC-TV18. I'm Vinny Motiwala. Thank you so much for tuning in as always. Now today we're going to be putting the spotlight on pure international funds and hybrid funds, the offering that is there that comes in from international funds and hybrid funds. Why this topic? Because there are some hybrid funds that have international exposure as well. Now, does it make sense to invest just in hybrid funds? Should you invest in international funds as well? How should you go about it? What gives you better returns? What is best suited for you as an investor? To discuss all of this, we have Sanchita Mukherjee, Senior Business Economist, Mutual Fund Distributor and Managing Partner at Talk the Walk. Sanchita, good afternoon. Thank you so much for joining us on the show. You know, I want to just start by talking about the key differences that we have between a pure international equity fund as well as hybrid funds, right, that have global exposure, especially in terms of risk and return profiles for an investor. How should you be looking at both these?
Excellent question as always, Vinny, and such a pleasure to be on your show. This is very, very pertinent in today's date when we are actually facing a lot of geopolitical upheavals, geopolitical tension. So there's obviously a lot of curiosity in terms of how does one approach international funds versus hybrid funds which do have an exposure to, say, a particular international stocks or ETFs. Now, what do we mean by international funds? First of all, international funds are like pure equity diversified funds, which are structured as a fund of fund, and that invests into another fund, any one particular fund with respect to a particular region, like a US, Canada, China, Japan, etc., or an ETF of that particular country. So that's a pure play of an international equity fund. A hybrid fund, which does invest into international equities, in India, currently it's structured as a multi-asset fund. So certain multi-asset funds have to diversify across, say, domestic equity, domestic debt, say, commodities, international equities being a part of the diversification in a multi-asset fund. Now, the fundamental difference between the two is one is an international pure equity, 100% equity exposure without a comfort or a cushion to fall back with any other asset class. Whereas an aggressive hybrid, a lot of these multi-asset which invest into international equities have a cushion of an Indian debt, fixed income component, rate, and domestic equities play as well to diversify, and the return risk return aspect, of course, becomes very different because in an international equity fund, since it's 100% equity, the risk, it's a high risk, right? Whereas for an aggressive hybrid, it's moderate to low high because then you have that comfort of the debt component as well.
Mm-hmm. Absolutely. You know, Sanchita, thank you so much for explaining us the details and the difference that actually comes in between these two, right? But are hybrid funds then in India actually, do they allocate enough in international assets maybe to get that exposure and that concern, right? Like you started off saying, there is so much uncertainty around that everyone wants that global exposure as well. Or is it enough? Or maybe you still need more diversification on the international side if you have one of these multi-asset funds then?
Wonderful question again. So this purely depends on the profile of the individual investor and how sophisticated they are, what is their risk appetite, and how their portfolio is being managed. For example, a very high risk-taking individual who's also sophisticated and understands the nuances of international investing would say, hey, you know, why don't I use this volatility as a friend? Why don't I use this geopolitical uncertainty as a friend and diversify my portfolio across different geographies? For example, the layman rule, which is typically the standard rule within a mutual fund industry, is to have a 10% diversification, say, into international funds. So now that could be done in terms of structuring your portfolio like international funds, domestic equity, fixed income, commodities, or one can look at a multi-asset, which gives a much, much smoother journey without taking all of that kind of volatility into account, but The drawback being the returns will not be significantly higher if there is a kickstart to a certain geography. One can invest accordingly if you're a low to moderate to low high kind of an investor. But coming back to the risk appetite, when one invests purely in an international equity fund, we have to be very mindful that there's a huge currency play also at work. So apart from understanding geographies, apart from understanding the equity valuations of that particular country and economy, one has to be very mindful that you are also investing into the currency of that country. For example, when you have international exposure, a stronger rupee can actually eat into your returns, whereas a weaker rupee can aid your returns. So the moot question is, would you now be looking at investing across currencies or using the multi-asset to smoothen out the curve and smoothen out the journey? Because let's understand, in an aggressive hybrid fund or a multi-asset fund, the fund manager's acumen also comes into play because they use a lot of in-house domestic modeling to switch from debt to equity. Whenever there's an opportunity in an international equity, they do take that. Whenever they feel that the going is not so good, they allocate more into debt. So that gives a much, much smoother kind of a ride. So that's point number one. Point number two, one also has to be mindful of the TER, which is the total expense ratio. For example, in an international equity fund, you have the expense ratio of the fund of fund, plus you have the expense ratio of the fund that they're investing in abroad, in some other geography, or the ETF, right? So that might be a double whammy. So what is the total expense ratio vis-a-vis aggressive hybrid, which will give you that kicker of an international equity exposure, but at the same time, lesser volatility, more rebalancing with a domestic cushion, and possibly lesser TER.
Okay. Sanchita, then what should I pick if someone has to pick right now? Should it be hybrid funds or, the multi-asset allocated funds, or should it be international funds right now?
Well, to be honest, I am not regulated to give a direct investment advice. So I honestly cannot speak on advice on what fund to pick at this point in time. It'll purely go by the investor's own asset allocation and, like I said, individual risk profile. However, what I can say is, out of my 23 years of experience in the Indian mutual fund industry, aggressive hybrids, multi-asset funds give an excellent smoothened journey over long periods of time.
Absolutely. How should one actually start evaluating, right, the performance if I'm starting to pick up? And I'm seeing that there is some exposure of these multi-asset allocation funds in the global portion as well, which they've invested. It's going to be the feeder funds, ETFs, however they've invested. So how should one evaluate the performance? And how should one be wary of the downside risk that could come in maybe when I'm investing in that multi-asset allocation fund?
Yes, absolutely. It'll all depend on the underlying fund being invested in. When you're investing in a multi-asset as well, you have to be very mindful in terms of what the multi-asset actually means. Is it domestic equity? Is it domestic debt? Is it international fund exposure? And if it is an international fund exposure, it is going into which underlying fund or which underlying ETF or which geography it pertains to. Is it a commodity play? So all of this, one has to be very mindful. For an investor, they need to understand when they're specifically investing into high risk and sophisticated funds like this, they should definitely go through the SID, which is the scheme information document. That will actually give you a very clear picture of what the fund can do and can't do in terms of allocation to which international fund. And secondly, portfolio disclosures. When you go through a monthly report of portfolio disclosures, you will have a complete knowledge of the breakdown when you're deep diving into which sectors, which stocks, even within the international fund. You know what that fund would be having, what the ETF would be having in terms of stock selection. That would be useful for the investor.
Sanchita, for investors with the risk appetite, we've spoken about that as well, right? Everyone will have a different risk appetite. How much allocation should actually come into international hybrid funds? What is the optimal one as of now, maybe to get one of those best returns? And should they go for maybe SIPs, STPs, lump sum? What would be the best strategy?
Good question. Here, I would always look at it this way, that you have as an investor and as your own risk appetite as an investor, because investing, let's understand, it's never a pure science. It's not one size fits all ever. So what your neighbor is doing is not something that you would be doing, right? Because you're a totally different and an independent investor with your own individual style, individual risk appetite, individual objective, time horizon, all of that. Let's understand these kind of things also are very contingent to the time horizon. So hence, if one were to look at the situation today, given that uncertainty definitely is a watchword, I think looking at a pure play as a lump sum or going into a tranche is a very, very risky strategy. One should definitely be looking at an STP or an SIP for entry, and one could look at these allocations definitely. Why not? You should ideally make use of volatility as your friend, and one can use this strategy to be a satellite strategy to your core portfolio. It need not be an integral part. If it's an integral part of your portfolio, one can look at it in 5 to 10% broadly speaking, given that the other 90%, again, you would have benchmarks in terms of multi-cap, flexi-cap, momentum fund, index investing, all of that is there, debt portion as well. So within keeping all of those parameters in mind, one could look at a 5 to 10% allocation and definitely through an STP SIP route.
Okay, Sanjita, thank you so much for giving us those details over there, and who can look at it, what should be my allocation there as well, looking at the point of view of multi-asset allocation funds who have international exposure as well as international funds, how one should go about it. But Sanjita, do wait by with us. We're going to take a very short break. And after the break, viewers, actually, we're going to be discussing some more details in terms of thematic funds, especially coming on the digital India side, right? When you have so much coming in on the tech front, new age tech, what should you be looking at? And momentum funds, where do they stand? That's all what we'll be discussing after this break. Welcome back to MF Corner on CNBC-TV18. We still have with us Sanchita Mukherjee, Senior Business Economist, Mutual Fund Distributor and Managing Partner at Talk the Walk. Now we're going to be putting the spotlight on some sort of thematic funds. I especially want to talk about the IT side of funds. There is so much coming in terms of new tech funds as well. New companies are coming in, new age tech, fintech companies. And how does that stand with momentum funds? Because they invest on the base of the momentum that's going on. Sanchita, let's start by talking about just basics. Thematic funds, how do they differ in terms of style-driven momentum funds? In terms of investor investing also, how should that portfolio construction work? Because everyone wants good returns, but which is the right time to look at what is something we don't understand. So how should we go about that?
Yes, interesting. And it is definitely for a very, very sophisticated investor, let me put it this way. Thematic IT fund, the giveaway is from the word itself. So SEBI has done a wonderful job of the nomenclature because the nomenclature is easy to understand and relate to. So a thematic IT fund would invest into the IT universe, the tech universe, which is the digital India universe, right? So that is the sector. It does not invest, it will not take an investment into anything else. So that's a thematic IT fund. A momentum fund, for example, would be slightly different. So momentum fund only invests into sectors where they see a price momentum or an earnings momentum. So that necessarily does not have to be IT. It can be IT, pharma, capital goods, etc. So they will see their only qualifying criteria, again, as the name suggests, would be the price momentum, the trend momentum, or a earnings momentum. That's what they will be investing in. Now, when you come specifically to stocks, again, a thematic IT fund will look at new age companies, IT, fintechs, all of that, but within the technology space, and they would look at growth, they would look at vision, they would look at a lot of fundamental attributes, right? In terms of how they're doing in the technology space, what is their market share, what is the story, all of that. Now, for a momentum fund, they would again purely be driven by the price momentum and the earnings momentum, more than fundamentals. Right? Again, now when we're talking about, say, churn, in a thematic IT fund, which will be spread over a longer horizon, they would look at the fundamental growth story in terms of who are the industry disruptors, is there a long-term future disruption which is coming into play over here? They would invest looking at that. So the concentration and will be across the IT sector within India, the digital India, and the churn will not be that high. It will be moderate. But in a momentum fund, because they only captured the price momentum and the trend, right? So the churn would be higher. It can be even as high as monthly or quarterly because they will drop out the IT companies or the new age IT companies which are not showing a price momentum or which are not showing an earning momentum, and they will bring in newer leaders. So that's a rule book that one can follow to understand these two different categories.
Sanchita, I just want to understand a bit more. So suppose there's a time when there is momentum funds, right? So that is depending on the move, like you spoke about it as well. So then what happens if I have a momentum fund? At that point of time, you're seeing momentum coming into this digital IT names right now, which are trending, right? Fintech or new age tech companies. While what if I'm invested in one of the funds or sector thematic fund, which is specifically IT? Then how do I play around with my portfolio that time?
Again, it's all depends on how you plan to design your portfolio. For example, momentum funds typically actually work in most portfolios in an out-and-out bull run, right? In a market which is sideways, it's very, very difficult to predict how a momentum will play out in terms of you might not be able to get a particular momentum in a particular sector or kind of a theme, right? So it's very, very difficult. And momentum funds typically do not play out well in a range-bound market which is going through a price correction or a time correction. Whereas in thematic IT, one can look at it in the sense that, right, there is a lot of upheaval which is happening in the sector. there is a lot of news flow which is happening, all of that. But at the same time, a thematic IT fund looks at investing across legacy IT names, large caps, as well as new age IT companies, right? Where a lot of action is happening, where a lot of traction is coming in terms of even price momentum, right? So there you have kind of best of both worlds if you're looking at a thematic IT play. So one would have to actually see whether you would like to be in an all-out momentum fund, which is a trend setter, and maybe bet on a certain trend that, hey, I think the markets might have a certain momentum in the near future, and let me add momentum funds to my portfolio. Or maybe you really, really believe in IT as a story, and you see that the valuations are very compelling for you. And you decide that, no, let me have a thematic IT fund, because right now I think it's a lot of blood on the street where IT is concerned. So let me have a 10-year horizon and add maybe a thematic IT to my portfolio, and I'll keep it for 5, 7, 10 years, given that the valuations are very compelling. Because see, another difference between thematic IT and momentum, let me tell you, is the valuation concern.
Yeah.
Momentum will invest at any valuation, right? If they see a price momentum happening, they will go for it. Right now, active momentum funds also do try and keep a quality check in terms of the valuation to address the valuation concern. In fact, they look at the balance sheet a bit and the debt ratios, the return ratios. However, momentum funds rarely look at valuation concerns. That's a pure price momentum that they play on. Whereas thematic, one needs to be very convinced. If you see that there's a conviction and you feel that you can hold on to IT for a longer horizon, and you're wishing to play that, valuations can be very compelling, because then you can enter cheap.
Right, Sanchita. Now I just want to focus a bit more in terms of the IT sector thematic funds, which we have. We have so many options, right? And the new age tech IT also. There are funds which have started investing in those smaller mid-cap IT companies or even fintech companies. How should investors actually assess now? Because you want returns, you want valuation, you want growth also. How do you assess between these options? Some of them are legacy, some of them are new businesses. As an investor, what should you do and how should you judge this?
Very easy. Leave it to the fund manager with a consistent track record and a style of investing. See, because it's very, very difficult for a new investor to understand pure stock play within this sector. Think about it, a fund manager with the expertise, with a team of probably 60 analysts or 20 analysts or things like that. I mean, the kind of understanding that they would have in terms of deep diving into every company, understanding the price to earning ratio, their order book, how much of it is traditional business, how much of it is new age business. Nowadays, they're even looking at PEG ratios that, okay, let me not even buy cheap, let me buy reasonably priced because I'm convinced as a fund manager that there is a future growth potential. All of this is all bordering actually on the fund manager's own wisdom, knowledge, analyst team, and the way the fund is managed. So for a retail investor, for any investor to deep dive, particularly into any particular stock, is very, very difficult in today's date. Ideally, one should invest with stable, diversified IT funds, which have a proven and a consistent track record. One could look at the fund's own Sharpe ratio, the Turner ratio, to understand how the fund would perform.
Okay, that's interesting there. And leave it to the fund manager, but a lot of ratios that you can keep an eye on also when you're judging it. Sanchita, thank you so much for joining us today on the show and giving us an insight in terms of, whether momentum funds, IT funds, what we should be looking at over there. Thank you so much for joining us. And viewers, thank you so much for tuning in as always. Don't go anywhere. Our sort of trade is still there, so you have closing bell up next.
headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Asian markets are giving us an indication it's a bit of a mixed opening there.
All the participants' views will be taken into account by SEBI before taking any action.
To improve the capacity of the brownfield shipyards so that they can, so they get about 25% subsidy.
30 points lower is where we are at.
The US, of course, the story is still very much driven by your earnings growth in the AI investments.
Because of the production pause, daily impact for JLR was £5 million per day.
25,025 is where the Nifty is at.
Markets will be looking forward to the next quarter, the third quarter earnings, where the spillover effect will be visible.
There is a lot of, research happening on how can you use this to automate.
The bulls are fighting tooth and nail to protect that 25,000 mark on the Nifty.
CDMO opportunities for Indian players is very huge.
This is expected to support an overall investment of 4.5 lakh crores over the next 10 years.
Some intraday recovery, but the trend of the day has been that every intraday recovery that's been taking place is being sold into, but a very, very narrow range for the Nifty so far.
Indeed, and as we speak, it's 100 points down on the Nifty and we're below 25,000. That was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Nigel D'Souza. Nigel, we were hoping 25,000 marks holds on, but it's looking tough now. But we've got the monthly expiry.
Well, that's right. Actually, at a very, very crucial juncture right now, Reema, because we're at the 20-day MA on the Nifty, and you want this level to hold out. Getting into the expiry, the monthly expiry, as you pointed out, and if you break that 20-day MA decisively, that's what could make the bears a little bit jittery. So I'll have to keep an eye on that. The only good news today is the Nifty Bank, at least, is holding one end up. But otherwise, it's going down as a bit of a disappointing trading session because we are seeing intraday bounces, but those bounces are getting sold into. That 20-day MA cannot get broken decisively on a closing basis. Important point to track.
Indeed. So as we speak, it's 24,950 on the Nifty. The 20-day moving average is approximately about a couple of points lower from where we are right now, 24,945. Sensex down 326, 81,400. And the chart will tell you we had a flat opening, but thereafter markets have been grinding lower. Very minor pullbacks of 20, 30 points have been sold into. And we're now headed for the fifth consecutive session of losses. And this week, the Nifty is down about 1.5%. The Midcap index is down close to more than 2% with a negative advance decline ratio for the day. Let's tell you what we have for you on our show today. It's a weak trade on Dalal Street. The Nifty has slipped below 25,000. IT sell-off continues. Autos, realty sector also come under pressure. Metal stocks, on the other hand, they surge in trade as prices of commodities rally. Hindustan Copper is the top mover after copper prices hit a 2-month high. Stocks of shipbuilders are also on the move after the government unveiled a shipbuilding development scheme worth 45,000 crore rupees. All this and more lined up in the next 1 hour. For now, let's head over to get in some closing strategies. Okay, before that, let's address the big stock of the day, and that's Tata Motors, still down close to about 3%. Sudarshan is now joining in. Sudarshan, earlier this week, we heard about the cybersecurity attack, but at that point, the market didn't react. And now we learned that they've been slapped with this $2 billion pound hit because it wasn't insured.
So we had earlier reported about the impact that company might face due to delay in the production. But now, as per the several reports, and Financial Times reported majorly today early in the morning that because of the company not having insurance coverage ahead of cyber attack, it might have an impact of £2 billion. And that is in addition to the daily impact that company has been facing of £5 million because of production delay. So this is the main reason over the last two sessions, you have seen a big fall in the stock in the last 2 days. It's down almost 6 to 7%. Now, if you take a look at the timeline of this cyber-tech and post that company's comments. So cyber-tech happened on 31st of August. First comment company made on September 2nd saying that it's looking into the issue and will be restarting the production very soon. And after that, second statement came on September 10 talking about that some data might be impacted because of that. And after the latest statement came on September 23 in which company has said that it has extended the production pause till October 1. And on the resumption of production, it has said that it will be resuming in a phased manner. Now, if you do a simple calculation, so 2 billion pounds impact because of no insurance coverage, 5 million pounds daily impact because of the delay in production. So it's 2 point almost, if you do the calculation, it would be much higher than the profit after tax that company reported for FY25, which was 1.8 million pounds, 1.8 billion pounds. So that would be more than that. Now, why this is important for Tata Motors? Because JLR forms nearly 70% of total consolidated revenue for Tata Motors. Now, apart from the cyber impact, there was another news came that is attributing to Guardian. It is said UK government is looking to resolving this issue. How? It's considering several options. One of the options is that UK government will buy parts from suppliers to JLR, and once JLR resumes the production, it will supply it back to JLR. In that way, it wants to help the government. Now, JLR CEO has replied to UK Parliament committee in which he has said that Tata Group is in close touch with JLR to offer advice and support, and JLR has already paid 5 billion pounds and is in good position to secure any additional liquidity if it is required. On cyber-tech impact, he has said it's premature to comment anything on that. We'll have to see how exactly it pans out. But as far as stock is concerned, it remains under pressure.
Okay, all right. Thanks a lot for that, sir. Clearly, the stock under pressure. It's come out drastically from the recent peak, but that's the big update that Sudarshan has been telling us all through the morning. Deven Chowksi, the MD at DR Chowksi FinServ, joins us on the show. Hi, Deven. Good afternoon. Good to see you. When Tata Motors, it was a darling, right? I remember during COVID, it went down to sub 100 rupees. Then it went dancing away to around 1100 rupees. But the troubles of late are not stopping. And these sort of hits are making investors very, very nervous. What's your view at around 650 rupees?
And Nigel, good afternoon. Well, I think everything is in price. Investor sentiment is negative. I think it is in price. The company sales getting affected, it is also in price. Maybe I think the impact on the margin would come in the September ended quarter. That also appears to be in price by and large. Because I think on the whole, the business of the company, save and accept this kind of a situation, I think is not looking bad at all. On the contrary, I think with good amount of clarity coming on the tariff front, including for the European region, I believe that I think the companies like Tata Motors with a portfolio of new vehicles, including electric vehicles in JLR as well, in particular Jaguar and Land Rover coming up thereafter, I believe that I think the company is in a good position. Maybe I think the knee-jerk reaction had to happen, which has happened in the price. Could be, I think, a buy opportunity if market gives further downside into the stock.
Deven, before you go out and buy, because at a time when Maruti is at a fresh record high, M&M is almost there and it's had a fantastic run, Tata Motors is about 33% away from its recent highs. So it has underperformed or it's come off quite a bit. So how much lower? 665 is the current market price. Would you look to buy it at 650? Would you look to buy it even lower, say maybe closer to 600? Do you see it headed down?
Yeah, Nima, I think the company has also been trying to arrest this particular situation. And I think 3 different statements coming in the span of last 2-3 weeks, I think is also suggesting that I think the last statement which came in for October 1 postponement of the business has created more nervousness. I don't think that I think beyond that point, I think the nervousness is there. So if one is looking at, I think the price target, in my viewpoint, I think in the normal market condition, given the current valuation at which the stock is quoting, I would think that I think everything seems to have discounted. Anything further fall into the stock price could be an accumulation opportunity on a gradual basis.
Got that. Today, Minda Corp is flat after yesterday's up move. The stock is holding on to gains. Remember, it rallied very hard yesterday, double-digit gain on the back of the Vision 2030 up move. But let's get you a CNBC TV18 exclusive now. Sources are telling CNBC TV18 that insurance companies could be looking at cutting commissions. Yash is now joining in. Yash, you were just telling us yesterday that the IRDAI was sort of in conversation, discussions with insurance companies, telling them commissions are high. Look at a model which is similar to the mutual funds with a capping of the total expense ratio. What have you heard back from the companies now? What are they planning to do?
Well, yesterday it just coincidentally happened that we were told by our sources, a development in terms of the discussion between the regulator and the insurance CEOs when it comes to the concern around high commission cost, high distribution cost, and how that needs to come down. In a separate development, the two are not related, but move towards the same direction. After the GST changes, which the government had announced, putting GST on health insurance to exempt category from 18%, we understand all insurance companies have passed on the benefits of that entire 18% GST cut to the policyholders. What that means is there is, according to our sources, a hit of anywhere between 5% to 8% in terms of additional cost for insurance companies, depending on how big their retail book is. Now, what we've been told by our sources is that the chief distribution officers of all large insurance companies have been discussing, have been talking since the last few days. And the idea is how this cost can be shared with distributors like web aggregators, like banks, like insurance agents. And that is because commission is still not exempt, though reinsurance is exempted, but commission is still not exempted from GST, and hence the cost burden being passed on to various kinds of distributors. What we've been told by our sources is that the insurance companies are looking at passing on, or rather cutting commissions by about 5 to 8% when it comes to the commissions that they pay to web aggregators, banks, as well as individual agents. What we've been told by our sources more specifically is that the pass on of the commission cost to agents as well as banks will be much lower, but the pass on to web aggregators could be much higher because agents are proxy employees in a way for insurance companies, and hence the pass on of the additional cost of this 5 to 8% reduced commission could be much higher as far as web aggregators are concerned. Now, this decision will be communicated to all distributors by all insurance companies collectively, and that, according to our sources, could happen very, very soon. Importantly, one of the only web aggregator listed, Policybazaar or PB Fintech, has indeed a large proportion coming from health insurance, about 20% of its revenue as well as 60% of its value. Of course, will impact all web aggregators, but the listed one in this space is certainly Policybazaar. We've written to Policybazaar on this query, but a response from them is still awaited.
Okay, all right, got it, Yash. Thanks very much for that. So, insurance distributors, perhaps for them, it could be slightly tougher times if these caps do come into place on commissions and overall, a reduction in commissions as well, as Yash has been reporting. Let's take this up with Deven. Deven, hi, good afternoon. Surbhi here. Policybazaar, PB Fintech, what's your sense? And if indeed there are some caps or any kind of reduction in commissions paid out to an aggregator like PB Fintech, does it impact the model itself in a big way, or do you think it will be a more or less a pass-through?
Yeah, good afternoon, Survi. A lot depends on how much percentage cut comes on the commission. While we distribute insurance products, and I think different products have different rates, like term insurance to health insurance, I think would have different rates of commission. And similarly, I think for the non-life product as well. But more or less, I think one understands that even if I think it is a 5 to 6% cut in the commission, it could have an impact. But at the same time, I think one could possibly ask for certain amount of, I think, extra benefits which otherwise insurance companies would pass on to the distribution agencies, including brokers. So we'll have to wait and see. I don't think that it is easy to immediately calculate on a one scale the entire impact for either the distributors or for the insurance companies. Maybe what they adopt and what they bring it down to, I think it's required to be understood before making impact on before analyzing the impact on the profit performance of the company.
Okay, all right. Well, copper prices have surged close to around 4% overnight, and that's what's taken copper prices to multi-month highs. Now, the rally comes after Freeport declared a forced merger at its Grasberg mine, that's in Indonesia. Now, this is one of the world's largest copper mines. The Grasberg mine, with a production capacity of close to around 800,000 tons, ranks as the second largest copper mine globally and accounts for approximately, very roughly, 3 to 3.2% of the world's mined copper supply. Now, Freeport's force majeure, well, that declaration has led close to around a 4% cut in their copper sales volume guidance that they given earlier. That's what sparked concerns with regard to supply constraints. And remember, this follows the earlier disruptions in September when Hudbay Minerals copper mine in Peru that had faced operational challenges due to the political unrest, further tightening the copper market. Now, after 2 years of relatively subdued performance, copper prices actually have made a comeback with more than 20% gains in this year itself, that's 2025. Meanwhile, silver prices have also surged, hitting the highest levels we've seen all the way since 2011. That's what's reflecting a broader strength in industrial metals as well. So silver has moved up, copper as well has moved up, and the only equity play on copper price move is Hindustan Copper, while Vedanta, via Hindustan Zinc, that's the only equity play on silver prices. So explains why these stocks up and about in today's session. Well, Deven, any view on both these two names? Hindustan Copper, 2 weeks ago, we had explained about as things were under some pressure, in terms of supply. The management came out there, they gave a big, broad guidance. The stock, I remember, was 270 rupees. Today, it's up close to around, 6-7%, and it's holding around 330 rupees. So in a matter of 2 weeks, this stock is up close to around 20%. What's your view on Hindustan Copper? I've seen in the past, it's a little tricky one to play it, but it's the only play you can make in terms of copper price moves.
Yes, Nigel, absolutely. I think the twin impact, I think, which as I see it for the company, on one side, I think the volume growth impact of around 15 to 20% expected in the current financial year because of the larger amount of throughput that they are processing. And on the other side, with the surge in the copper prices, I think they are expected to see even further growth. So volume-led growth on one side, price-led growth along with, I think is basically creating a good music to ears as far as I think the profit performance of the company is concerned. Whether they unilaterally passing on entire price rise, I think, to their customers or certain contracts, I think, which are driven by the price, I think is something which they are not passing on completely, remains to be seen. But overall, I think with a lag effect, certainly I think they would be in a position to pass it on. So in the full year, I would expect that I think along with 15-20% growth in the volume, along with that, I think the price impact should have reasonably powerful numbers coming up at the bottom line level. Again, I think no prediction because it would result into speculation for that matter. But believe that I think tailwind remains absolutely very strong for the commodity as a whole in general, including industrial commodity as well as the bullion commodities.
Okay. All right, Devin, thanks very much for being with us this afternoon. Really appreciate your views and your time. We do have to take a quick break on that note. We'll come back on the other side and we'll keep the market conversation going. Nikhil Ranka of Nuvama will join in with some perspective. Welcome back. It's that time of the day when Hormuz gets us all the action, the movers and shakers of the day, and everything that's moving beneath the surface as well. Hormuz, what's on your list?
Beneath the surface have been auto ancillaries all through and through this week. And every single day, there is some or the other name that puts its hands up and says that, okay, well, it's my turn to be under the spotlight today. Today's stock on the auto ancillary space is TVS Electronics. And today the stock is up 17%, but in today's episode of I Have Played This Game Before, the stock was up 10% the day before as well, and was up another 20% last week as well. Take a look at the volumes as well. They have increased every single time the stock has gained. On the last week, it was up 11 lakh shares. The day before 18, and today we've already seen close to 23 lakh shares that have changed hands. Now these 23 lakh shares are also very, very high compared to their 20-day average of around about 1.8 lakh shares. And today's stock, of course, is trading at a record high in today's session, and as a result of which it's up 56% in the month of September, marking its best month since September of 2017. And it's also turned positive for 2025 courtesy this rally that you have seen in the month of September, and since the start of 2020 the stock has been up almost 6x. Max India is the other one, another double-digit mover today. It is the biggest single-day gain that the stock has seen since October of 22. Volumes are the highest since July of 21, and today's session we have had 40 lakh shares being traded. That's not it. The 20-day average here is just 30,000 shares. Now, as a result of this move, the stock has also broken above its 200 DMA at 209 and the 50 DMA at 213. Still an underperformer this year, down 9%, but has delivered positive returns in all 4 years previously since its listing. A pharma name making it to the list today, Solara Active, snapped a 4-day losing streak today. It's still significantly off the highs of the day because at one point the stock was up almost 10%, but the volumes continue to remain very strong. We have had over 9 lakh shares that have been traded so far. The 20-day average is only 90,000 shares, and it's taken support at its 50-day moving average of 646 and has rebounded from those levels. Now, the stock has not had any returns in 2025, absolutely flat, but the stock had doubled last year. And lastly, of course, Hindustan Copper, that's been in the news all through the day. Fifth straight day of gains for the stock today, almost 20% now in the last 5 trading sessions, and it has declined only 4 times in the last 4 weeks has Hindustan Copper, and we have had over 5 crore shares that have been traded today, and the 20-day average here is only 80 lakh shares, and the stock is up 43% this month so far, making it the best month the stock has had since December of 2023.
Yeah, copper seems to be now joining the precious metals bandwagon. It's becoming precious, at least copper and copper-related stocks for sure have really started outperforming. Fantastic numbers there. Thank you so much for that, Hormuz.
So gold is doing well, copper is doing well, silver is doing well, Bitcoin's doing well. What's not doing so well is
Indian
equities, right?
Indian
That's the only thing which is not doing so well. So we went up 1,000 points and we've retraced 500 points. And now as we speak, we even breached the 20-day moving average, which was about 24,940.45. So we're trading below that level, extending its fall, 125 points gone. Nikhil Ranka, CIO, Equity Alternatives, Nuvama Asset Management is now joining in. Thank you very much, Nikhil, for joining in. In this sideways grind, what fresh positions are you taking now?
So, Rima, I would say markets are basically looking out for triggers. If you take the precedence of other emerging markets, India has underperformed MSCI Emerging Market Index by almost close to 25% this year. And if you look at other emerging markets, a rally has started whenever a trade deal has got finalized with the US. Because then there is certainty, people will fine-tune their earnings estimates, and accordingly, once the uncertainty is out, those markets have performed. In the case of India, very specifically, 2 things have happened. One, we have not yet been able to finalize the terms of the trade deal. And the point is the time is clearly running out because Christmas is the peak season for US, and if we are unable to do it in the next 2 months, for a lot of the exporters on the textiles or the garment side, the peak season will be behind them and this year will get washed out. So my sense is for the markets to break out of this 24,500 to 25,500 range, we will need some sort of triggers in the sort of finalization of tariffs with the US, and then a risk-on rally should come through. Even in terms of valuations, if you look at it, although we would have seen 1 year of time consolidation, on an absolute basis on FY27 earnings, we are not very, very cheap. We are still closer to 19.5 times FY27 earnings, which is where the median multiple is. So it's not that we have become extremely cheap on valuations in that sense.
Nikhil, hi. You've had a cautious view, and I think what you're saying is that return expectations themselves need to be reset to perhaps 10%, unlike 12, 13, 14% that we're used to expecting from equities. So, Nikhil, just tell us, since you have a more cautious stance and you mentioned some of the other facets about, for instance, tax collections maybe running behind estimates, how should one position the portfolio then? Are you cutting back from positions on the capex side of the market? And if yes, in what part of it? For instance, defense, look at it, HAL today. They're still announcing mega order wins. On the shipbuilding side, big announcements coming in from the government. So where are you cutting back on the capex or industrial side?
So if you actually look at the fiscal match, at the start of the year when the budget was announced, the direct tax collections were pegged at close to 25 lakh crores, which meant close to 12-13% growth for FY26 over FY25. If we look at the first 6 months of the year, we are tracking somewhere close to 8% in terms of direct tax collections. And assuming that, we continue with the same number for the rest of the year, you could have 3-4% slippage on the overall growth of tax collections, which would mean that there could be 1 lakh crores of hole that comes from the direct tax collection side. On top of it, we have the GST cuts that have been announced and got implemented from 22nd September. If you look at the government estimates itself, the number was put somewhere closer to 45-50,000 crores. So if you put together 1.5 lakh crores of revenue deficit, then we are looking at close to 40 bips of fiscal slippage for additional fiscal slippage for FY26. Now, there are two ways to do it. One, government increases borrowing, which would mean that there will be crowding out in the second half, which could put pressure on yields. Or the other way to then do it is cut back on the capex side of it, so that 10.5-11 lakh crore number, if there's some sort of 10% slowdown in that, then probably you will be able to manage the fiscal deficit much better in that sense. So therefore, my sense is there could be some sort of pressure on capex names as we move into later half of the year if the government spending doesn't come through. And therefore, my sense is given the rally that we have seen in a lot of these defense names, this could be an opportune time to take some profits in those names.
Hi, Nikhil. Good afternoon. Good to see you. Nikhil, what's the view on tech? Things were looking actually like they were bottoming out, and tech was said to catch up. But now suddenly over the weekend, Mr. Trump, he's having some issues with that H-1B visa. Well, most sell-side notes suggest that it's not going to be such a big impact. We have a lot of companies as well that joined and said it may not be such a big impact. The problem is the intent. And that's what's dented sentiment. And that's why the index itself is down 5.5% for this week. Do you think you would be looking to buy into this dip, or do you think there's too much of uncertainty and no growth, so you'd rather stay away?
So Nigel, if you put 2-3 things have happened for tech. The first is, the impact of AI in that sense. If you read some of the research reports that have come out, what they have basically put is that there could be 300 bips of deflationary pricing pressure on tech because of AI. That is one of the headwinds. So you will have to have much more volume growth to compensate for that. The second part is if you take the H-1B visa impact, the number is close to 1 lakh crores, but typically the tenure is close to 6 years for an H-1B visa. So on a per year basis, the impact is just $16,000 and the numbers are very small. So if you look at, the commentary from a lot of companies, nobody is expecting a hit of more than 50 to 100 basis points on margins because of the H-1B hike. And some way they can mitigate through that through lower salary hikes for employees. However, the key concern that now remains for the street is after H-1B visa part of it, does it do something on the higher act? Because there the measures are much more draconian. He's talking about a 25% tax on outsourcing. So everybody is therefore waiting for the dust to settle to have some clarity on what shape the final tariff negotiations with the US takes place. Because valuations anyways have become very, very lucrative now. Most of the names are trading 2 standard deviation below mean. But so to say, there's no trigger for the stock prices to move till we have clarity on tariff negotiations. So we will see a very decent rally. The same thing what happened with auto stocks post GST cut. The only event that we have to watch out for, when does the tariff negotiation come through with the US? And I think then tech will start performing.
You actually think this Hire Act, which imposes a 25% outsourcing tax, will come into effect? Because we've had these threats in the past. They've been introduced many times, in some form or shape, but they've not been converted into a law or passed through as a legislation. Do you think it's different this time, given the tension between India and US? And finally, after you just wrap up the discussion on IT, if you had to pick one sector as a secular trade for the next 3 to 5 years, which you're most bullish on, which sector would that be from here on?
So Rima, if you look at it, in the initial 3-4 months when this tariff thing was happening, services were kept completely out of the gamut of tariffs in that sense. And then suddenly we had this H-1B visa issue coming up. And then that created a sort of uncertainty for IT names. And then, talks of Hire Act also started coming. Given the way situation has been so fluid in the US in the last 5-6 months, you cannot rule out anything completely, I would say. And that is exactly what the street is also getting nervous on. I would say this will be a less than 20% probability event that something of this sort comes through. Because, the margins for most IT players itself is in the range of 12 to 14%. So if you start putting a 25% tax, ultimately it will be the US companies who will have to bear that. There's no way Indian companies can absorb that sort of cost hike, which would be detrimental for, jobs over there as well. So my base case is that it will not come through. It's only the uncertainty which is keeping the valuations a bit capped for IT companies. Given the way, things are panning out on the global side, I would say cement is one sector where, we've seen sort of GST cuts happening, almost 30 rupees of reduction per bag should happen. And that's one sector which is completely insulated, so to say, from the global uncertainties. So in this sort of scenario, I think a lot of fund managers would want to hide in cement. And my expectations is that sector should do well over the next 2-3 years. We are very clear, given the way consolidation has happened in the industry. The industry is now 60-65% in the hands of 2 players. Pricing power will come for cement companies, and what we are seeing today, closer to 800-900 rupees of EBITDA per ton, that should move closer to 1100-1200 rupees over the next 18 to 24 months.
Okay, all right, Nikhil, thanks very much. Great perspective. Good to have you on the show today, and we look forward to more conversations. Thanks for joining in. Well, with that, just a quick glance on the market, because the weakness is really, really telling. Look at this. I mean, now the market's picking up momentum on the way down. So the 20 DMA is gone, the 50 DMA is gone, and now the fall is accelerating. It's a 160-point downward dive. And now the bulls are, the fight is around 24,900 now, not even, 25,000. Good time to ask Nigel what's happening in the F&O market. Not a great afternoon, Nigel, from the bulls' perspective.
Well, that's right. You know what's happened in the last couple of hours actually is that the Nifty bank that is actually holding one end up, that's given away the advantage. And when the Nifty bank falls in that sort of a manner, it's made a lower yet again. And that's the big worry, right, from a bullish perspective, because tech is not performing. You will be counting on the Nifty bank, and that as well has given away. And as you said, just in the last 15 minutes or so, the Nifty that was at least managing to defend the 20 DMA, that's broken, and now it's broken decisively. One element that could be playing out today is the Sensex weekly expiry as well. The volumes are not as high as what we see on the Nifty, but it's still closer on 20% or thereabouts. So that could be another additional reason why we saw a sharp dive, because today is a Sensex weekly expiry. Moving to the Nifty options day, the 25,000 call, massive writing is what we're seeing out there. Take a look at the premium, that less than half in today's trading session itself. The 25,100 call as well. The premium at the start of today was around 110 rupees. that as well is less than half of what we saw at the start. So clearly there is aggressive writing that we've seen out there. Well, now all hopes are on this 24,900 put. It's seeing a good amount of open interest build up. The premiums around 50 to around 60 points or thereabouts. So, you'll have to see whether or not we can defend the lower marks. That's 24,850. But otherwise, the structure is broken. When 20 DME gets taken out in this sort of a manner, that's a bit of a problem. Let's see what the final 30 minutes does hold for us. But otherwise, we need to cross that 20 DME yet again and try to end above that mark. More into stocks that are in focus. Vedanta, that's moved up. Fresh buying is what we're seeing. Massive open interest build up out there. On Keynes, we're seeing a bit of a short covering bounce that's played out. Remember, there was a resignation at the top. Then there was big open interest build up. Now, in today's trading session, there is some roll as well that we're seeing. And 18% is what we're seeing in terms of sharing. So that's another stock. And finally, a likely F&O ban exit is HFCL. The last time I checked, the open interest, as a percentage of the MWPL has come down to 79%. It needs to breach 80% to come out of the F&O ban. So I think this one should probably come out of the F&O ban. Back to you.
Thank you very much for that. We will slip into a break. On the other side, we'll get you a check on dealing rooms are saying in our segment D Street Chatter. Stay tuned for that.
Welcome back. Well, as we speak, the Nifty is down close to around 170 points. And the way we have collapsed, that's a bit of an issue. But there could be a Sensex-related weekly expiry as well that's playing out. That said, it's that time of the day where we get to D Street Chatter. Nimesh is with us. Nimesh, disappointing trading session, right?
Absolutely. And, I was given a sense that there is a small MOC basket selling. But, this kind of an impact, I was not sure will have in the last 30 minutes of trade. But having said that, there is an impact for sure. And technically now it's looking weak as well. I've been saying this for a while that 24,950 is a very crucial support. We're trading just below that level. So if the closing is below those levels, probably will open up more, downside for many stocks and also. That's overall feedback. Flow, again, a bit of negative bias is what I understand. But as I said, there is a MOC angle to it. So numbers may look a bit large in today's trading. The sector which is doing well is basically metals. And that's because of strong metal prices globally. Global cues are quite strong as well. And hence that's having a bit of impact on the Indian metal names as well. So that's playing out. But as I said earlier, right, 24,950 is a crucial level. So another 20 minutes to go, but a close below those levels can technically mean we are weak, and then it'll open up for further selling as well.
Well, that's right. And, there's no big recovery that we're seeing whatsoever. So let's see whether there's a fight in the last 15 minutes, but otherwise it's going to go down as a weak close. Individual stocks, what are you tracking?
Well, so as I said, there's a bit of interest back in metal names. So Vedanta is the first stock on my list. Been buzzing in trade today. Volumes are also on the higher side. There are very strong buy flows from larger HNIs, and I understand specifically a couple of large HNI groups are quite active as well in Vedanta buying of late. So that's the first name. Second stock is PNB Housing. This is the only stock which has consistently outperformed in the housing finance basket in the last many weeks, and largely on the back of buying flows. I understand one domestic mutual fund is an aggressive buyer, and of course for PNB Housing, the appointment of the new CEO will be the next big trigger to watch out for. So that's the trigger there. And the last name is Thyrocare. I generally don't miss out on at least highlighting one stock where there could be a potential block. Thyrocare is an indication that maybe a large block can come, but maybe not very soon. But there is some works as far as a large block in Thyrocare is concerned.
Okay, all right, Nimesh, got it. Thanks. Yes, indeed, a disappointing session, the manner in which the market has fallen. Actually, the one space, there are very few today, the one space that's managing to buck this trend, one is metals, the other is defense. Speaking of defense, just saw that news flash out there, that mega big order over 60,000 crores finally has gone HAL's way, and this is for the procurement of 97 light combat aircraft. We have Parikshit joining in with the details. The market's been excited about this one for a while. Parikshit, fill us in.
Well, on the 19th of August, the government had given an in-principle approval to this to this deal, and now a commercial contract has been inked. This is a contract worth 62,370 crore for 97 LCA Mark 1A fighter jets, and this is excluding taxes. We believe that the final deal would be valued at around 67,000 crore rupees. Having said that, the delivery period would be 2027-28. That's when the first fighter jets from this order will be delivered to the Indian Air Force, and then the deliveries would be completed over a 6-year term. This will have an indigenous content of at least 64%. 67 additional items will be included over and above the previous order for 83 LCA Mark 1A Tejas fighter jets, which had been placed in January 2021. This aircraft will be equipped with Uttam active electronically scanned array radar. It'll have Swayam Raksha Kavach and control surface actuators. So the government is trying to give it a lot of indigenous content, indigenous weapon systems, protective shields, to make sure we are self-reliant in case of any kind of future conflict and wars. The government had earlier signed a 48,000 crore contract for 83 Tejas fighter jets in 2021. Those deliveries have also been delayed, predominantly because of the delay in getting the jet engines from GE in the USA. Now, with jet engines coming from GE and that supply chain stabilizing, we believe that HAL will be able to deliver the first 2 jets in in October 2025. This will be from the original order of 2021. Let's see how HAL is able to stabilize the supply chain, stabilize its production line, and how soon we can get more fighter jet engines from GE, and that will really help us boost our domestic production.
Absolutely, and that ramp up and that eventual, the rolling out of those planes is what the market is pinning its hopes on in terms of just better execution, better P&L eventually as well from these large orders. Thanks for that, Parikshit. Very helpful context as well there. So the second contract going HAL's way, even as it finally starts to roll out, that's next month, as Parikshit is saying, the deliveries of these LCA aircraft from the first order. Okay, with that, let's turn the spotlight on the currency, which has been making headlines with its weakness. In fact, the rupee hasn't, done too well, obviously, this week. We know that. It has outperformed most Asian currencies, remaining flat to strong versus the dollar. This is at least, earlier this week when it was just a one-way fall coming through. We've got Lata joining in with some perspective. Lata, what are dealers saying now?
Well, the important point is the rupee stalled its fall. Compared to earlier this week when we saw 88.79, almost 88.80, today it remained firmly between 88.6 and 88.68. Yesterday's close was 88.69. So at no point was it weaker than what it was on Wednesday or any time earlier this week. Sharp contrast. In fact, even if you compare to other Asian currencies, you saw a reasonable weakness between 0.1 and 0.7% fall. If you looked at the ringgit or the Filipino peso or at the Thai baht, the rupee was an outperformer even on those grounds. And there were reasons to fear an underperformance today because crude is at its strongest in several weeks. And the dollar index also is, DXY is inched towards 98. So both those gave the impression in the morning that the rupee will have another bad day. It didn't. And I think the entire credit should go to that one man who has $700 billion in his pocket. And, I mean, the RBI, it has intervened rather liberally on Tuesday and Wednesday. People don't want to get hurt now. Short positions, people were short on the dollar above 88.45, thinking it won't go there. And those shorts have already covered their positions. And hence, fresh speculative shorts against the rupee looks like have not been taken because of the presence of the Reserve Bank. We have to wait and see. There are, in fact, actually a lot of people who even think fundamentally most of the bad news is in the price. They are surprised that the rupee even came close to 88.8, etc. They expected that a little above 88 was all it would be, maybe 88.15 or thereabouts, and then it would start strengthening. So there isn't any fundamental support for the rupee at these levels. There will always be speculative push if the mood is bad. It's difficult to say that the worst is over, but it does look like people are not taking pot shots on the rupee anymore.
Okay, all right. Lata, thanks very much. So it seems at least the speculative element has been kind of put to rest with the RBI intervention. Got that point. Thanks very much for joining in. Well, with that, let's shift attention to the shipping space, which has been in sharp focus as well. Remember, the cabinet has approved shipping and maritime projects worth almost 70,000 crore rupees. This includes financial assistance and a development scheme for shipbuilding worth nearly 45,000 crores. The government also cleared a maritime development fund worth 25,000 crore rupees. CNBC-TV18 spoke with the shipping secretary to understand how this will aid India's shipping sector amidst global headwinds. Listen in.
Shipbuilding Financial Assistance Scheme builds upon an earlier scheme, which was the first version of the scheme. And the idea is to provide assistance to shipyards to bridge the gap between the cost of acquiring a ship abroad versus acquiring it in India. So this difference was about 15 to 20%. So this scheme incentivizes the cost of acquiring a ship, and it gives you a subsidy of 15 to 25% depending on how big the ship is and whether it is a green vessel and so on. Some of the largest ship builders in India are either in the defense sector or in the sole one is the CSL in the shipping under the shipping ministry. The net result of having only a few shipyards in the public sector and a couple of them, in the private sector, like in Pipavav or L&T or Shaugule, etc. But the thing is, we don't have capacity. Other countries, Korea and Japan and China, even Vietnam, they produce a lot more of tonnage every year. So this scheme was brought in, one, to improve the capacity of the brownfield shipyards, so that they can, they get about 25% subsidy. The cost of capital cost of setting up new infrastructure in a brownfield shipyard, up to 25% we will give them.
All right, and now Ria joins in to decode the impact of this development. What's the expected outcome out here? Ria, take it away.
Well, yes, this nearly 70,000 crore boost to the shipbuilding industry. Let's take a look at the impact of this. First of all, this will support an overall investment of around 4.5 lakh crores over the next 10 years. We can also expect a shipbuilding capacity addition of 4.5 million gross tonnage, which also has the potential to reach around 8.2 million gross tonnage going forward. Specifically, the Maritime Development Fund, this provides long-term financing for the sector. It reduces the effective cost of overall debt, and it also improves project bankability. In terms of the shipbuilding development scheme, this supports a mega shipbuilding clusters as well as infrastructure expansion. Overall, we can also expect some additional port capacity of 250 million MMTPA as well as additional vessels over 2,500. Now, let's just take a look at what this means for the overall shipbuilding industry. As of March 2024, the Indian shipping tonnage stood at around 13.66 million gross tonnage, and Indian flagged ships carried only 4.1% of India's overseas trade in FY24. India's share in the global shipbuilding capacity was also pegged at less than 1% in FY24, and the global leaders include China, South Korea and Japan, which together control around 93 to 94% of new shipbuilding tonnage overall globally. So India aims to reach around 5% of global shipbuilding capacity by 2030 and also aims to develop around 10 shipyards by way of public-private partnerships as well as international collaborations, and these schemes that were approved yesterday will aid the sector overall. Stocks were reacting positively throughout the session, but as of now only Cochin Shipyard is in the green, holding on to some gains, whereas Mascon Dock and Garden Reach have slipped into the red.
Okay, all right, Ria. Thanks a lot for that. By the way, it's not all gloom and doom, actually. There are a few stocks that are doing well, so we must pull that up. Adani Power, the stock has now moved to the high point of the day. Pull up the intraday chart of this one up. Paradeep Phosphates, the stock was trading in the red. It's already had a big run. Now that stock, in fact, has spiked up yet again. So it's done a bit of a U-turn from the day's low. We have Adani Total Gas as well. That's up, from the red, it's moved into the green. So select stocks are still doing pretty well. Amrish Palika, market expert, joins us on the show. Amrish, let's throw the field open. First of all, what's that one stock you have on your radar?
Good afternoon, Nigel. The stock which I have on the radar is Aadhar Housing Finance. It's the largest housing finance company in the low-income housing space. 26,500 crores of AUM, more than 3 lakh loan accounts. They have 591 branches across 22 states, so well spread in India. Asset quality has consistently improved. Gross NPAs have come down to 1.34%. Net interest margin is 8.8%, which is decent. And the loan book is very well distributed across the country. I mean, no single state has more than 15% exposure, so the concentration risk is low. And if you see the last quarter's earnings, it was strong growth. PAT increased by 19%. AUM growth was about 22%. Disbursements grew by 32%. And management expects to have about 750 branches by FY28, which, overall 18 to 20% per annum growth as far as disbursements go over the next 3 years. AUM expected to grow at 20 to 22% CAGR. So I'm expecting an EPS of about 32 for FY27. With this, my target price is about 640, which is close to about 2.5x book value for FY27.
Okay, all right. Amrish, stay on. We'll have more questions for you in just a bit, but we do have to get into a very quick break. Back right after this in a jiffy.
Welcome back. Well, Amrish Palika is still with us. Amrish, a few of these fancied sectors, they are suddenly seeing some selling. Power grid is down close to around 3%. The street is getting a little bit cautious with regard to capex spend. They're saying that the government has showed their intention right now. Last few years was capex. Now they're more consumer driven. They're focusing more on consumption. So because of that, cement related names, Dalmia Bharat is down. You have, a couple of other, power grid is down as well. Any of these are presenting a buying opportunity?
I think in the power space, there's a buying opportunity. But when we talk of cement, the cut in GST is not going to increase the consumption of cement directly. But I think it is clearly a positive for the real estate space, and especially those in the affordable housing space, because that's where it's going to make at least some amount of difference. By rough calculations, it should reduce the cost of construction by about 30 to 35 rupees per square feet. And that makes a difference as far as the affordable and low-cost housing goes.
Amrish, this news surrounding Karnataka, the draft rules to auction liquor licenses. Are there any implications for liquor, stocks like the Alcobev stocks like United Breweries, United Spirits? I mean, is there a possibility that because the auction license is going to cost so much more, there will be a cost increase and consumers may need to bear the burden? And that conversely could hurt the volumes. I mean, is that a way to think about it? What are the implications to your mind?
No, see, the cost of licenses will surely increase the cost of distribution. But then with so many new outlets being opened and new restaurant and bar licenses being given for liquor, I think in the longer run, it should be positive for the liquor trade, because whatever said and done, the increase in number of your distribution points clearly should be positive for the trade. So I'm quite surprised as to why most of these stocks have corrected today.
Okay. Amrish, HAL, we were just discussing with Parikshit that LCA order, mega order, 62,000 crores, nearly 63,000 crores. It's already come through. How do you find the stock now? And are you expecting a bigger pickup in earnings?
See, it's just not HAL. I will talk about defense space overall. I mean, I think execution is still going to be a worry going ahead. I mean, last time there was an issue with Tejas, HAL blamed GE Aerospace, and rightly so. But then the issue is the supply chain. I mean, there can be execution issues going ahead. And now we're talking of shipping and maritime. There's 70,000 crore allocation by the government. Yes, sentimentally very positive. It's just like those huge orders which have been coming to these shipping companies and yards. And the markets have already discounted that, and because of which the stocks have performed extremely well. But like I said, construction of a new shipyard is going to take a decent amount of time. And there are hardly any brownfield shipyards where expansion can happen. It's going to be the greenfield ones, and that's going to take time. And additionally, once you set up a greenfield shipyard, you also require ancillaries close by. I mean, all those issues no one is really talking about. So over the next 2-3 years, I think execution will become a major issue for all these companies.
Thank you, Amrish, for that. We'll come back to you just after this short break on Markets Forward. For now, the markets have extended the fall to below 24,900, and that seems to be where we'll close this Thursday's session, down for the 5th consecutive day. And today, the losses accelerated in the last 2 hours of trade. Particularly, look at that Sensex chart. The Sensex nosediving nearly 600 points, 0.6-0.7% gone on the benchmark indices. Midcap decline was in step with the frontliners. Advanced decline ratio had nearly 2,000 stocks on the way down. And the big drags came in from Trent, Power Grid. Tata Motors got hit on the back of that cyber security incident, which was not insured. IT continues to drag lower. Asian Paints, Shriram Finance, NTPC. Lots of losers. On the way up, you've got this BEL and then a couple of these commodity plays linked to copper.
Yeah, absolutely. I mean, and Hindustan Copper was definitely one of those names, 5-6% on the higher side, doing really well. On the gaining side, I mean, you had names like NewGen and NetWeb, even eClerx for that matter. These were some of the stocks that managed to buck the overall weakness in the market today. Yeah, those are some of your green ticks. But otherwise, I mean, it was a lackluster session for many stocks. Dalmia Bharat with some issues, cropping up on the regulatory front, and a fair amount of weakness. Otherwise, pretty much across the board today. Midcap market losing quite a bit of ground. And you had well over 2,000 stocks declining on the NSE today. So not a great day for the broader space as well. Well, with that, it's curtains on this edition of Closing Bell. Many thanks for watching. Do stay tuned. Markets Forward coming up next.
A sharp fall in the Lal Street in the last 15 minutes sees the market fall for the fifth straight day. The Nifty ends below 24,900, dragged lower by auto, IT. Barring metals and defense, all sectoral indices end lower. In fresh trouble for Tata Motors' arm, JLR, it reports suggest that the automaker failed to secure insurance against the cyber attacks in time, and this could spell a £2 billion hit. Tata Motors, in a statement to the UK Parliament, says the group is in touch with JLR to offer advice and support, adds its sound position to secure additional short-term liquidity. The government's 70,000 crore rupee shipbuilding scheme will build local capacity and bridge the gap in acquiring ships overseas, India's shipping secretary tells CNBC-TV18. He expects 1.45 lakh crore rupees of investments in India's shipping sector.
Well, hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Vamakshi Thoria, and with me is my colleague Reema Tendulkar. Hi, Reema. Today wasn't such a great day as we've been seeing over the last couple of days. The Nifty continues to trade in the red. I believe it's the 5th consecutive day of losses for the benchmark index.
Indeed, it was a tough Thursday, and it's been a tough run, a weak run for our markets, down for the 5th day in a row. And in the morning we had a flat start, and then we were hopeful that 25,000 mark will hold. That gave way, and towards the end, in this late sell-off in the last 1.5 hours, even 24,900 was breached on the way down, and we ended with a cut of about 166 points. So basically what happened is markets from the 3rd week of August saw a rally of about 1,000 points. From 24,400, we rallied to 25,400. It was a clean 1,000-point swift rally. And now with today's fall, we've given up close to about 500 points off that level, a little more than that, in fact. So more than 50% of the recent rally has been retraced. Now we find out today we breached the 20-day moving average. Is there more downside in store? And there were so many stocks which were weak. ITs continue to reel under pressure. In fact, the Nifty IT index is now down close to about 5% for the week. Autos have seen some amount of profit booking. So if you pull up the losers list, it's Tata Motors right on top. That dragged the markets. But even some of the other auto names were a bit subdued in trade. But let's talk stocks.
Well, absolutely, Reema. On to our first segment of the day then. Gaurav is here from the Big Wall with the top movers and shakers of the day. Gaurav, over to you.
Well, let's talk about movers, and in a positive way, because we've got NetWeb, eClerx, Navin Fluorine, Intellect Design, all of which actually gained more than 3%. Other than that, let's also talk about Hindustan Copper. Now, this stock increased almost by more than 5%, and the reason being that now the copper index prices, there we saw copper prices reaching 6-month high level, and this is because analyst warns that in 2026, the output from one of the world's biggest mine of copper will potentially decline almost by 35% as compared to the estimates. Other than that, Newgen Software Tech, here also we saw a good set of number in terms of the stock move because UK arm has agreed to cloud hosting and software contract with TCS. HL also shown some kind of uptick, and the reason being that Ministry of Defence signed 62,370 crores deal with HL for multiple aircrafts. And lastly, let's also talk about Credit Access Grameen. Now this stock, it reached its all-time high level, 52-week high level, and at the same time it also increased more than 1.5% today. Let's also talk about some of the losers. We've got Tata Investments, ABFRL, RK Forging and Home First Finance, all of which declined almost more than 3%. And other than that, let's also talk about Tata Motors. Now this stock was in focus, and the reason being that JLR is expected to get hit of around 2 billion euros because of no insurance coverage. Other than that, as per BBC, let's also not forget that the coverage was also of around 5 million pounds impact on the production pause. Dalmia Bharat, here also we saw the stock decline because company has confirmed the attachment of land worth 377 crores by ED. And lastly, we've got some names like RK Forging, TCS, Praj Industries, all of which hit its 52-week low levels. So definitely some of the movers and shakers, what we have seen in the market throughout the day today.
All right. Thank you so much for that, Gaurav. So those were some of the top stock movers. But let's go across to Ambrish Baliga, who's an independent market expert, and we'll be shortly joined by Ruchit Jain from Motilal Oswal Financial Services. Ambrish, what would be your take on a counter like Tata Motors? We've of course seen the news flow play out today in today's trading session. A £2 billion impact is that is the kind of hit that the company might see on its profitability. So, going forward, fundamentally, what do you think about this particular company, Tata Motors?
It's quite surprising that a company like Tata Motors, belonging to such a large group, did not really have a strong cyber protection policy nor a proper insurance against a cyber attack. And now we believe that this halt has been extended to October 1st. But I think the only silver lining in all this is possibly they will be able to clear the inventory which was there. But in case it goes much beyond October 1st, then yes, I think it will be further negative. And already we have seen the stock correcting quite decently well from the recent highs. So at the same time, I don't expect it to crack much more from here. I think if it goes to levels of about 630, 640, possibly that could be a good level to start buying again. Again, subject to the fact that, this closure should not really extend beyond October 1st.
Okay, got that. The stock is down nearly about 33% from its 52-week high at a time when, say, Maruti is at fresh record highs. M&M has been scaling and virtually at those levels. We also have Ruchit now joining in from Motilal Oswal Financial Services for a quick tech check. Ruchit, weak Thursday. Do you see the weakness persist? I mean, is there more downside? And any, stocks which are on your radar for tomorrow?
Yeah, hi, very good afternoon. Well, we have seen some correction in last 4-5 trading sessions, but now if you look at the broader trend for the stock, we have already seen a higher top formation when we made IF around 25,450, and this correction may lead to formation of a higher bottom as well at the lower side. Now, if we take retracements of the recent up move, then support will come in the range of 24,800 to 24,700 zone. So we believe that some correction might be seen, maybe 100 to 150 points more from current levels. But I know this correction, if it comes in that range of around 24,700, 750, then that would be a good opportunity to take contra trades and go long on the markets, and the risk-reward ratio would then become favorable over there. I think from a sectoral perspective, if we see and clear outperformers have been the metal space. So I think that relative outperformance could continue in the near term, looking at the price volume action. So Vedanta and Hinzink stocks such as Hinzink, Vedanta, in copper, we have seen a good move. So I think metals would be one space where relatively strength could continue into next 1 or 2 days.
All right. Thanks for that, Ruchit. But, let's focus in on Tata Motors. The shares were lower in trade today after JLR's cyber attack incident. Now, reports suggest that the company failed to secure an insurance coverage before the attack and that the company may have to incur losses worth £2 billion. Sudarshan is here with the timeline of the incident and how it is set to impact Tata Motors. Sudarshan.
So we had earlier reported about the impact that company might face due to delay in the production. But now, as per the several reports, and Financial Times reported majorly today early in the morning that because of the company not having insurance coverage ahead of cyber attack, it might have an impact of £2 billion. And that is in addition to the daily impact that company has been facing of £5 million because of production delay. So this is the main reason over the last 2 sessions you have seen a big fall in the stock in the last 2 days. It's down almost 6 to 7%. Now, if you take a look at the timeline of this cyber attack and post that company's comments. So, cyber attack happened on 31st of August. First comment company made on September 2nd saying that it's looking into the issue and will be restarting the production very soon. And after that, second statement came on September 10 talking about that some data might be impacted because of that. And after the latest statement came on September 23 in which company has said that it has extended the production pause till October 1. And on the resumption of production, it has said that it will be resuming in a phased manner. Now, if you do a simple calculation, so £2 billion impact because of no insurance coverage, £5 million daily impact because of the delay in production. So it's 2 point almost, if you do the calculation, it would be much higher than the profit after tax that company reported for FY25, which was £1.8 billion. So that would be more than that. Now, why this is important for Tata Motors? Because JLR forms nearly 70% of total consolidated revenue for Tata Motors. Now, apart from the cyber impact, there was another news came that is attributing to Guardian. It is said UK government is looking to resolving this issue. How? It's considering several options. One of the options is that UK government will buy parts from suppliers to JLR, and once JLR resumes the production, it will supply it back to JLR. In that way, it wants to help the government. Now, JLR CEO has replied to UK Parliament Committee in which he has said that Tata Group is in close touch with JLR to offer advice and support, and JLR has already paid £5 billion and is in good position to secure any additional liquidity if it is required. On cyber attack impact, he has said it's premature to comment anything on that. We'll have to see how exactly it pans out. But as far as stock is concerned, it remains under pressure.
Thank you very much for that. Ruchit, a quick word on Tata Motors or any other auto stocks where there could be a trade?
So Tata Motors relatively, it's not only in the last 1 or 2 days, but if you look at last few months, relatively it has been an underperformer within the auto basket. So as of now, no signs of trend reversal. So even in every pullback move, the stock is facing resistance around its 200-day exponential moving average. So overall trend is not positive for Tata Motors, but yes, within the auto space, post the GST reforms announcement, we have witnessed very good momentum on the higher side. just a minor corrections could be seen in the auto stocks, but it remains a buy and dip sector for us. And stocks such as Ashok Leyland or Maruti, where relative outperformance have also been supported by very high volumes in the recent past. I think those should be the counters which one can keep a buy and dip approach.
All right, Ruchit, but let's focus in on the other big story of the day. Karnataka government is set to draft rules for auctioning liquor licenses. Now, as per the Chief Minister Siddaramaiah, the auction is expected to boost revenue amid ongoing fiscal pressures. Shilpa is joining us with more details on this. Shilpa?
Well, that's right. The Karnataka state government has decided that defunct liquor licenses will now no longer be renewed. Instead, they'll be auctioned online. Now, in all, about 579 licenses that lapsed or were never renewed will now go under the hammer. And this includes retail liquor shops and even bar licenses. Now, to facilitate this, the government has created two new categories. CL2A, which would be for retail shops, and CL9A for bars and restaurants. Now, this move is expected to rake in nearly 500 crore rupees for the state coffers, and this comes at a time where the government is looking to shore up additional revenue amid a 40,000 crore target of excise revenue collection this fiscal. Now, the National Restaurant Association of India's Bangalore chapter has welcomed the decision, pointing that the industry has long been asking for more licenses. They say that this auction move is a step in the right direction and is hopeful that its other proposals also of amending some of the current rules will also be taken up and make doing business in the state easier. Back to you.
Thank you very much for that. The other big story is the surge in copper prices. In fact, the commodity copper has hit multi-month highs after a report declared force majeure at the Grasberg mine in Indonesia. Nigel is here joining in to tell us what caused the rise in copper prices.
Well, copper prices have surged close to around 4% overnight, and that's what's taken copper prices to multi-month highs. Now, the rally comes after Freeport declared a force majeure at its Grasberg mine, that's in Indonesia. Now, this is one of the world's largest copper mines. The Grasberg mine, with a production capacity of close to around 800,000 tons, ranks as the second largest copper mine globally and accounts for approximately, very roughly, 3 to 3.2% of the world's mine copper supply. Now, Freeport's force majeure, well, that declaration has led close to around a 4% cut in their copper sales volume guidance that they given earlier. That's what sparked concerns with regard to supply constraints. And remember, this follows the earlier disruptions in September when Hudbay Minerals copper mine in Peru that had faced operational challenges due to the political unrest, further tightening the copper market. Now, after 2 years of relatively subdued performance, copper prices actually have made a comeback with more than 20% gains in this year itself, that's 2025. Meanwhile, silver prices have also surged, hitting the highest levels we've seen all the way since 2011. That's what's reflecting a broader strength in industrial metals as well. So silver has moved up, copper as well has moved up, and the only equity play on copper price move is Hindustan Copper, while Vedanta, via Hindustan Zinc, that's the only equity play on silver prices. So explains why these stocks up and about in today's session.
Well, thank you so much for that, Nigel. But the cabinet has approved shipping and maritime projects worth 70,000 crore rupees. This includes financial assistance and a development scheme for shipbuilding worth nearly 25,000 crore rupees. Now, the government has also cleared a maritime development fund worth 25,000 crores. In conversation with CNBC-TV18, the shipping secretary T.K. Ramchandran said the government will also incentivize cost of acquiring ships. Listen in.
Shipbuilding Financial Assistance Scheme builds upon an earlier scheme, which was the first version of the scheme. And the idea is to provide assistance to shipyards to bridge the gap between the cost of acquiring a ship abroad versus acquiring it in India. So this difference was about 15 to 20%. So this scheme incentivizes the cost of acquiring a ship, and it gives you a subsidy of 15 to 25% depending on how big the ship is and whether it is a green vessel and so on.
Well, that was the other big story. Amrish, but just getting back to Hindustan Copper, because we saw a big surge in price. Do you like it at this juncture?
Yeah, because copper prices are anyway at a 6-month high. And this disruption in the copper market because of the Indonesian mine, I think that's going to last at least for the next 6 to 9 months. So I expect that the copper prices will continue to be high, at least for the next couple of months. And Hindustan Copper would be the best buy.
Absolutely. Thanks for that, Ambrish. But Ruchit, I'd like to ask you about NetWeb. That stock is almost 6% higher today. Of course, there were a couple of, wins for the company. It's perched at an all-time high. So what is your take on NetWeb?
The overall trend, no doubt, remains positive. We have seen a good high top, high bottom structure on the daily chart. And you can see that last 4 or 5 trading sessions when the broader markets have corrected, the stock has still been doing relatively quite well. So I think this trend remains intact. The only thing is that since the stock has already rallied, keeping a stop loss or the risk reward ratio of fresh longs won't come over here. So I would recommend to hold on any existing long positions and ride this trend. And in case of fresh buying, keep a buy and dip approach. If you get any kind of dips along with the markets in the near term, use declines as buying opportunities.
Okay, gentlemen, great chatting with you this Thursday afternoon. Get into a break. On the other side, we'll get you the top corporate voices and the big events to watch tomorrow. Stay tuned. Welcome back. You're watching Markets Forward, and now let's run through the key corporate voices that we had on our show, on our channel today. So first up is Happiest Minds Technology. Now, we chatted with them about the H-1B visa issue. They believe this visa hike is a minor dampener for U.S. operations, but they do expect that the industry will be able to overcome it quickly. Also, the company said that their impact is pretty much negligible, or not much, because they sent only 4 employees on H-1B visa last year and 3 this year. And also because of the uncertainty created by H-1B visa, they do not expect any delay in deal closures. And that's not all. The company also said that the industry is hoping for a better second half, and they maintain their FY26 guidance of a double-digit constant currency revenue growth.
All right, next up is Laurus Labs. The management is upbeat on CDMO opportunity for Indian companies. However, to capture these opportunities, the industry seeks ease in regulations. Meanwhile, Laurus Labs is anticipating significant year-on-year growth in the CDMO segment. Also, it's on track to hit 2,000 crore rupees in CDMO revenue in FY26. The company is confident of maintaining margins at 25%. However, the drug maker added that it is not in a position to provide a full year guidance yet.
Next up is AWL Agri. The company's management tells us that the GST cut has been highly beneficial from a consumer point of view. They add that the consumption remains strong, aided by a good monsoon, better Kharif output and lower inflation. They also expect a strong second half with robust consumption trends continuing till March. They're targeting 9,000 to 10,000 crore rupees in turnover in their food business. This is by FY27, while the overall company turnover is projected to cross 60 to 65,000 crore rupees this year. The company adds that margins will also improve going forward, driven by higher consumption.
And lastly, we spoke to Poly Medicure. The management wants to build a substantial business in the US in the next 4 to 5 years. It's currently generating about $3 to $4 million from US operations and aims to hit $15 to $20 million by 2030. Now, they maintain its domestic growth guidance of 30% and export growth guidance in the range of 5 to 10%. That's not all. It expects GST rate cut on medical devices to drive consumption. The medical device maker recently signed a definitive agreement to take control of Switzerland-based Medistream SA. Commenting on acquisitions, the management said it expects revenues of the acquired entity to double in the next 5 years.
All right, and before we wrap the show, let's bring you the key market events to prep you up for tomorrow. Gaurav is standing by.
Well, yes, first let's talk about some stock-specific actions. First, let's talk about Vodafone Idea because AGR case is going to happen tomorrow. Supreme Court is going to hear AGR, the plea of Vodafone Idea on AGR dues worth more than 5,000 crores. Remember the last time Supreme Court asked the government to bring finality to the issue, and government also owns around 49% stake in the company. So definitely one thing to watch out for. Other than that, Sona BLW Precision Forging. This company is also in focus because here also Delhi High Court is going to hear case about Sanjay Kapoor's assets. Priya Kapoor has moved to Delhi High Court to submit details of Sanjay Kapoor's assets in a sealed cover, and the hearing is going to happen tomorrow. Other than that, new listing are going to happen for GK Energy Limited and Satvik Green Energy. So definitely watching out of these candidates. And lastly, from the global forefront, let's also not forget that our neighbor country, Pakistan's PM, Mr. Shehbaz, is going to meet Mr. Trump at White House along with Field Marshal Mulir. So definitely we are also watching out if anything substantial comes out from this news flow. But as of now, definitely watching out on all these events for tomorrow.
Well, thank you so much for that, Gaurav. We'll be watching out for all of those important events. But with that, it's a wrap on this edition of Markets Forward. From Rima, me and everyone who put this show together, thanks for tuning in. We'll be back with more news and updates on the other side, so don't go anywhere.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: the Sensex and the Nifty decline for the fifth straight day. A sharp sell-off in late trade takes the Nifty below 25,000. Foreign investors have pulled out more than $21 billion from India since the start of 2025. The rupee remains largely steady against the dollar, even as it remains near record lows. The Indian currency has weakened by more than 3% in the first 9 months of 2025. Gold prices remain steady near record highs. Silver trades at 14-year high. Copper prices surging to 15-month highs after an accident at the world's second largest copper mine in Indonesia. Shares of Tata Motors tumble as Jaguar and Land Rover stares at fresh trouble. Financial Times reports JLR faces a £2 billion hit as it was not insured against cyber attacks. The company has shut down its factories since the start of this month and is hoping for a phased restart from October. Commerce Minister Piyush Goyal says India will buy more energy products from the US as trade talks continue. Goyal also meets the president of the World Bank and top US business leaders in New York. President Trump is set to host Pakistan's Prime Minister Shehbaz Sharif and Army Chief Asif Munir at the White House later today. Defence Ministry signs a 67,000 crore rupee contract with Hindustan Aeronautics to buy 97 Tejas fighter jets. India will manufacture AK-203 rifles in collaboration with Russia, says Prime Minister Modi, stresses on the need to decrease dependence on foreign countries. The government will provide a subsidy of up to 25% to incentivize the cost of acquiring a ship. The Union Secretary of Ports and Shipping says the move is aimed at bridging the cost after the cabinet clears a 70,000 crore rupee package to bolster maritime development. The Karnataka government issues new draft rules to auction defunct liquor licenses. The move is likely to raise over 500 crore rupees in the first round, where 579 licenses are set to be auctioned. A majority of India Inc. plans to add capacity through fresh investments in the next 1 year. Around 80 CEOs polled at the CII National Council are upbeat on capacity expansion in the near term. Well, let's head straight to the day's market action. The Wall Street declining for the fifth day, ending at the day's low point. The Sensex and the Nifty saw cuts of over 0.5% today. The Nifty ending below 24,900. The Nifty Auto Index lost almost 1%. IT down 1% as well. Nifty Metal closing just about in positive territory. So the markets dragged lower by auto and IT stocks. Also, for the fifth day in a row, we've seen the IT index closing in the red, but TCS hitting a 52-week low. Except for metals and defense stocks, all sectoral indices closing in the red today. Now, Indian markets have seen foreign investors pull out over $21 billion in the first 9 months of this year. The markets are underperforming most of the global players. Nimesh is here with a snapshot of how India fares compared to the rest of the world and how other asset classes stack up against stocks. Nimesh.
Well, Indian markets have relatively underperformed not only the global equity markets but also the commodities market since the beginning of the year. Just look at the data. Indian markets are up just 1-2% in dollar terms since the beginning of the year. Compare this to the US markets. The US markets on an average are up between 10 to 15%. So that's a big underperformance there. The bigger underperformance comes with the Asian markets. All the Asian markets are up between 15 to 35% since the beginning of the year in dollar terms. So big underperformance to Asian markets as well. Even if you compare the European markets, India has relatively underperformed. Most of the European markets are up between 18 to 30% since the beginning of the year. So that's the equity underperformance. Even if you look at the commodities market, India has relatively underperformed. Gold is up 42.5% since the beginning of the year in dollar terms. The even bigger surprise is in silver. The silver is up 52% since the beginning of the year in dollar terms, and even copper is up 18%. That potentially explains that the FIIs are big sellers and it's not the preferred market so far as far as the FIIs are concerned. The FIIs have net sold nearly $21.5 billion since the beginning of the year. It's the highest among the EMs market. The next big market is the Korean market where they've sold nearly $20 billion. So India is relatively underperformed not only the global equities but the commodities as well since the beginning of the year.
All right, Nimesh, many thanks for joining us. The Indian rupee, meanwhile, recovered from an all-time low against the dollar. This as the American currency weakened in overseas markets. Dealers tell CNBC-TV18 the RBI intervention yesterday and the day before supported the rupee. So that's the rupee for you. And gold prices holding steady near record highs as investors await key U.S. economic data for further insights into the Federal Reserve's monetary policy. A slightly weaker dollar also lent more support to the bullion. Silver prices, meanwhile, holding round 14-year high for silver as traders put their bets on the precious metal. This after the Fed said that further rate reductions are likely to be needed. Meanwhile, copper prices at a 2-month high, while futures are trading at a 15-month high. The metal prices surged 4% overnight, this after an accident at the world's second-largest copper mine in Indonesia, that bringing in fears over supply, and that has taken prices higher. But shares of Tata Motors tumbling in trade as Jaguar and Land Rover stares at fresh trouble. The Financial Times reported that JLR is facing a £2 billion hit as it was not insured against cyber attacks. The company has shut down its factories since the start of this month and is hoping for a phased restart from October. Sudarshan joins us now to explain what exactly is going on at JLR and why the troubles continue. Sud.
So we had earlier reported about the impact that company might face due to delay in the production. But now, as per the several reports, and Financial Times reported majorly today early in the morning that because of the company not having insurance coverage ahead of cyber attack, it might have an impact of £2 billion. And that is in addition to the daily impact that company has been facing of £5 million because of production delay. So this is the main reason over the last 2 sessions you have seen a big fall in the stock in the last 2 days. It's down almost 6 to 7%. Now, if you take a look at the timeline of this cyber attack and post that company's comments. So, cyber attack happened on 31st of August. First comment company made on September 2nd saying that it's looking into the issue and will be restarting the production very soon. And after that, second statement came on September 10 talking about that some data might be impacted because of that. And after the latest statement came on September 23 in which company has said that it has extended the production pause till October 1. And on the resumption of production, it has said that it will be resuming in a phased manner. Now, if you do a simple calculation, so £2 billion impact because of no insurance coverage, £5 million daily impact because of the delay in production. So it's almost, if you do the calculation, it would be much higher than the profit after tax that company reported for FY25, which was £1.8 billion. So that would be more than that. Now, why this is important for Tata Motors? Because JLR forms nearly 70% of total consolidated revenue for Tata Motors. Now, apart from the cyber impact, there was another news came that is attributing to Guardian. It is said UK government is looking to resolving this issue. How? It's considering several options. One of the options is that UK government will buy parts from suppliers to JLR, and once JLR resumes the production, it will supply it back to JLR. In that way, it wants to help the government. Now, JLR CEO has replied to UK Parliament committee in which he has said that Tata Group is in close touch with JLR to offer advice and support, and JLR has already paid £5 billion and is in good position to secure any additional liquidity if it is required. On cyber tech impact, he has said it's premature to comment anything on that. We'll have to see how exactly it pans out. But as far as stock is concerned, it remains under pressure.
So many thanks for joining us. Trouble there for Jaguar Land Rover. Commerce Minister Piyush Goyal has said that India will buy more energy products from the US. Minister Goyal is on his first US visit since the 50% tariffs were imposed on India by the Trump administration. The Commerce Minister met Indian origin executives including World Bank President Ajay Banga, IBM CEO Arvind Krishna and FedEx CEO Raj Subramaniam in New York. Goyal also met Carlyle CEO Harvey Schwartz, Warburg Pincus Chairman Chip Kay, Blackstone's Chairman Stephen Schwarzman, among others. Pakistan's Prime Minister Shehbaz Sharif is expected to travel from New York to Washington to meet President Trump today. This will be their first meeting at the White House since 2019. Just 2 days ago, President Trump, in his UN General Assembly speech, once again claimed credit for the ceasefire between India and Pakistan. Pakistan has backed Trump for a Nobel Prize, even as India has refuted claims of any third-party involvement in the ceasefire. Earlier this year, Trump also hosted Pakistan's Army Chief Field Marshal Asif Munir at the White House. We told you first, and it is now official, the Defence Ministry has signed contracts with HAL worth over 62,000 crore rupees. The deal will entail the procurement of 97 light combat fighter jets. Parikshit is standing by now with more. Parikshit, take us through this big contract.
Well, very symbolic. This comes just a day before the Indian Air Force retires its MiG-21 fleet, the aging fleet. And now this contract for 97 LCA Mark 1A fighter jets has been signed with HAL. Now, this had been given government approval on August 19. A commercial contract has now been inked. This is a contract worth around 62,370 crore rupees. The deliveries would commence in 2027-2028 and would be completed over a period of 6 years. Now, we have seen how deliveries of the previous Tejas fighters has been delayed. The order for 83 Tejas fighters, which had been placed in 2021 February, has been pending delays, and now we believe that the first 2 fighter jets from the 2021 order will be delivered in the month of October. But the new order for the 97 fighters has significant improvements. For example, it has 64% indigenous content. It has 67 additional items incorporated over and above the previous LCA Mark 1A contract, which was signed in January 21. The integration of advanced indigenously developed systems such as the Uttam Active Electronic Scanned Array Radar, Swayam Raksha Kavach and Control Surface Actuators will all increase the self-reliance and Atmanirbhar component. And we will need all this indigenous technology in future conflicts as well. The project, we're told by the Ministry of Defence, is going to be supported by nearly 105 Indian companies. And this is in the Buy Indian category. It will generate close to 11,750 direct and indirect jobs. The ability of HAL will also, to deliver these fighter jets will also depend on how fast and how soon the GE engine maker in the US delivers on its obligations to HAL. There have been delays in the past, and the government has been in talks with the US to expedite deliveries. So let's hope that everything is on track and the delivery of these fighter jets also takes place on time.
All right, Parikshit, many thanks for joining us. And speaking of defence, Prime Minister Modi says India will commence the production of the AK-203 rifles in collaboration with Russia. Speaking at the UP International Trade Show, the Prime Minister said that India's defence forces want to decrease their dependency on foreign countries. A factory will be set up in UP to make the AK-203 rifles.
भारत में ही हम एक वाइब्रेंट डिफेंस सेक्टर डेवलप कर रहे हैं। पुर्जे पर मेड इन इंडिया की छाप हो, हम ऐसा इकोसिस्टम बना रहे हैं और यूपी इसमें भी बड़ी भूमिका निभा रहा है। बहुत जल्द रूस के सहयोग से बनी फैक्ट्री से AK-203 राइफल का उत्पादन शुरू होने जा रहा है।
Well, a majority of India Inc. is planned to add capacity through fresh investments in the next 1 year. Around 80 CEOs polled at the CII National Council meeting are upbeat on capacity expansion in the near term. Take a look.
You know, on the back of the measures already undertaken, is there confidence in industry to start the capex cycle? Are you going to be investing in adding fresh capacity, in setting up new capacity in the next 12 months? Those of you who intend to spend money in adding capacity, if you could raise your hands in the next 12 months. Okay, so quite a few. Let me hop across to Sunita Reddy. Sunita, of course, you've got a big expansion plan as far as Apollo hospitals are concerned, but that's a sector that is, of course, poised for growth. So you feel confident of being able to spend over the next 12 to 18 months?
I'm very confident because I believe the structural demand is there, intact in the market.
What is the quantum that we can expect you to spend in the next 12 months?
12 months, I think you should look at it 36 months for a long term.
Okay, 36 months.
6,000 crores.
6,000 crores in the next 36 months for the Apollo Hospitals Group. Madhav, what would your capex number be for the next 36 months? You can decide which number you want to go with.
It's about 4,500 crores for over the next 24 months.
Okay, 4,500 crores over the next 24 months. Deepak Shetty, let me come to you. The JCB has taken on a whole new meaning in this country, but nevertheless, let me ask you, sir, what is the plan as far as the capital goods sector is concerned? Infrastructure front loading, we've seen that across both the central government as well as states. What are you picking up in terms of demand?
The demand comes from two sectors. One, the central government projects, particularly driven by NHAI, but a big role is played also by the state government. So we have seen some great progress on the central government side, new projects being announced last few days by the Honorable Roads and Transport Minister. Where we are struggling a bit are the investments by the state government.
Okay.
And that is something which I'm sure with the improvement thanks to GST2, more collections, etc., particularly the rejuvenation of the rural economy, that will start improving. So that is something that we are hoping for.
So, in light of what you're seeing at this point in time, CapEx plans for you?
Yeah, absolutely. At JCB, we have continued to invest. Even during COVID times, we built a new factory. And we are not only looking at the business in India, we are exporting to 135 countries, so we are looking at the global market. And we'll continue to invest as we are doing both, not only in capacity, capability, but also in R&D.
But do you feel the need to add capacity at this point?
Probably in the next 36 months' time, not immediately.
Well, that's the mood of India Inc. as far as CapEx plans are concerned over the next 12 to 36 months. We'll head into a break, but up next, the Karnataka government has issued a new draft rules to auction defunct liquor licenses. That and more when we get back. Well, the Karnataka government has drafted new rules to auction defunct liquor licenses. Nearly 579 licenses will be auctioned via an e-auction system, with 2 new license categories being created. As per reports, the state government expects to rake in close to 500 crore rupees through the auction. Shilpa has more on what is being planned. Shilpa.
Well, you're right. The Karnataka state government has decided that defunct liquor licenses will no longer be renewed, but instead they'll be auctioned online. In all, about 579 licenses that lapsed or were never renewed will go under the hammer, including retail liquor shops and bar licenses. Now, to facilitate this, the government has created 2 new categories: CL2A, which should be for retail shops, and CL9A, which should be for bars and restaurants. Now, licenses will be auctioned online and awarded to the highest bidder. Now, this was first announced during the FY26 budget by the Chief Minister, and the move is expected to rake in nearly 500 crore rupees for the state coffers. It's a time where the government is looking to shore up additional revenue and even meet its 40,000 crore target of excise revenue collection this fiscal. Now, Karnataka's freeze on new CL2 or CL9 licenses since 1992 had created an artificial scarcity, and this was pushing permits into the grey areas, which ran into crores, while the state only earned about 4 to 6 lakhs in annual fees. Now, this is expected to change with this move, and the National Restaurant Association, or the NRAI, of which the Bengaluru chapter had welcomed this decision because this was an ask from them, and they pointed out that the industry has long been asking for more licenses to be coming into the market, and that this will bring down the cost of licenses for the industry and helping them pass some of those costs on to consumers as well. Now, I spoke to Nakul Rajaram, who's the secretary of the Bangalore chapter of the NRAI, on its reaction to the move. Listen in.
With more supply of licenses coming into the market, we will see a drop in the net rent per license, which would be highly beneficial to restaurant and bar owners. It's highly deregularized, Shilpa, so the rental depends on which part of town you're in. But with more licenses coming in, we could see a drop of anywhere from 10 to 30%, depending on how many licenses are being issued.
Well, that's Karnataka's new liquor license auction policy. Now, the Department of Telecom holding the latest round of stakeholder advisory talks with industry leaders today. Top executives from Jio, Bharti Airtel, Vodafone Idea attending the meeting. Ashmit is here with more details. Ashmit, take us through what was the agenda of this meeting.
Well, a high-level meeting being called by the Telecom Minister, Jyotiraditya Scindia. The Stakeholder Advisory Committee in attendance were leaders from the telecom industry, the likes of Akash Ambani, the chairman of Jio. We also had Abhijit, as far as the Vodafone CEO is concerned. We also had senior leadership from Bharti Airtel, Nitin Bansal from Ericsson, from Cisco. The main thrust of the conversations we're given to understand was about the upcoming India Mobile Congress. It's around the corner. October 8th is when it begins. It is likely to be inaugurated by the Prime Minister himself. So a large thrust of the conversation about the IMC, about the announcements that are likely, about the investments that these companies are likely to make going forward. So a high-level meeting being called. These meetings, for the benefit of our viewers, are in a matter of speaking routine in nature. They're called in regular intervals. This time again, it comes not only on the cusp of, however, the IMC, which is around the corner, but it also comes less than 24 hours before the Supreme Court is scheduled to hear the AGR petition. Mind you, Vodafone Idea had filed a petition. This was taken up in the last week. And interestingly, the DOT for the very first time came out in support of granting relief to Vodafone Idea, whereby they had said that, look, the facts of the on the ground have changed, that we now have skin in the game. The government now enjoys a 49% equity stake in the company, and therefore this is an issue that merits the indulgence, or those were the words used, the indulgence of the court. The court needs to indulge the government, needs to indulge the Vodafone Idea to come out with some form of solution. So high-level talks being done. Of course, the next cue to watch for will be the hearing in the Apex Court, which is just a few hours away from now. Tomorrow morning is when the Supreme Court will be taking up Vodafone Idea's petition for relief.
Well, that is going to be an important one to watch. Thanks very much, Ashmit, for joining us. The 0.5 percentage point hit to India's GDP because of the US tariffs will be balanced out by the push to consumption from GST and rate cuts. That's the word in from PD Singh, the recently appointed CEO of Standard Chartered India, who spoke with Lata. When asked if he would be interested in acquiring a stake in an Indian bank like Sumitomo has done, PD Singh said that his bank prefers organic growth.
Foreign banks do play a very, very important role in building India. As you rightly said, foreign banks bring in foreign investment into the country. We do, in fact, the Standard Chartered has done more than 30 roadshows, met more than 300 MNCs. The Make in India story is also something that foreign banks have helped grow a lot. When MNCs come into the country, they require a lot of local expertise, financing, understanding of the local regulation as well. So again, play an extremely important part in nation building. We've been here for 170 years and will be here for many, many years more to come.
No, but my question is, will you take over? Is that...
So there is an option always available for a foreign bank to consider expansion by different routes. As of now, I think we are looking at the organic expansion route. In terms of subsidiarization, which is the other question you asked, again, that is an option available. At this stage, we don't see much benefit of that, but it is an option available that can be used at any point of time.
Okay. Other big thing is, the huge amount of geopolitical issues, the H-1B, and the fear that the Hire Act may also come. How you're a very big banker for GCCs. Have you seen any impact?
Yeah, I think it's too early to say. As the headlines change every morning, we are bracing to see what the different solutions to this could be. But as of today, it's very hard to check on the impact. The GCCs are looking at various scenarios, but I do think again it is an evolving situation and which we hope will be resolved soon.
Well, that's Standard Chartered's PD Singh there. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a minute.
Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. The equity market has been testing investors' patience over the last 12 months. The Nifty is actually down 3.5% over this last 1 year. And the Midcap index is actually down 5%. If you look at the small cap index, well, even worse, it's down about 7%. So it's been a tough year, to say the least. Now, in the last several months, the market has had to, of course, grapple with many, many issues and challenges, including, of course, the US tariffs, the whole tariff storm, shifting US policy, and some will say perhaps, a bit of anti-India policy coming in from the United States. There are shifting geopolitical equations. We've had to deal with the Indo-Pak war. And of course, there is the issue of lackluster corporate earnings. So all of this has meant a fairly challenging last 12 months where investors have had to keep their patience, and they have kept their patience so far. Now, does the onset of the festive season and the mega GST reform, does it really mark a turning point in the fortunes of the equity market? And if yes, then do we as investors need to reassess our MF strategy, our portfolios to be in sync with the times? Well, today we have a very special guest joining in to answer some of these slightly complex questions and to make it simple for us in terms of a 3-year mutual fund portfolio strategy. Ashish Gupta, CIO at Axis AMC, is with us. Usually we always pull in Ashish for all of these complex market issues, some of the ones that I highlighted in my opening remarks. But today Ashish promises to simplify it all down for someone who's only looking at mutual funds in at least a 3-year horizon. Welcome to the show, Ashish.
Thank you for having me, Sabhi.
So, Ashish, you tell us. I think my opening remarks were a summary of everything we've discussed with you on our market shows in the last 12 months. How are you feeling right now? Semi-optimistic, more optimistic, less optimistic? How do you feel as we get into the festive season?
No, certainly more optimistic. I think what's happened in the last 3 to 6 months, and I know it's very difficult to kind of be constructive consistently, because the amount of news flow that we have seen, the amount of uncertainty and unpredictability that has come our way, both in India and globally, not just last 6 months, but last couple of years, has been unprecedented, right? There have been wars, tariffs. Now, recently, there's been talk of H-1B visas, etc. But I think for investors, what's important is that we should continue to look internally. I think for India, domestic growth is the primary driver of demand. And I think on that front, since beginning of the year, there have been multiple positive factors. I think since January, there has been a decisive turn in RBI policy. And as you know, for me, some of that has the monetary side, and the banking side is always kind of superimposes itself on my views. But since beginning of the year, we have had a very large infusion of liquidity. We have more than 100 basis points of rate cuts in India, and there is potentially some more that may come through in the coming months. We have seen government getting much more active in terms of spurring demand. In the budget, we saw income tax cut for the significant part of the population, and that has been topped up. The direct tax cut has now been supplemented by indirect tax cut in form of GST, right? And really 99% of items that were there in some of the highest slabs, GST has been meaningfully brought down. This is coming at a time where already in the rural economy that had been sluggish post-COVID. After 2 good monsoons, we had seen better activity in the last 6-9 months. So we were seeing already some signs of pickup in demand revival. If you, for example, see the demand for Enrega work, that is down nearly 25% last month. So you are already seeing some of that mass market demand pickup. And now if these other factors also start contributing to it, I think clearly we will expect GDP growth, we would expect corporate earnings growth in the next 6 months to kind of look much better than the last 6-9 months, where we have seen significant amount of earning downgrade. This is not to say that we don't have the headwinds of the global uncertainty, whether it is on account of tariffs or actually more importantly, the fact that next 12 months don't look great for the global economy, right? So those uncertainties will continue to weigh, but I think for us, really, domestic growth is a more important driver of the economy, and that certainly is looking up.
Yeah. You know, Ashish, I'll tell you, and these are conversations we hear around ourselves. I've definitely heard it in my friend and family circle. I'm sure you have, right? When investors look at their equity mutual funds, that part of their portfolio, most of them are static, maybe slightly lower, and then you've waited for 6 months, now 12 months. We all know that, yes, we need to remain invested, which is what investors have done, right? We've not seen massive outflows from equity funds. So that maturity is there. But investors are also now contrasting that performance with gold, with silver. Some are saying there are new asset classes like REITs, and the regulation for REITs is now getting, easier. So people are asking, should I be diversifying away from equity? Has that time come? Should I look at these other asset classes as well in a more meaningful manner? Till now, it was just buy Indian equities and that's your road to riches. So is that changing on a more structural basis?
I think I will certainly vouch for diversification. I think it is, particularly if you are investing for long periods of time, you need to have a diversified portfolio. And particularly if the asset classes, as you mentioned, are uncorrelated, right? So I think that kind of really improve the expected return of the portfolio. Of course, the question can be, should gold or silver be 5% of your portfolio, or 10% of your portfolio, or 15% of the portfolio, right? So I think those are bigger questions, but I think certainly you should have some of that in your portfolio. I think it's also a good hedge in terms of the risk from sustained currency depreciation. I like REITs as a product, both REITs and InvITs. They are good long-term cash flow generating assets. And given the fact that equities, particularly on a 3-5 year basis, have given very strong returns already, and even as I'm optimistic about equities, as I mentioned, going forward, we may not necessarily repeat the kind of returns people have seen in the last 5 years, right? So as in mutual funds,
that's a headline. That's a headline. He's the top boss who's picking all the stocks, and he's responsible for all the investments at Axis AMC, and he's being very realistic. Ashish is telling us, don't look at the hindsight. The last 5 year returns cannot be always projected in the future. We hear you loud and clear. So therefore, Ashish, it's so important to have this conversation today to reset some expectations and reset the portfolio, if at all if it's needed. Now, before we come to the big debate today on the show is consumption or capex, or should you do both? Before I come to that, let's talk about the headwinds which still exist for Indian equities. And US policy definitely seems to be that one headwind. Every time we think there is a thaw, now they're exchanging tweets and these social media messages, and now the trade deal will get done. One new missile gets fired, and the latest one is this H-1B visa issue. How do you sum it up, not just for the IT sector or IT stocks, but overall? I mean, is this a new overhang now?
So it is an overhang, but for frankly, medium to long-term investors, I don't know how much can we really invest on this basis, right? Most of these theses turn on their head within 6 months, if not sooner, right? And I'm sure you have seen the news flow where India was kind of being penalized for buying Russian oil, and now I think the focus is on other countries and European Union, etc. Right? What will happen in US elections? I think now they are 4 years away, right? So I think we cannot take any of these policies as long-term. In fact, you would have seen news flow that the government expects by November they should get to some sort of trade deal with India. So I think we have to be very careful, particularly as you said, if people are looking at a 3-year investment in mutual fund, make decisions based on such news flow, right? So these will drive equity market reactions over the next 6-9 months. But beyond that, continuity of these policies, to me, is very uncertain, because whichever way you cut it, right? We are saying that these US policies are harmful for India. But actually, if you see the real harm because of tariff is on the country itself, right? So, so what will happen to the US economy, because there the effective tariff rates have literally gone up from single-digit percentages to high teens. So, so I think as that impact comes in, they may have to rethink policies themselves. So, so I think we should not make long-term investing decisions based on all these news flow. I think we have to remain focused. Where do we see structural advantages? Where do we see? I think India and Indian companies have competitive advantages, and that is what will stand the test of time.
Okay, perfect. We take your point completely that we can't be, basing our investment decisions, that too 3-5 year, out investment decisions based on everyday news flow. So then how do we take a holistic view of our portfolios in this very dynamic market? And as I mentioned, that consumption versus capex debate, we dive straight into it, but after a very quick break. Back with Ashish in just a moment.
Let's talk money. Money.
Well, welcome back. You're with us on Let's Talk Money. And this week we are in conversation with Ashish Gupta, CIO at Axis Mutual Fund, who's helping us figure out how we need to take a complete a view of our portfolios, look at our mutual fund investments, looking at the very dynamic market and the number of issues which it is grappling with. So one thing Ashish has already established is don't get carried away every time you hear a new tweet or a new, soundbite from the US. Stay focused on the medium to long term. So on that, Ashish, now I want to get to the heart of this. What we've seen with these GST reforms, with maybe the income tax cuts, is for the first time I've seen in the last, I think, maybe 7, 8, 9 years, that there is interest now in the consumer side of the market, mass consumption. But sure, is this a passing trend, just some sector rotation, or is this something more serious that we should take note of as investors?
So, I think consumption always has been the underpinning of India's growth story, right? So 60% of GDP, as you know, is driven by consumption. Even as you mentioned, in the last 7, 8 years, consumption as a theme may not have been very exciting, but there has been several pockets within that have provided a lot of growth opportunities, right? So, we have had pockets of discretionary consumption doing well. We have had changing consumption patterns benefiting us. We have had, and I count stuff like real estate, hospitality, all part of the consumption basket. They have done very well over the last few years. You have had a new should I say, channels of consumption like quick commerce come to the fore. So I think as a broad theme, it might not have done well, but there have been pockets that have continued to do well. And I think that will stay true. I do believe that overall consumption expenditure growth that had slowed down to about 6-7% in the past 12 months is set for the pickup for the multiple reasons that we spoke about earlier. But within that, I think it's more important to focus on which are the new forms of consumption, which are the businesses and companies that are gaining market share, because that's really that will drive returns. We have seen some early signs of broad-based consumption and GST cut announcements boosting the theme. So if you see in the last 6 months on the consumption side, we have seen the index go up nearly 13-14%. And it's also relative to where the valuations were, right? So many of these companies were trading at lower multiples compared to the kind of optimism that was there in other parts of market, including on the investment side. But again, on the investment side, equally, there are some themes that continue to be very strong, whether you look at, let's say, energy transition, right? So, so the renewable space or all the announcements around hydrogen. In fact, even more broadly, the power sector continues to be a very strong theme for us. It is there on the generation side as well as the transmission side. You also have continued capex happening towards all the EMS, OSAT. We are seeing actually increased capex even in many cement companies. Defense is another theme, if we can club in that bucket. So I think it's not that the capex side of story is seeing slowdown across the board. I think there are opportunities there that continue to be very attractive.
Okay, so it's not really either or, it's perhaps both as we look at a balanced portfolio over the medium term, consumer as well as investment or capex or the industrial side of the economy. Take that point, Ashish. Now, on consumer itself, and I don't know if you have data offhand, maybe you can shed some light on it. because the theme, and I'm talking mass consumption, I mean high ticket consumption, like you said, like, you know, top dollar real estate companies or jewelry companies, they were anyway doing well. But I think mass consumer stocks were absent from most portfolios, or at least were in very little quantity, I guess, across the industry. So now, as you feel quite convinced about this consumption theme lasting, as an investor, should I just stick to diversified funds and eventually hope that, you know, my asset manager will eventually start buying these stocks if they're doing well? Or is it strong enough to warrant a thematic look? Should I be looking for consumption funds actually to look at playing it in a secular way over the next couple of years?
I think if you are looking on a 2-3 year view, I would say you stick to diversified funds. I think we have seen fund managers, I'm not just saying RAMC, but if you see across the industry, they have been very good in terms of kind of generating consistently alpha across various market cap cohorts. So I think Touchwood, the Indian portfolio management community has been able to catch the trends, have been able to differentiate among the companies that are going to benefit very decisively. So I would say stick to kind of diversified funds. I think investors who are looking at sectoral thematic funds, I think they have to take more tactical views, right? So those are, I think, 6 months, 1 year views. Otherwise, I think it's best to stick to diversified funds.
Okay, got that. That's really helpful. Now, Ashish, we're coming to the final few minutes of the conversation, so I have a request. You're a veteran of the financial markets and the financial services landscape in India, but for the next 1 minute, 60 seconds, if I could ask you to don the hat of an advisor, right? And I'm sure you get asked these questions to, you know, your friends and family. If you were to tell someone, you know, what kind of a mutual fund portfolio, this is a medium risk investor with at least a 3 or 5 year horizon, with that caveat in place. If you were to help someone design a portfolio, how much should be equity, gold? And gold is still booming. Every day we get asked the question saying, should we buy more silver funds or silver ETF or gold? And, you know, then there is, of course, fixed income. Looking at the overall environment, the RBI, expectations of rate cuts. What would be your recipe for that portfolio? And which are the thematic categories that you would perhaps consider for this medium risk, medium term portfolio?
Sure. So I would say that I will still put kind of 60-65% of the portfolio in equities. I think between fixed income and REITs, and to the extent REITs get classified as equity now, either through the fund or directly, maybe another 10-15%, and 15% or so can be precious metal. I think take your pick between gold and silver. I think silver is outperforming for now. But I personally believe that if you are going for the kind of precious metal, it's kind of better to stick to gold. So if you are doing 15% there, I would say majority should be gold. Silver can be more tactical. And within equity, as I mentioned earlier, my preference is for the diversified funds. And rather than go for any market cap cohort, I would recommend doing a multi-cap or a flexi-cap fund. For thematic, rather than a narrow theme, do a broad theme like services or consumption. So even as I'm positive on, say, power sector or defense sector, I don't think it's appropriate for the medium-term investor to do a very narrow theme. You kind of play it through diversified funds, and for themes, you go for Broadway themes like consumption or services.
Oh, you've been so charitable. Thank you so much. It gives a great framework for our viewers to go back and reassess with their own advisors on how they can perhaps think about designing their portfolio. And I'm glad you brought up the point on REITs, Ashish. Actually, that's a cue for our viewers as well. We've done a REITs classroom earlier. We will revisit it because the regulation has changed. So let me just end with that, Ashish. Now, for the benefit of our viewers, SEBI is coming out with new rules, which means that equity mutual funds, wherever they're a little short on their equity allocation, they may want to add a bit of REITs as well, real estate investment trusts. Ashish, broad sort of view on this. What should we expect? Will more REITs get added to equity funds? Just what should we expect on this? Let's say a year down the line, as this is adopted.
I certainly think so. I think more should get added, and particularly, and as I said, where the multiples in the market are, we are not kind of expecting equity returns to be of the magnitude they were post-COVID, right? So from 2020, when the valuation levels at the market were very low, the returns have been very high. But from this level, if you expect market returns to be more in line with the nominal GDP, etc.,
which means 10%, Ashish? I have to try and pin you to a number, which means what, 10% CAGR equity returns?
Yeah, so we hope nominal GDP growth recovers to a number higher than that, but yeah, it would be about 12-13%.
Oh, that's good.
Right. And so in that context, I think REITs offer a good stability. Yields are around 6-7% in terms of regular return and with some potential upside of capital gains, right? So I think given that construct, I think REITs should form an increasing part of equity portfolios.
Okay, sounding absolutely great, and that's very reassuring. We can still work with 12-13% kind of compounding returns over longer periods in equities, and have perhaps a new asset class like REITs for added stability to the portfolio. Fantastic conversation, Ashish. Thank you so much. Extremely helpful for all of our viewers. Thank you very much for joining us on the show today.
Thank you, Sept.
All right. Well, there you have it, a review from Axis Mutual Fund. And with that, as a wrap on this edition, do let us know what you thought of the conversation. Send us your questions, anything new that you're interested in, and we'll take up those issues in the coming weeks. Thanks for watching.
Let's talk money.
Hello and welcome to News Center. With me, Parikshit Luthra. Focus on India-US ties first. Commerce Minister Piyush Goyal has said that India will buy more energy products from the US. Mr. Goyal is on his first US visit since 50% tariffs were imposed. He met Indian origin executives including World Bank President Ajay Banga, IBM CEO Arvind Krishna, FedEx CEO Raj Subramaniam in New York. Goyal also met Carlyle's CEO Harvey Schwartz, Warburg Pincus Chairman Chip Kay and Blackstone's Chairman Stephen Schwarzman in the United States. And staying with news from the United States, and we're getting you news from the UNGA right now. Pakistani Prime Minister Shehbaz Sharif is expected to travel from New York to Washington to meet US President Donald Trump today. This will be their first meeting at the White House since 2019. Just 2 days ago, President Trump in his UN General Assembly speech once again claimed credit for the ceasefire between India and Pakistan. Pakistan has backed Trump for a Nobel Prize, even as India has refuted claims of any third-party involvement in the ceasefire. Earlier this year, Trump also hosted Pakistani Army Chief Field Marshal Asif Munir at the White House. Now to the day's market action. The Dalal Street declined for the fifth straight day, ending at the day's low point. Sensex and Nifty saw cuts of over 0.5%. Nifty ended below 24,900. It was dragged lower by auto and IT stocks. The IT index also fell for the fifth day in a row, with TCS hitting 52-week lows. Except for metal and defense, all sectoral indices ended in the red. The Defence Ministry has signed contracts with HAL worth over 62,000 crore rupees. The deal will entail the procurement of 97 Tejas light combat fighter jets. The deliveries will begin 2 years from now in 2027 and will be completed over 6 years. The Tejas light combat fighter jets will have an indigenous content of over 64%. 67 additional items will be included over and above the previous contract. Remember, the government had signed a 48,000 crore rupee contract for 83 Tejas fighter jets. HAL is likely to deliver first the 2 jets from this order next month. We're now joined by Group Captain Ajay Lele, Deputy Director General of Institute for Defence Studies and Analysis. Thank you very much for joining us, Group Captain Lele. First of all, the deliveries of Tejas fighters has been delayed by almost 1 year. We're now going to see deliveries begin in October. Overall, how is this program going to benefit the Indian Air Force now that MiG-21s are being retired? And what would be the key for this program to be really effective for the Indian Air Force?
I think we have to look at 2 programs at separate levels. One is a 83 Tejas Mark 1 aircraft. The 2 aircrafts in this lot will be delivered mostly by end of October, that is next month. And now a deal has been signed for 97 aircrafts, out of which 68 will be single-seaters and 29 will be twin-seaters aircrafts. As you have correctly mentioned, that 64% indigenous content is there. That means a lot of indigenization has already happened. But the only problem which happens as far as delivery of an aircraft is concerned is the availability of an engine, because we are totally dependent on GE for getting the engines. So I believe now there will be 113 engines for which already the deal is in the finalization stage with GE for the procurement for the purposes of these 97 aircrafts. As the timeline suggests, it will take a couple of years for actual delivery to start happen. But this particular aircraft, I think, has got very interesting features. It has got radars which have been developed by DRDO. They got an agency called LRD, which has developed a radar, which has got around 18 modes where they will be able to visualize air-to-air, air-to-ground, and air-to-sea. The quality of these radars is expected to be state-of-art. It will actually avoid any sort of a detection from passive radar jammers from outside also. On priority, these radars can home on to 4 targets. So it's a very interesting take. Then it has got a EW suite also, which again will give indication about the jamming possibilities and all that. So a lot of modern technology is being put into this aircraft, and we expect that as the deliveries start happening, it will actually fill for the requirement of Indian Air Force.
Right. I would also like to ask you that while our program for a 5th generation fighter is going to take at least 10 to 12 years for the first prototype to be developed. And we are looking at different options in the meanwhile, including having 4.5 generation fighters, maybe also acquiring 5th generation fighters from either Russia or United States. No decision has been taken. But in the interim, how does this fighter meet our requirements, especially when we're hearing that Pakistan could get 5th generation fighters from China?
You see, now what happens is that let's not only hold on to the generations of the aircrafts. Every generation has got certain amount of qualities. We understand, as you had mentioned, that around 36 MiG-21s will be retiring shortly. Air Force has got right now operational around 29 to 30 squadrons, and the requirement is of around 42.5 squadrons. So there is a huge backlog, you can say, as far as number of aircrafts are concerned. So we all know that how to use the aircrafts in a very most effective fashion. So from the 4th generation to 4.5 generation, we are talking of AMCA also. So there are a lot of options which are available. And the way you train yourself, way you understand the enemy's tactics, I think even the 4th generation or 4.5 generation aircraft also will be in a position to take on to any sort of a 5th generation aircraft. Because now we got an interesting mix of aircrafts. We got missiles like BrahMos and all that. So I think the warfare is not only limited to one domain. We have got multiple domains, and whatever the challenges, the limitations which are there to use 4th and 4.5 generation aircrafts against the 5th generation aircrafts, I think we got a mix of elements which are there, which will be able to cater for all these requirements.
Right. What do you think will be the capabilities of this Tejas fighter, which has at least 64 or 67 improvements over the contract that was signed in 2021 for 83 Tejas fighters? What are the improvements? And when it comes to combat capabilities, how is this aircraft different? How will it stand out?
You see, as far as equipments are concerned, I was already making mention that it has got a EW suit, it has got a AESE radar, then it has got a controlled surface actuators also, which will actually help in controlling the winds of the aircraft. So there are a lot of new technologies which have come into being. You see, the earlier deal was signed in 2021. So over a period of time, new technologies have come into being. There has been major focus on AI, particularly during last three to 4 years. So there are things which have evolved over a period of time. And as and when you go into the production line, these aircrafts will have a certain amount of different things than the earlier 83 fighter aircrafts which have been given. And as far as combat capabilities are concerned, they are not only based on the aircrafts per se. They base on the training of your air crew, how you actually train the air crew to use these types of systems. And I think Indian Air Force has got one of the best trained pilots, one can say, with a lot amount of confidence. So let's look at it from that perspective, that when you're talking of an aircraft used in a combat mode, it's not only the quality of an aircraft as a technology, but it's the quality of an air crew also matters a lot.
All right. Thank you very much, Group Captain Lele, for joining us with that very important perspective on how this Tejas fighter will serve the needs of the Indian Air Force and which are the features which really stand out. And speaking of defense, Prime Minister Modi says India will commence the production of AK-203 rifles in collaboration with Russia. Speaking at the Uttar Pradesh International Trade Show, Prime Minister Modi said that India's defence forces want to decrease their dependency on foreign countries. A factory will be set up in UP to make the AK-203 rifles.
भारत में ही हम एक वाइब्रेंट डिफेंस सेक्टर डेवलप कर रहे हैं। पुर्जे पर मेड इन इंडिया की छाप हो, हम ऐसा इकोसिस्टम बना रहे हैं। और यूपी इसमें भी बड़ी भूमिका निभा रहा है। बहुत जल्द रूस के सहयोग से बनी फैक्ट्री से AK-203 राइफल का उत्पादन शुरू होने जा रहा है।
Time for a short break, but coming up, Union Cabinet has approved the Shipping and Maritime Projects scheme worth 70,000 crore rupees. We speak to Shipping Secretary T.K. Ramachandran on the other side.
पता है।
Welcome back. You are watching News Centre. India's Shipping Secretary T.K. Ramachandran says that the government will incentivize cost of acquiring ships and will provide a subsidy of 15 to 25%. Just yesterday, the Cabinet approved the Shipping and Maritime Project Scheme worth 70,000 crore rupees. The new schemes are aimed at bolstering the domestic shipping and maritime industries. Here's an excerpt of that exclusive conversation.
Shipbuilding Financial Assistance Scheme builds upon an earlier scheme, which was the first version of the scheme. And the idea is to provide assistance to shipyards to bridge the gap between the cost of acquiring a ship abroad versus acquiring it in India. So this difference was about 15 to 20%. So this scheme incentivizes the cost of acquiring a ship, and it gives you a subsidy of 15 to 25% depending on how big the ship is and whether it is a green vessel and so on. And the scheme is valid for about 10 years, and there is an in-principle validity up to 2047. There is also a credit note which actually promotes the circular economy. And this credit note, you get 40% of the scrap value of the ship will be given to the ship owner on scrapping of the ship in an Indian yard. And this will be reimbursed against the cost of the construction of a new vessel, and of course subject to a maximum of 5% of the cost of the new vessel in an Indian shipyard. This credit note will be stackable, transferable, and valid for 3 years. And of course, the last part of this first pillar is that you have a shipbuilding mission, which is also being constituted or put in place, so that it can the entire package can be implemented.
Right. You also have a maritime development fund, which is pillar number 2. And the important component in this is the maritime investment fund of 20,000 crore that will be set up. Could you give us a sense of how this will incentivize ship makers in the country, allied sectors? There is also talk of private equity investors coming in, blended finance structures. How will this work? What do you really envision with this?
See, one of the things that we found was the problem with the entire shipbuilding scenario in India was lack of finance, lack of appropriate tenure, and of course, higher interest rates. So this we addressed, as you must have heard in the media last week, by granting infrastructure status to certain classes of large ships which are built or registered in India. If they're built more than 1,500 GT and registered more than 10,000. So this infrastructure status gave a boost to the debt part of it. But the fact remains that one of the reasons, like I said earlier, for the shipping industry not being a non-starter in India was that there was lack of finance. And so we've tried to do two things. One, like I said, the debt portion. The other is the equity portion. So we have brought in this MDF, the Maritime Development Fund, with a corpus of about 20,000 crores. Half of it will be, 49% will be contributed to by the government. The rest will come from the ports, from private funds and other international sovereign funds, pension funds, and so on. So that there is a corpus of about 20,000 crores spread over a period of about 10 years. And it can be much larger than that. And this can be then leveraged. So we expect that, about 7 times this will be the kind of investments that can be generated. And basically, investments into the shipping sector have not happened. So this fund, we hope, will trigger that virtuous cycle, and which will ensure that we have this investment in ship owning happening in India. Earlier, the fact that you did not have adequate financing led to ships not being built, ships not being available, therefore chartering of foreign vessels, that leading to lack of capacity or lack of demand and in the for the shipyards, and then the shipyards therefore not building capacity. So it was a vicious cycle. And now we are trying to break that vicious cycle, and we are trying to introduce this maritime investment fund, which is one component of the maritime development fund. And the other component is the interest incentivization fund, which gives you an incentive of about, it supports incentives for shipyards, investments into shipyards up to 3%.
So speaking about the shipbuilding development scheme, which is of 19,989 crores, how will this actually encourage ship manufacturing in the country and making it a larger exercise beyond the PSUs as well?
Yeah, so at the moment, some of the largest ship builders in India are either in the defense sector or in the sole one is the CSL in the shipping under the shipping ministry. The net result of having only a few shipyards in the public sector and a couple of them, in the private sector, like in Pipavav or L&T or Shaugule, etc. But the thing is, we don't have capacity. We produce only about 50 to 60,000 GT per year, whereas other countries, Korea and Japan and China, even Vietnam, they produce a lot more of tonnage every year. Vietnam, for instance, produces something like 6 lakh tons. China produces something like 33 million GT, which means they are 800-900 times what we do. And therefore, one reason we found was lack of capacity. So this scheme was brought in, one, to improve the capacity of the brownfield shipyards so that they can, they get about 25% subsidy. The cost of capital cost of setting up new infrastructure in a brownfield shipyard, up to 25% we will give them. Then in the new clusters, which are to be set up about 2 or 3, they call shipbuilding mega clusters, we are programmed to give about 3,000 plus crores per cluster. And this cluster will be jointly implemented with the state government. About 1,500 acres of land will be identified or have been already identified in many states. And the infrastructure, internal infrastructure will be provided. The seaside infrastructure will be provided.
Over the last few years, sir, we have seen that during every crisis, every war, global shipping becomes very, very expensive. The costs go up. Logistics costs also go up. Now, how do you aim to bring down logistics costs, have domestic capacity for container manufacturing, and somehow be self-reliant when it comes to shipbuilding so that we can ring-fence ourselves, protect ourselves during future disruptions?
Yeah. So, unfortunately, shipping industry's fortunes are inversely related to crisis. So when there are, directly related to crisis. So when the crisis goes up or blows up, then the shipping industry, it becomes the costs of shipping go up, and of course for the shipping industry it might be a good thing, but for logistics costs in general it is bad. So what we are trying to see is whether we can ring fence ourselves, which means one, we have to protect ourselves as far as shipbuilding capacity is concerned, which means we have our own ships and we are able to register, own, finance, build ships within the country, and we are not dependent on the rest of the world. And one statistic which is worth sharing is that 95% of our cargo at the moment, in the current times, is moved on foreign chartered vessels, and therefore there is a need to de-risk this, to have our own fleets, our own ship vessels, and so on. So that is one part which we are trying to address. So ownership, financing, registration, and building. So that is one part of the cycle. The other thing is, of course, that our costs need to get reduced. And for that, the access times need to go down. The availability of containers, like you rightly pointed out, that is another area. But we found that it's not the containers as much as the slots, availability of slots on container ships. And fortunately for us, the international crew, the container shipping lines, some of the biggest of them have now started flagging in India. CMA CGM, for instance, has already flagged a couple of their vessels. Right. Similarly, other big ship container lines have also, promised to flag some of their vessels in India. So this will also become, this will start increasing in the next few months. And the reason being that the legal reforms that we carried out, bringing in the new Merchant Shipping Act, the Indian Ports Act, and of course the Major Ports Act a couple of years back, and the Coastal Shipping Act, all of which happened in the last month.
Okay.
This will also create the ecosystem for the shipping industry to thrive, and we hope that the industry will take full advantage of all these reforms that have been brought in.
All right. So that was the shipping secretary explaining the rationale behind the 70,000 crore package for the shipping sector to boost domestic capabilities, improve financing, setting up a maritime investment fund, which will have interest from sovereign funds, pension funds and PE investors as well. With that, it's a wrap on this edition of News Center. More news and updates continue right here.
Good morning, ladies and gentlemen. Welcome to the CNBC-TV18 Mega CEO Centimeter. I'm Shireen Bhan, and we're coming to you live from the CII National Conference here in Chennai. And of course, this is an engine of growth for India. And we are going to be talking about what next now to drive reforms and to drive growth for India. Before I get my audience and the CEOs present here, this is one of the largest platforms that you will see. Almost 80 CEOs present here under one platform, live right on CNBC-TV18. 2018. Before we get the Q&A started, I decided that this was a good opportunity, since we have everybody here in the room, to actually do a dipstick survey and sense and gauge the mood of the nation, to gauge the mood of India Inc. So without further ado, let's get started. My first question, and this will of course result in a show of hands from each one of you, so I would request you to raise your hands depending on which way you decide to vote. With the GST boost coming in, the chief economic advisor suggests that growth will be higher, perhaps closer to the upper end of the band that was presented in the economic survey, which was 6.8%. What is your growth expectation for FY26? Ladies and gentlemen, option 1, 6.5%, option 2, 6.8 to 7%, and option 3, more than 7%. Those of you who think that growth is going to be 6.5%, please raise your hands. Okay, no hands here on 6.5%, between 6.8 and 7%. Okay, quite a few. And those who believe that it is likely to be higher than 7%? Okay, so that's the mood of the House. Just what the chief economic advisor told us, 6.8 to 7%, a little better than the economic survey's estimates. That's the mood as far as industry is concerned. The second question, and again, I'd appreciate a vote, a show of hands here. Do you see inflation easing further, and do you expect the RBI to cut interest rates again? Yes or no? Very, very simple. Those who believe the RBI will cut rates, a show of hands, please. So most people in this room do believe that the Reserve Bank is going to cut rates. And the third question to kick things off here, we've seen what's happening as far as the currency volatility is concerned. Do you expect the rupee to end, option number 1, in the current band, which is between 88 and 89, to be stronger, which is below 88, or weaker above 89? Those who believe that the rupee is likely to trend in the current band, if you could raise your hands, please. Okay, and those who believe that it's expected to be stronger, that is above 88, just about 2 hands in the room, and those who expect it to be weaker, that's below 89. So majority expect the rupee to be in the band between 88 and 89. So let's get straight off. Rajiv Mani, I'll come to you to start with. What was your vote, 6.5 to 6.8 or 6.8 to 7%?
No, 6.8 to 7%.
Okay, and you believe the GST is going to help drive that number?
Yeah, I think GST will definitely help. I think firstly, the first quarter GDP growth was also was a very positive surprise, and from what we are seeing with the monsoons and the uptake because of GST on the consumption, just some of the early sentiment that we are seeing. We haven't seen the numbers as yet. I think 6.8 to 7% should be achievable. We are also seeing, if you look at steel, if you look at cement, the broader trend on the construction sector, which contributes a lot, that's very positive. We just saw yesterday mining sector is starting to show very positive growth. So I would say overall 6.8 to 7% is probably a safe number to go with right now. I think India's bigger challenge is not the real GDP growth. I think it's the nominal GDP growth. Yeah. Because from a tax revenue collection, from a fiscal deficit number, I think that becomes more relevant. I think that's where we'll have to see if inflation continues to stay as benign as it is, and with GST it may come down a little bit, currency stabilizes, then the likelihood is that the nominal GDP growth will be a challenge. So we're hoping that if RBI was to reduce the interest rates, in some ways, push for greater growth, and then if that has a mild impact on inflation and it comes to closer to 2 to 3% in that range, if it ends in that range, then hopefully the nominal GDP growth number should catch up.
Mr. Mukundan, what did you vote when I asked whether interest rates are likely to be cut or not? Do you expect the Reserve Bank and the MPC to deliver on another rate cut?
I took a safe one. I actually voted with the president.
Which way did the president vote on that? You were looking at him. So yes or no on a rate cut?
Yeah, we do believe, I think there'll be I think we are in an era of, I think, a continuous rate being eased, because I think the inflation trends are down, and the long-term trends on inflation are also pointing towards it's going to be, and with hopefully we are seeing the peak of the tensions, trade tensions. We are the peak in the sense that it may last 90 days or 100 days, but I think post that again, I think the trend will be easing it down. So all directions are in the same direction. Clearly, I think we are in a very good spot in many ways. If interest rates are going to be benign or coming down, and our many things which government has done, including if you look at what they've done in power sector, what they've done in the roads, the logistics, all the every aspect is now in place. So our own expectation is this is a time when we need to be positive. I think industry is a bit cautious because of all the tension around, but I think once that eases, you're going to see a massive push going forward. That's really the way I see it.
The question is, what is the timeline for that massive push going to be? But I'll come back to you in just a second on that issue. So industry expects rates to be cut, or at least hopes that the RBI will deliver with another rate cut. And the consensus in this room of a large number of India CEOs is that growth is likely to be between 6.8 to 7%. You know, I should have polled a question on gold as well, Mr. Muthoot. Let me come to you. Gold prices at record highs. I mean, you know, you're talking about peaking as far as trade tensions are concerned. Any signs of peaking on gold prices?
Gold has been always lucky with Trump, and Trumpism is driving gold. And the uncertainty in the global economy is driving gold prices. I think now the new gold is silver, with silver going to be the next driver of investment for the common man, because gold now has become unaffordable.
Gold has become unaffordable. Yes, I would imagine consumers will agree with that. But do you expect the rally to continue?
I could say that 40% of the Indians have become wealthier now, with the gold prices moving up 40%.
That certainly is the case. But do you expect prices to continue to edge higher from here? And what's the expectation on silver?
Silver would be around 45 is what market outlook, and gold would be somewhere at 3,800 per ounce.
3,800 per ounce. So the rally is likely to continue. Mr. Trump has been good for gold prices. Roshni Nadar certainly not been good as far as the IT sector is concerned. So let me come to you now, because the issue that has captured headlines has been what's happened as far as the H-1B visa issue is concerned. While we have seen some sort of a pullback, there have been clarifications issued by the White House that it comes into effect only from the next lottery year, that is 2026. It doesn't apply to renewals. But now they're changing the lottery system. In itself is what the expectation is and what the proposal is. Roshni, to start with, the impact on Indian IT on account of H-1B, not just in the near term, but in the medium to long term.
So, Shireen, I actually think that, I'd mentioned this before as well, that we can't let this, never miss a good crisis. And if at all, if you've seen the trend of H-1B visa applications over, let's say, even the last decade, India's the largest proportion, but the number has been coming down.
Yeah.
And a lot of conversations today that you have with your clients, and we're all pretty heavily indexed on the US, is around AI adoption and AI-led deals. And there is a certain non-linearity in a lot of deal constructs in the way the entire sector is having to reimagine itself and restructure itself and reorganize itself. So, I mean, I think the pain is much more short-term and medium-term, but this is not just a problem for the industry. It is also a problem for customers, clients, and actually some of the most biggest companies which are hit by this are actually American companies.
Yes.
So one will have to navigate this. I think that it would probably drive those many more actual decisions on AI-led conversations and AI-led deals. And those are non-linear in nature anyways.
Yeah, you know, Rashni, you're right in pointing out that this is going to impact US big tech far more than it will impact Indian IT, because the proportion of H-1B visas has been higher on the US big tech side, and India has been seeing a decline over the last few years, in fact down over 30% in the last few years. But in the near term, as you said, in the near term there will be pain. Do you expect a repricing of contracts? Do you expect that between clients as well as IT companies there will be an absorption of the higher costs?
I'm not sure, Shireen. I think it's only been 2 days, and that was Saturday and Sunday.
Yes.
And I think, and today is, of course, yesterday has already showed that there will be some difference in changes in, the way they're going to actually structure the new plan for H-1B and looking at highly skilled. Perhaps there will be, again, in the short term, but it could also drive more outsourcing, which then again goes back to a very different sort of pricing model.
But do you worry about the fact that now that the first salvo in a way has been signaled on services, because so far the battle has really been on the goods front, now with services getting into the fray on the outsourcing front as well, while there's a long way to go for the higher bill to become an act, to become legislation, that this really opens up a new front between India and the US as far as our trade relations are concerned?
Maybe, but I also think that it's impacting different companies very differently, and I think business mix makes a huge difference. At least for us, in the last 6 years, we've invested more than $3 billion in IP, and that itself is non-linear in nature, and we have a huge investment and business line in software. So I think that business models are changing, and we just have to adapt.
me take the H1B conversation forward, because Shashwat Goenka, as part of the group, you also have First Source, and I know that you've been hiring locally in the US, so perhaps less vulnerable to the changes. But as a company and as an industry, how prepared is India to move to product and platform, and whether this is in fact going to be the opportunity that this crisis presents?
I think definitely. And earlier today, we heard that an opportunity is only worth its weight in gold if you take that opportunity. And I think it's for us as Indians to take that opportunity. And I think for us as First Source specifically, we're not very impacted with H1B, as you mentioned. But I think with this, there will be a rethink on the industry, and the push towards AI, which is what all of us have already been building towards, will probably translate to it much faster.
Move towards AI much faster. I'll come to Vivek Raghavan, the AI man on the table, in just a second. Sarvam AI, Vivek, I'll come to you in a second. But Satish Reddy, let's come to you. H1B, this was the sword that was hanging, and now it's out there in the open. On pharma, we still don't know. President Trump keeps threatening that something's coming, but we still don't know when, and we still don't know what. How ready is the Indian pharma sector for the possibility of higher tariffs?
I mean, like you said, we don't know, right? So we still hope it won't be anything which is punishing, because, again, if you see the outcomes, Indian exports to the US in pharmaceuticals is largely generics, and that goes to the people. So when it comes to the payers, finally, it's mainly the government, and also it's the common people who will be hurt the most. Right, so we certainly hope it won't happen, but even if it were to happen, I think it has to be an issue of, who will be able to absorb the additional tariffs, which we assume will be low, right? So between the distribution chain...
When you say low, what is the expectation or the assumption that you're working with?
Or there's no assumption, but we just expect it to be low because of the reason that I said. It's going to have a deep impact in terms of, the cost to the governments as well as to people. So we hope it won't be high. But at that point of time, then the question comes, how much of will it be absorbed by the distribution chain and also by the company? That's something we have to watch out for. But all of us hope the best case prevails, which is no tariffs.
But yes, of course, that would be the best case. What's the expectation? And that's another question that I'm polling here. What is the expectation on the India-US BTA being done? Those of you who believe that we are going to see the India-US BTA conclude, the expectation, the hope, the assumption was that by fall this year. Those of you who believe that it will be done by fall this year, by November, which was the timeline estimated, do raise your hands. And those who believe that it will perhaps spill over into next year, raise your hands. So those who believe it will be done by this year, the India-US bilateral trade agreement, if you can raise your hands, please. Okay, a fair number. Those who believe that it's likely to slip into the next year, next financial year or next calendar year. Well, there's more who believe that it'll probably get done this year, so that's certainly good news. Janmejay Sinha, you just did a presentation on why you believe that American exceptionalism is over, and you believe that this is going to be an opportunity for India. What's the best case? What do you believe India needs to deliver on to ensure that we leverage on this?
See, the basis of American exceptionalism was limitless risk-free capital, talent, and R&D. All of those become available. So India needs to, of the $27 trillion of risk-free capital floating around in the US, even if we target 100 billion, which is nothing, but 100 billion, even if we create 9 centers of advanced learning or whatever, with 1,000 crores each, then we can attract and get these H1Bs and students to land. And if we, instead of having R&D at 0.56, move it to even 1% of GDP, then we are already on that way, in the sense that it is tragic that an opportunity of this magnitude, of this size, if we don't capture it, then we can sit here and in 10 years from now say, India misses opportunities. And to blame, it will not be the government.
Yeah.
It will be everyone sitting in this room. So everyone should look inside and say, I am a loser.
fine, then India will be a loser.
So to borrow from John F. Kennedy, ask not what your government or your country can do for you, ask what you can do for your country. Let's throw this open. What is the number one thing that India Inc. needs to do to leverage on the opportunity?
Get talent. Everyone in this room should be trying to hire 50 people from the US. And I don't think they've got the plan.
Does anybody here have the plan to bring back those who are dealing with the uncertainty of H-1B to India? Anyone here who wants to take up Janmejay Sinha's challenge? Shobna, go ahead.
I want to be proven wrong, Shobna. I want to be proven wrong.
No, I go with Roshni that says it's just been the weekend and this thing is still evolving. But I think it has been part of today's conversation that we look at it as an opportunity and we understand that there's enough talent. And many of these companies are looking for such talent as we transition into AI. We know that there'll be the best of healthcare. So for us, it's an opportunity. But the second opportunity I see for us is when it becomes tougher for the rest of the world to go to the US, India becomes a really good place. Like the Proton we have here in Tamil Nadu is the only one in Asia, and people can come from all over. So I think every one of us should introspect at this time to see how we can make this crisis work for us.
Roshni?
So, I mean, Shireen, just from our experience over the last 25 years of, at least investing in educational institutions for the country. But, I think it's time to also retrospect and question that why did that talent leave in the first place? And was it that they were just looking for better opportunities and jobs, but it was also the ecosystem? And if you have to create the ecosystem in the country, and at the risk of sounding repetitive, because I've said this before as well, innovation in R&D plays a huge role, and also the patent ecosystem. And it's absolutely critical that for a lot of this talent, which is unable to go now to the US or is considering coming back for all these reasons, and could be other reasons as well, to continue to invest in building institutions, continue to invest in building R&D and research, and across various fields, right? I mean, I was mentioning to the Foreign Secretary earlier that sovereign technology. Each country is looking at building its own sovereign technology, whether it's in semiconductor, whether it's going to be in AI, whether it's going to be in quantum. They're actually going to be extremely exciting areas for people to come back and work in and do research in. And then, of course, Tamil Nadu wants to take even leadership in space tech. So there are very interesting opportunities, but people want to harness also the investment.
Yeah.
And that's going to be absolutely critical.
So short question. Will we see a step up, for companies like HCL Tech on R&D spends, on innovation, on setting up perhaps these centers of excellence?
Absolutely. I mean, we've done it previously. We'll continue to do so. And, I think it's a great opportunity for everybody.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: the Sensex and the Nifty declined for the fifth straight day. A sharp sell-off in late trade takes the Nifty below 25,000. Foreign investors have pulled out more than $21 billion from India since the start of 2025. The rupee remains largely steady against the dollar, even as it remains near record lows. The Indian currency has weakened by more than 3% in the first 9 months of 2025. Gold prices remain steady near record highs. Silver trades at 14-year high. Copper prices surging to 15-month highs after an accident at the world's second-largest copper mine in Indonesia. Shares of Tata Motors tumble as Jaguar and Land Rover stares at fresh trouble. Financial Times reports JLR faces a £2 billion hit as it was not insured against cyber attacks. The company has shut down its factories since the start of this month and is hoping for a phased restart from October. Commerce Minister Piyush Goyal says India will buy more energy products from the US as trade talks continue. Goyal also meets the president of the World Bank and top US business leaders in New York. President Trump is set to host Pakistan's Prime Minister Shehbaz Sharif and Army Chief Asif Munir at the White House later today. The government will provide a subsidy of up to 25% to incentivize the cost of acquiring a ship. The Union Secretary of Ports and Shipping says the move is aimed at bridging the cost after the cabinet clears a 70,000 crore rupee package to bolster maritime development. The Karnataka government issues new draft rules to auction defunct liquor licenses. The move is likely to raise over 500 crore rupees in the first round, where 579 licenses are set to be auctioned. A majority of India Inc. plans to add capacity through fresh investments in the next 1 year. Around 80 CEOs polled at the CII National Council are upbeat on capacity expansion in the near term. Well, let's head straight to the day's market action. The Wall Street declining for the fifth day, ending at the day's low point. The Sensex and the Nifty saw cuts of over 0.5% today. The Nifty ending below 24,900. The Nifty Auto Index lost almost 1%. IT down 1% as well. Nifty Metal closing just about in positive territory. So the markets dragged lower by auto and IT stocks. Also, for the fifth day in a row, we've seen the IT index closing in the red, with TCS hitting a 52-week low. Except for metals and defense stocks, all sectoral indices closing in the red today. Now, Indian markets have seen foreign investors pull out over $21 billion in the first 9 months of this year. The markets are underperforming most of the global players. Nimesh is here with a snapshot of how India fares compared to the rest of the world and how other asset classes stack up against stocks. Nimesh.
Well, Indian markets have relatively underperformed not only the global equity markets but also the commodities market since the beginning of the year. Just look at the data. Indian markets are up just 1-2% in dollar terms since the beginning of the year. Compare this to the US markets. The US markets on an average are up between 10 to 15%. So that's a big underperformance there. The bigger underperformance comes with the Asian markets. All the Asian markets are up between 15 to 35% since the beginning of the year in dollar terms. So big underperformance to Asian markets as well. Even if you compare the European markets, India has relatively underperformed. Most of the European markets are up between 18 to 30% since the beginning of the year. So that's the equity underperformance. Even if you look at the commodities market, India has relatively underperformed. Gold is up 42.5% since the beginning of the year in dollar terms. The even bigger surprise is in silver. The silver is up 52% since the beginning of the year in dollar terms, and even copper is up 18%. That potentially explains that the FIIs are big sellers and it's not the preferred market so far as far as the FIIs are concerned. The FIIs have net sold nearly $21.5 billion since the beginning of the year. It's the highest among the EMs market. The next big market is the Korean market, where they've sold nearly $20 billion. So India is relatively underperformed not only the global equities but the commodities as well since the beginning of the year.
All right, Nimesh, many thanks for joining us. The Indian rupee, meanwhile, recovered from an all-time low against the dollar. This as the American currency weakened in overseas markets. Dealers tell CNBC-TV18 the RBI intervention yesterday and the day before supported the rupee. So that's the rupee for you. And gold prices holding steady near record highs as investors await key U.S. economic data for further insights into the Federal Reserve's monetary policy. A slightly weaker dollar also lent more support to the bullion. Silver prices, meanwhile, holding ground. 14-year high for silver as traders put their bets on the precious metal. This after the Fed said that further rate reductions are likely to be needed. Meanwhile, copper prices at a 2-month high, while futures are trading at a 15-month high. The metal prices surged 4% overnight, this after an accident at the world's second-largest copper mine in Indonesia, that bringing in fears over supply, and that has taken prices higher. But shares of Tata Motors tumbling in trade as Jaguar and Land Rover stares at fresh trouble. The Financial Times reported that JLR is facing a £2 billion hit as it was not insured against cyber attacks. The company has shut down its factories since the start of this month and is hoping for a phased restart from October. Sudarshan joins us now to explain what exactly is going on at JLR and why the troubles continue. Sud.
So we had earlier reported about the impact that company might face due to delay in the production. But now, as per the several reports, and Financial Times reported majorly today early in the morning that because of the company not having insurance coverage ahead of cyber attack, it might have an impact of £2 billion. And that is in addition to the daily impact that company has been facing of £5 million because of production delay. So this is the main reason over the last two sessions you have seen a big fall in the stock in the last 2 days. It's down almost 6 to 7%. Now, if you take a look at the timeline of this cyber attack and post that company's comments. So, cyber attack happened on 31st of August. First comment company made on September 2nd saying that it's looking into the issue and will be restarting the production very soon. And after that, second statement came on September 10 talking about that some data might be impacted because of that. And after the latest statement came on September 23 in which company has said that it has extended the production pause till October 1. And on the resumption of production, it has said that it will be resuming in a phased manner. Now, if you do a simple calculation, so £2 billion impact because of no insurance coverage, £5 million daily impact because of the delay in production. So it's almost, if you do the calculation, it would be much higher than the profit after tax that company reported for FY25, which was £1.8 billion. So that would be more than that. Now, why this is important for Tata Motors? Because JLR forms nearly 70% of total consolidated revenue for Tata Motors. Now, apart from the cyber impact, there was another news came that is attributing to Guardian. It is said UK government is looking to resolving this issue. How? It's considering several options. One of the options is that UK government will buy parts from suppliers to JLR, and once JLR resumes the production, it will supply it back to JLR. In that way, it wants to help the government. Now, JLR CEO has replied to UK Parliament committee in which he has said that Tata Group is in close touch with JLR to offer advice and support, and JLR has already paid £5 billion and is in good position to secure any additional liquidity if it is required. On cyber attack impact, he has said it's premature to comment anything on that. We'll have to see how exactly it pans out. But as far as stock is concerned, it remains under pressure.
So many thanks for joining us. Trouble there for Jaguar Land Rover. Commerce Minister Piyush Goyal has said that India will buy more energy products from the US. Minister Goyal is on his first US visit since the 50% tariffs were imposed on India by the Trump administration. The Commerce Minister met Indian origin executives including World Bank President Ajay Banga, IBM CEO Arvind Krishna and FedEx CEO Raj Subramaniam in New York. Goyal also met Carlyle CEO Harvey Schwartz, Warburg Pincus Chairman Chip Kay, Blackstone's Chairman Stephen Schwarzman, among others. Pakistan's Prime Minister Shehbaz Sharif is expected to travel from New York to Washington to meet President Trump today. This will be their first meeting at the White House since 2019. Just 2 days ago, President Trump, in his UN General Assembly speech, once again claimed credit for the ceasefire between India and Pakistan. Pakistan has backed Trump for a Nobel Prize, even as India has refuted claims of any third-party involvement in the ceasefire. Earlier this year, Trump also hosted Pakistan's Army Chief Field Marshal Asif Munir at the White House. We told you first, and it is now official, the Defence Ministry has signed contracts with HAL worth over 62,000 crore rupees. The deal will entail the procurement of 97 light combat fighter jets. Parikshit is standing by now with more. Parikshit, take us through this big contract.
Well, very symbolic. This comes just a day before the Indian Air Force retires its MiG-21 fleet, the aging fleet. And now this contract for 97 LCA Mark 1A fighter jets has been signed with HAL. Now, this had been given government approval on August 19. A commercial contract has now been inked. This is a contract worth around 62,370 crore rupees. The deliveries would commence in 2027-2028 and would be completed over a period of 6 years. Now, we have seen how deliveries of the previous Tejas fighters has been delayed. The order for 83 Tejas fighters, which had been placed in 2021 February has been pending delays, and now we believe that the first 2 fighter jets from the 2021 order will be delivered in the month of October. But the new order for the 97 fighters has significant improvements. For example, it has 64% indigenous content. It has 67 additional items incorporated over and above the previous LCA Mark 1A contract, which was signed in January 21. The integration of advanced indigenously developed systems such as the Uttam Active Electronic Scanned Array Radar, Swayam Raksha Kavach and Control Surface Actuators will all increase the self-reliance and Atmanirbhar component. And we will need all this indigenous technology in future conflicts as well. The project, we're told by the Ministry of Defence, is going to be supported by nearly 105 Indian companies. And this is in the Buy Indian category. It will generate close to 11,750 direct and indirect jobs. The ability of HAL will also, to deliver these fighter jets will also depend on how fast and how soon the GE engine maker in the US delivers on its obligations to HAL. There have been delays in the past, and the government has been in talks with the US to expedite deliveries. So let's hope that everything is on track and the delivery of these fighter jets also takes place on time.
All right, Parikshit, many thanks for joining us. And speaking of defence, Prime Minister Modi says India will commence the production of the AK-203 rifles in collaboration with Russia. Speaking at the UP International Trade Show, the Prime Minister said that India's defence forces want to decrease their dependency on foreign countries. A factory will be set up in UP to make the AK-203 rifles.
भारत में ही हम एक वाइब्रेंट डिफेंस सेक्टर डेवलप कर रहे हैं। पुर्जे पर मेड इन इंडिया की छाप हो, हम ऐसा इकोसिस्टम बना रहे हैं और यूपी इसमें भी बड़ी भूमिका निभा रहा है। बहुत जल्द रूस के सहयोग से बनी फैक्ट्री से AK-203 राइफल का उत्पादन शुरू होने जा रहा है।
Well, a majority of India Inc. is planned to add capacity through fresh investments in the next 1 year. Around 80 CEOs polled at the CII National Council meeting are upbeat on capacity expansion in the near term. Take a look.
On the back of the measures already undertaken, is there confidence in industry to start the capex cycle? Are you going to be investing in adding fresh capacity, in setting up new capacity in the next 12 months? Those of you who intend to spend money in adding capacity, if you could raise your hands in the next 12 months. Okay, so quite a few. Let me hop across to Sunita Reddy. Sunita, of course, you've got a big expansion plan as far as Apollo hospitals are concerned, but that's a sector that is, of course, poised for growth. So you feel confident of being able to spend over the next 12 to 18 months?
I'm very confident because I believe the structural demand is there, intact in the market.
What is the quantum that we can expect you to spend in the next 12 months?
12 months, I think you should look at it 36 months were long term.
Okay, 36 months.
6,000 crores.
6,000 crores in the next 36 months for the Apollo Hospitals Group. Madhav, what would your capex number be for the next 36 months? You can decide which number you want to go with.
It's about 4,500 crores for over the next 24 months.
Okay, 4,500 crores over the next 24 months. Deepak Shetty, let me come to you. The JCB has taken on a whole new meaning in this country, but nevertheless, let me ask you, sir, what is the plan as far as the capital goods sector is concerned? Infrastructure front loading, we've seen that across both the central government as well as states. What are you picking up in terms of demand?
The demand comes from two sectors. One, the central government projects, particularly driven by NHAI, but a big role is played also by the state government. So we have seen some great progress on the central government side, new projects being announced last few days by the Honorable Roads and Transport Minister. Where we are struggling a bit are the investments by the state government.
Okay.
And that is something which I'm sure with the improvement thanks to GST2, more collections, etc., particularly the rejuvenation of the rural economy, that will start improving. So that is something that we are hoping for.
So, in light of what you're seeing at this point in time, CapEx plans for you?
Yeah, absolutely. At JCB, we have continued to invest. Even during COVID times, we built a new factory. And we are not only looking at the business in India, we are exporting to 135 countries, so we are looking at the global market. And we'll continue to invest as we are doing both, not only in capacity, capability, but also in R&D.
But do you feel the need to add capacity at this point?
Probably in the next 36 months' time, not immediately.
Well, that's the mood of India Inc. as far as capex plans are concerned over the next 12 to 36 months. We'll head into a break, but up next, the Karnataka government has issued a new draft rules to auction defunct liquor licenses. That and more when we get back. Well, the Karnataka government has drafted new rules to auction defunct liquor licenses. Nearly 579 licenses will be auctioned via an e-auction system, with 2 new license categories being created as per reports. The state government expects to rake in close to 500 crore rupees through the auction. Shilpa has more on what is being planned. Shilpa.
Well, you're right. The Karnataka state government has decided that defunct liquor licenses will no longer be renewed, but instead they'll be auctioned online. In all, about 579 licenses that lapsed or were never renewed will go under the hammer, including retail liquor shops and bar licenses. Now, to facilitate this, the government has created two new categories: CL2A, which would be for retail shops, and CL9A, which would be for bars and restaurants. Now, licenses will be auctioned online and awarded to the highest bidder. Now, this was first announced during the FY26 budget by the Chief Minister, and the move is expected to rake in nearly 500 crore rupees for the state coffers. It's a time where the government is looking to shore up additional revenue and even meet its 40,000 crore target of excise revenue collection this fiscal. Now, Karnataka's freeze on new CL2 or CL9 licenses since 1992 had created an artificial scarcity, and this was pushing permits into the grey areas, which ran into crores, while the state only earned about 4 to 6 lakhs in annual fees. Now, this is expected to change with this move, and the National Restaurant Association, or the NRAI, of which the Bengaluru chapter had welcomed this decision because this was an ask from them, and they pointed out that the industry has long been asking for more licenses to be coming into the market, and that this will bring down the cost of licenses for the industry and helping them pass some of those costs on to consumers as well. Now, I spoke to Nakul Rajaram, who is the secretary of the Bangalore chapter of the NRAI, on its reaction to the move. Listen in.
With more supply of licenses coming into the market, we will see a drop in the net rent per license, which would be highly beneficial to restaurant and bar owners. It's highly deregularized, Shilpa, so the rental depends on which part of town you're in. But with more licenses coming in, we could see a drop of anywhere from 10 to 30%, depending on how many licenses are being issued.
Well, that's Karnataka's new liquor license auction policy. Now, the Department of Telecom holding the latest round of stakeholder advisory talks with industry leaders today. Top executives from Jio, Bharti Airtel, Vodafone Idea attending the meeting. Ashmit is here with more details. Ashmit, take us through what was the agenda of this meeting.
Well, a high-level meeting being called by the Telecom Minister, Jyotiraditya Scindia. The Stakeholder Advisory Committee in attendance were leaders from the telecom industry, the likes of Akash Ambani, the chairman of Jio. We also had Abhijit. As far as the Vodafone CEO is concerned, we also had senior leadership from Bharti Airtel, Nitin Bansal from Ericsson, from Cisco. The main thrust of the conversations we're given to understand was about the upcoming India Mobile Congress. It's around the corner. October 8th is when it begins. It is likely to be inaugurated by the Prime Minister himself. So a large thrust of the conversation about the IMC, about the announcements that are likely, about the investments that these companies are likely to make going forward. So a high-level meeting being called. These meetings, for the benefit of our viewers, are in a matter of speaking routine in nature. They're called in regular intervals. This time again, it comes not only on the cusp of, however, the IMC, which is around the corner, but it also comes less than 24 hours before the Supreme Court is scheduled to hear the AGR petition. Mind you, Vodafone Idea had filed a petition. This was taken up in the last week. And interestingly, the DOT for the very first time came out in support of granting relief to Vodafone Idea, whereby they had said that, look, the facts of the on the ground have changed, that we now have skin in the game. The government now enjoys a 49% equity stake in the company, and therefore this is an issue that merits the indulgence, or those were the words used, the indulgence of the court. The court needs to indulge the government, needs to indulge the Vodafone Idea to come out with some form of solution. So high-level talks being done. Of course, the next cue to watch for will be the hearing in the Apex Court, which is just a few hours away from now. Tomorrow morning is when the Supreme Court will be taking up Vodafone Idea's petition for relief.
Well, that is going to be an important one to watch. Thanks very much, Ashmit, for joining us. The 0.5 percentage point hit to India's GDP because of the US tariffs will be balanced out by the push to consumption from GST and rate cuts. That's the word in from PD Singh, the recently appointed CEO of Standard Chartered India, who spoke with Lata. When asked if he would be interested in acquiring a stake in an Indian bank like Sumitomo has done, PD Singh said that his bank prefers organic growth.
Foreign banks do play a very, very important role in building India. As you rightly said, foreign banks bring in foreign investment into the country. We do, in fact, the Standard Chartered has done more than 30 roadshows, met more than 300 MNCs. The Make in India story is also something that foreign banks have helped grow a lot. When MNCs come into the country, they require a lot of local expertise, financing, understanding of the local regulation as well. So again, play an extremely important part in nation building. We've been here for 170 years and will be here for many, many years more to come.
No, but
in
my
terms
question
of,
is, will you take over? Is
yeah.
that
So there is an option always available for a foreign bank to consider expansion by different routes. As of now, I think we are looking at the organic expansion route. In terms of subsidiarization, which is the other question you asked, again, that is an option available. At this stage, we don't see much benefit of that, but like it is an option available that can be used at any point of time.
okay? Other big thing is, the huge amount of geopolitical issues, the H-1B, and the fear that the Hire Act may also come. How you're a very big banker for GCCs. Have you seen any impact?
Yeah, I think it's too early to say. As the headlines change every morning, we are bracing to see what the different solutions to this could be. But as of today, it's very hard to check on the impact. The GCCs are looking at various scenarios, but I do think again it is an evolving situation and which we hope will be resolved soon.
Well, that's Standard Chartered's PD Singh there. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a minute.
want to start with that Ashwini Vaishnav tweet saying that he's switching to Zoho Work Suite.
Definitely, we are very happy, and after 20 years, getting recognized in India, right? So that's a really proud moment.
We're in an AI era, and you take over at a time when once again the obituaries are being written about SaaS.
We are looking at AI as an enabler, and with AI, it is going to be like we were only consuming. Now everybody is going to become a creator.
You know, at the heart of Zoho is this culture of innovation, experimentation. One of the reasons why you choose not to go public. No temptation at all as you see companies listing to go to the public markets at all?
No, definitely no, right? Because
why? Do you think it will stifle your ability to innovate and experiment?
we want to focus on building the talent pool, investing in R&D, right? So experimenting, we enjoy the process of building. We are not obsessed about, what is our growth? So that's why we have organically grown all the products. Every product is built from the ground up. We are able to do all this because we don't have those pressure.
Zoho runs on Zoho.
Zoho runs on Zoho, right? All our employees say every day we use only Zoho.
There seems to be a lot of pressure on Indian IT companies to go out there and do acquisitions in the AI space specifically, because the feeling is the first mover will get the advantage, that it may in fact end up being a winner-takes-all market.
At least from our own existence and success, you can see winner have never taken all. We don't over-promise, we want under-promise and over-deliver. Whenever we see some mistakes, we never punish those mistakes. The accountability should be only in terms of what the effort they are putting in.
I remember you said that you don't compete for talent, your effort is to create talent.
If you look at the Zoho Schools experiment itself, from the beginning, so we used to hire freshers, and then we used to have these incubation programs because we accept the fact that, in a 1 hour interview you can't find out who is who is good. The first batch student who attended the Zoho Schools is now heading our Saudi Arabia operation.
What has been the biggest learning from Sridhar Vembu?
The whole management style. How much giving autonomy to people end up in creating so much more.
One thing you haven't learned from him though is being on social media.
I prefer to be a private person.
Sometimes him being very active could get in the way of the company as well.
Being private, yes, we do get that freedom too.
It insulates you. Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. We're here at the Chennai headquarters of Zoho. It is a company that has its roots very firmly in India, but it also follows what it calls a transnational local model. It currently operates across 100 plus countries in the world, revenues of over $1 billion, profitable, and of course has always been bootstrapped with no plans to go public. What's interesting is that the IT Minister Ashwini Vaishnav tweeted saying that he's now switching to Zoho's Work Suite in a bid to promote Swadeshi. Joining us now to talk about Zoho's journey from here over the next few years is its new CEO, a man who took over as CEO earlier this year, but someone who's been part of the Zoho story as long as it has existed. He joined the company in 1996 when he was all of 20. Many thanks for joining us here on Young Turks Reloaded. It's great to have you here, and it's great to be here at the Zoho office.
Thank you, Shireen. Thanks for coming.
You know, I want to start with that Ashwini Vaishnav tweet saying that he's switching to Zoho Work Suite, and this is his call to everyone to promote Swadeshi, so to speak. How does that make you feel? What went on in your mind when you saw that tweet coming out?
Definitely, we are very happy and we are very delighted because it's been Zoho Office Suite is one of the first products we started in the cloud. So Zoho Writer was one of the world's first online word processor we launched, and after 20 years, seeing that getting recognized in India, right? So that's a really proud moment for us.
Is it a bittersweet moment, though, that it's taken 20 years for you to be recognized in India?
I won't say that way, but because, see, the whole market also have saturated in that space. That means, right? So it's a part of a everyday use tool. So we know, right? So it is going to take that long time. because work competing with the giants is not easy. So that means we know when we started Zoho Writer, it is going to be a 20-year, 30-year journey, and we are here now.
Well, you are certainly here, but let's talk about the journey and let's talk about taking on the giants in your words. What do you believe will be the unique advantages that you can leverage to take on the big boys? You're not just operating in India. In fact, India is your second largest market, growing at a fast clip at over 30%. But your largest market is actually outside of India. You have data centers in 16 other countries. So you may be Swadeshi in your parentage, but your aspiration is global.
Yes, exactly. Right. So we want to really say that's why the transnational localism we are doing. So we do the product development here. We have all the customer facing and the last mile. We have a huge partner network with 2,000 partners worldwide. So we have a good ecosystem. So we serve the ecosystem and we have the local teams there and local partners there who actually implement the software for the local businesses.
So do you find yourself less vulnerable on account of this transnational local model that you've adopted to the global challenges that we're seeing today? To, for instance, this H-1B visa change. How much does that impact you, if at all?
So, see, we don't see a huge impact in terms of our own numbers because we have, as I said, the transnational localism where we do have local people in every location we have and it's all customer facing. So in that sense, we don't see a big impact for us. But for India in future, we see it as a positive thing where a lot of talent will stay and a lot of innovations will happen and a lot of local problems needs local solution. That means indigenous solutions, and I think that will evolve over the period of time if more and more people start to work on those problems.
So do you believe that you could draw back some of that talent, that Zoho could become the home to the talent that would have otherwise been looking at going outside?
Yes, definitely, yeah. So some of those, because it's based on what projects we work on. So if there is an interest, definitely we are looking for tapping some of those talent. So,
we're in an AI era and you take over at a time when once again the obituaries are being written about SaaS. Everyone's saying whether SaaS is dead or not. So is this going to be a trial by fire for you? Is that the reason why Sridhar decided to become chief scientist and hand over to you?
No, see, we used to joke it inside, but then definitely, so we are looking at, AI as an enabler. So if you look at, the whole software industry itself, starting from mainframe to PC, with internet and mobile, the adoption have increased drastically. That means now everybody consumes software. It was not true in PC era, and it was not true at all in mainframe era. And with AI, it is going to be we were only consuming. Now everybody is going to become a creator. So we are already seeing so video creation, content creation, even software creation, the vibe coding is there. So, so that means we are going to have we are giving enormous power to people. So in terms of enabling them to create more.
Speaking of accelerating adoption and speaking of staying in the AI race and in the AI game, you launched Zia, which is your own version of the LLM models. And, I come back to the point that what is going to be the moat? Because look at what the big tech companies are doing. I mean, hundreds of billions of dollars going into AI development, developing LLMs and so on and so forth. So what will be the moat for companies like yours in an environment like that?
See, the way we are looking at it is we want to first call the right size the problem. That means we want to choose an area which is a niche that is solving it for the business problem. So that's why Zia LLM is only for businesses, not for the consumer.
Correct.
So because we want to take the broader problem, then that kind of an investment is required. But once we narrow down on the problem, then our investment also comes down. And it also gives us the opportunity to learn by doing because the problem in business is very different from the consumer problem. Because the business data lies within the data center. It's the same with search. When search came, the consumer search was very powerful. But within a business, the search was broken. The reason is because the tech required is very different. The data availability there, so all those. The same is what we see in the AI too. So that means that's why we narrowed on a problem which doesn't take that investment. But still,
But what have you invested so far on getting Zia out into the market?
so we have like say more than $20 million we invested in the hardware and others, and we are still ramping up our investment, but definitely not at the likes of the consumer world.
Yeah.
But we are whatever is required for solving our business customers' problem, scaling for our business customers. So whatever use cases we try to solve with Zia LLM, so how much it takes to scale that, we are investing to ensure that we scale to our businesses.
And what are the early indicators in terms of adoption? Because you've recently launched, so what are you picking from your enterprise customers in terms of how they're using it, what they're using it for, what the adoption rate is? I know it's too early to talk about.
See, if you look at our own AI story, like say Zia LLM is the recent launch, but then we have been investing on AI from say last 10 years. And even before Gen AI, we have been investing on anomaly detection, prediction and others. And overall, if you look at, say, we have more than 16 billion API calls that happens every year for our different AI functionalities across our products. And Zia LLM itself is like, say, open for a very select users where we are still trialing on, like, say, the perfecting the model and then making sure that so it scales. So we are still in the early phase of opening it up for all the customers. And we are only solving, like, say, some of the use cases now as we grow, because we have right-sized the model.
Yeah.
So because all that we are looking for is a cost efficiency and power efficiency. So that means how do we offer the same functionality at a fraction of the cost? So in our case, like, say, we give all the options to the customers. So we have hosted some of the open source models. The customers will have that option. Then the public LLMs will be there. They have the option. We have the MCP support where you can build the agent in any public service, and then you can consume our data through the APIs. So that support is there. So that means we give all these options to the customer, and Zia LLM is going to be one of the options. And more, some of the use cases we will make Zia LLM as a default. Once we see that, the accuracy is there predominantly, then we want to actually open that as a default.
You know, at the heart of Zoho is this culture of innovation, experimentation. One of the reasons why you choose not to go public, and that continues to be the case. No temptation at all as you see companies listing to go to the public markets at all?
No, definitely no, right? Because
why? Do you think it will stifle your ability to innovate and experiment?
See, the whole, if you look at the tech, right, you can see that transition where it is like, say, every 3 years is changing, and the focus, we want to focus on building the talent pool, investing in R&D, right? So experimenting, we enjoy the process of building. And so that means we are not obsessed about, what is our growth? And we don't have the pressure to do the financial engineering. That means, right, say, we don't have to acquire companies to grow, show growth. So that's why we have organically grown all the products. Every product is built from the ground up. Every product is built on the same technology stack. We are able to do all this because we don't have those pressure. Once we get into the pressure, then, say, unconsciously you will start to, right, say, do things that you may not be doing. Right?
But
Because
you have a strong enough balance sheet. I mean, you're profitable, and your profits in excess of 2,000 crores, the last reported numbers. So, why the hesitation then to take that risk and also build for not just for your customers or enterprises, but also for Indian investors, India's retail shareholders as well?
So we focus on the long term, and as I said, right, say our investments towards R&D is high, and we want to keep it that way. And somehow, right, we feel keeping it this way, focusing only on customers, because, right, say we believe that business is about equal exchange of values. And today we add some value to the customer pay us. So it's a very direct transaction, right? So that means between customers and us. And adding one more shareholder, right? So then where will we be focusing on, right? So that we actually, at least for us, we feel it shifts our focus, it will shift our focus. And for now we want to, because there are a lot of problems we have identified to solve with our R&D investment, and we want to focus on that.
one of the question marks across industry has been India Inc.'s ability to spend on R&D, India Inc.'s ability to back using its own capital innovation. And the criticism has been that industry is constantly looking at the government that, give us tax sweeteners, give us incentives to do more as far as R&D is concerned. What has been the thinking within Zoho, for instance, as far as investing in innovation, backing R&D with big ticket investments is concerned? Over the last 30 years, for instance, give me a ballpark number of how much you've spent on R&D. Annually, how much do you spend on R&D?
Annually, we spend around 35%. See, let's take Zoho. So today we have 16 data centers, we have, but then if you look at Zoho itself, it started with, say, maybe 10-member team building a word processor with a small set of servers, then as we keep generating revenue, growing, so we reinvest on that. So that means, it's a very organic way of investing back. And that means the cumulative investment will be much higher, but then the initial investment don't have to be that higher. If you are committed to actually reinvest on it, So still we keep reinvesting on, say, some of our profit back into newer products, newer markets, newer technologies. So, and see, the whole R&D itself, even for some of the complex technology, won't take a lot of investment. It just because, especially in software, because it's all that it requires is a very strong, committed, passionate engineers who are interested to solve that problem.
Yeah, and you told me Zoho runs on Zoho.
Zoho runs on Zoho, All our employees say every day we use only Zoho, so no other tool, Our meetings happen on Zoho, our video, audio, everything. So our spreadsheet runs on Zoho, our presentations runs on Zoho. We do 28 global events, Zoho Leaks, across the world, and everything runs on Backstage. And every presentation is done on Zoho Show. So that means, so, and it all didn't happen with, say, in the first year or 3 years. So it's, and it also gives us the time to learn, because we are not, going and hiring people who have done it and then rebuilding things. So we actually, we want to keep it organically where we create the talent. So even with AI, so we want to create the talent. We want to identify people who have the ability to learn and who are willing to learn. And then we want to actually challenge them with the problems and then allow them to build things that solves the customer problem.
So what has it been like now this past year, almost coming to be a year of you as CEO? And as I pointed out, what do you now intend to prioritize?
Yeah, so as I said, from product, we are moving towards a platform, building the ecosystem and focusing on the larger customers. So if you look at our success in India, it's been phenomenal, where large customer growth is the highest. So we have good customer base, UBA as a customer, Force Motor as a customer. In both BFSI and auto DMS space, we are winning more and more larger customers. In manufacturing, we are winning more larger customers. So in that sense, this whole India's success, we are trying to replicate in other markets. So what worked here, what doesn't work here. So we learned some of these here, and then we are now trying to go and replicate in other markets. And in terms of our what I prioritize is how do we make it more sustainable growth? That means in terms of how do we make it organic too? So rather than trying to create, because it's in a business software, it's also a sort of credibility game. So that means you have to win the credibility of a customer, especially in large customers. So they somebody is betting their career on us. So the decisions, because it's not the money that is a problem there. It's the timeline that is a problem. It's the credibility that's a problem. That means we have to make sure that we win the trust and credibility. So once we do that, how in SMB it happened, the word of mouth will spread, and I'm sure we can have an organic growth there too. But until then, we want to be very careful in terms of acquiring customers. We want to be very, so wherever we have the strength, we want to make sure that we sell on our strength. So we don't over-promise. We want under-promise and over-deliver. So that's the strategy we follow.
So, India growing at over 30%, your second largest market. What's the headroom for growth that you see given the digital adoption that we're seeing, also given the growth both in the SMB space as well as the large enterprise space?
See, that's what we have, around 200,000 customers in India now, So both SMB and, And we continue to see this increasing, right? The adoption increasing in India. And at least for the next decade, we see that this acceleration will continue because of all the digitization that is happening. And as I said, as AI democratizes more, like how SaaS has democratized to an extent, AI is going to accelerate this democratization. And that means there is going to be a lot more creators. And how do we, right? So we enable them. How do we, become a preferred tool or platform for them, right? So that's where we are focusing on. And I'm sure, India being the largest, because most of the even consumer products, you can see India as being the largest population adoption happens in India because of the sheer volume of population we have.
Yeah.
And that means we are going to have much larger creators in the world. So that's where we are investing heavily on this and the platform market, because we know that the acceleration and democratization is happening, and how do we be there?
I remember you said that you don't compete for talent. Your effort is to create talent. And this goes back to what you've tried to do with the Zoho schools. It's been 20 years for Zoho schools as well. And I believe 15% of your workforce here in Chennai comes from the Zoho schools. Yes. Take me through that experiment, which is now been scaled to quite an extent, and how that's worked for you. How do you look at talent? I mean, today you talk about the talent wars in the valley. You see jaw-dropping numbers being paid for AI professionals and AI talent. How do you look at the talent piece today?
See, if you look at the Zoho schools experiment itself, says from the beginning, so we used to hire, freshers, and then we used to hire from,
You were virtually a fresher when you joined.
Yeah. So I joined, and then all the hiring almost. And then we used to have these incubation programs where, because we accept the fact that, in a 1 hour interview, you can't find out who is right, who is good. Maybe we can evaluate their communication skills, but not the real skills, right? So that means we said, okay, somebody who hadn't done, right, we are doubtful, then okay, why can't we put them into incubation, and then we see. And then we saw that the results were very good. That means, right, so they were able to do more. And the same, then we thought, okay, then why go to a college graduate? Why don't we do it at 12th standard? And we also know, there are a lot of government colleges where there are a lot of students, bright students, who are not having an opportunity. They don't even know that these opportunities exist. So we actually picked the first batch. We picked 4 or 5 students. We trained them. So that's you see, every experiment we start small because we want to learn, do all the mistakes on a small batch before we scale. And then the first batch student who attended the Zoho schools is now heading our Saudi Arabia operations. Right? So, and he has been leading our creator platform, which is for the low-code application platform. And then now he's heading our Saudi Arabia operation. So, so we started increasing the count, because as we saw the good success in the first batch, so they are able to pick up, they are able to learn, and some things they are able to learn faster. And so we started with development alone. Then we found that, why just development? Why not for business? Why not for design? Why not for marketing? So then when we hire, we evaluate them based on their strength. Or once they come in, we also look at their strengths, and then we suggest them to a right career path. And that's how it started. And now 15% of our employees are from Zoho schools.
So what's the aspiration for Zoho schools? As you said, 15% of your workforce now comes from Zoho schools. Do you intend to scale this up further, given the environment that we're in?
Yeah, see, we are spreading this in rural now. So that means, in all our rural offices, we are setting up our Zoho schools. So to tap the local rural talent there. And, so as I said, we want to keep things organic. That means, so we don't want to scale it for the purpose of scaling. So, because there is a natural evolution that happens, and you want to leave it. Because, see, the whole teaching staff have to, we need to train them, we need to get them. So, that means there is a scaling of that too.
Yes.
So, in that case, so we want to keep it, because we want to focus more on the quality and not on the quantity.
Correct.
So and then
not
we introduced-
scale just for the sake of,
Yeah, exactly.
of scale. But, speaking of something, another interesting experiment which was much talked about, and I remember speaking to Sridhar during the COVID period when it was starting to sort of kind of build itself out, is your hub and spoke model, so to speak, with the spokes being in rural parts of India. How has that worked out for you? And now is there an effort to consolidate some of those spokes as well?
Yes, so the whole belief there is like, say, how do we do research and development through rural development? Because for us, we don't separate this. So, okay,
So R&D has a whole different meaning
R&D
for
through
Zoho.
R&D, right? Yeah. So, because nurturing talent has always been one of our important priorities, because we want to create an ecosystem here. We want to create a product ecosystem. We want to build the know-hows, whatever, for example, running the, say, infrastructure services, running the platform. So all the know-hows, if you can't build it by reading on a textbook, you have to do it to, right? So know it. So same way, now we want to do the same in rural areas. So what we started as is like, say, a lot of spoke offices, small spoke offices. Now in each of these regions, we are actually based on the number of people who have moved. So we have identified some of the hubs there. So, which will actually, that's why there can be a Zoho schools there. If a spoke office only have like, say, 10 employees, then putting a Zoho schools will be not viable. Rather, you create one in Madurai, Kapalur, where we have like, say, more than 500, 600 employees now. Then putting a Zoho schools there makes sense. Same way, right? Say in near Coimbatore. So we have a 500, 600 seater there. So there again is Zoho schools. So in Tenkasi itself, we have 1,000 employees now. There is a Zoho schools. So that's how we are scaling it. And
So how many hubs do you envisage having?
Each district should have one. That's our
That's the
aspiration.
dream?
That's the dream.
Well, it's been an absolute pleasure speaking with you and visiting you here at the Zoho campus. We wish you the very best of luck, and thank you so much for showing us around.
Thank you, Sharin. Thanks for coming. Thank you very much.
We wish you the very best of luck. Well, with that, it is time for us to wrap up this edition of Young Turks Reloaded. From all of us here on the program, thanks very much for watching. Do stay tuned. We'll be back in a moment with plenty more. Till then, goodbye.
BWX makes money. D-Wave, IONT, what do you want, David? What do you want? I asked you, what do you want?
I want
the opening bell.
You went Debius?
Let's get the opening bell on the CNBC Real-Time Exchange. The big board, it is the President of the Republic of Korea in New York for the UN General Assembly. At the NASDAQ, it's Kodiak, a provider of AI-powered autonomous vehicles, listing via SPAC. On Squawk today, talking about trucks, driverless trucks in rural parts of the country.
Driverless trucks is an existential threat. It's why they've had trouble getting drivers, is because the writing's on the wall. You go train to be a driver.
Yeah.
And it turns out to be that there's no, it's autonomous in the end.
Interesting to note, Pete. Well, there's a lot of well-known guests here for this bell ringing for the President of Korea. John Gray from Blackstone is right in front of us here. Jane Fraser from Citi, Mary Erdos, J.P. Morgan.
So you're telling me there's $1 trillion right there?
Yeah, so it just shows you, Carl, the importance, obviously, of South Korea and the business community and raising capital and infrastructure and so many other things. And then you run into sort of some of the geopolitical tensions that may have been created as a result of the ICE raid in the plant that we all know of in it was Georgia, right? But and whether that has in any way set things back, but you can see some of our more notable people from the financial community.
They are a classic ally, a great ally.
Yeah.
But Canada's a great ally in that.
Canada was a great ally.
President Lee's been talking about some of the demands the U.S. is making would put Korea on very much on their back foot. Today, Jim, big part of the trade conversations about China not buying our soy for the first time at the beginning of export season since the 90s.
Yeah, that's been a great...
lot of discussion about farmer anxiety, the White House having to talk about whether there would be support for farmers, even though we're about to consider a $20 billion swap for Argentina.
Yeah, well, look, I mean, the farmers have always been, bedrock, even, in the 1930s, we saw that. David, you probably think that it's like these are states that are involved with elections, so help the farmers. You're probably cynical like that.
What words are you putting in my mouth now, Jim? Sorry.
Well, I'm just saying that the farmer's getting a bailout, say, because of soy. But we don't let the farmers down. They work really hard. They're a really bad business, and the farmers are the basis of what was once an agrarian society that produces more food than any other place. Like, the farmers are great, but they don't, have a lot of equipment. They have to buy. They have to borrow. And if the soy, if the Chinese say no to soy, where are we going to send it? Maybe to Brazil? I don't know. We're fighting with Brazil. We're fighting. We're fighting with a lot of.
Yeah, and Brazil's soybeans are going to China and replacing.
Exactly.
Right?
So maybe we send them to Brazil.
They don't need them. Actually, I've seen those endless soybean fields in Brazil. I did a story, I don't even remember how many years ago, about it becoming the breadbasket to a certain extent of the world. It was, and a lot of the farmers there at the time were North American farmers who moved in to Brazil, or at least to some extent.
I think they were going to buy planes. I've been buying Boeing with the idea they're going to buy planes. Soy's not getting killed. Natural gas has been getting killed, and natural gas is the fuel, at least in Waha. That's the fuel for data centers. There's a lot of look. I think there's a lot of pricing right now in the futures market that is insane. I'm telling you, cattle. That's the worst one.
Right, but
that's the worst one.
Speaking of data centers, Michael Intrader from CoreWeave was a guest here just a few days ago. They signed a new deal with another OpenAI, another $6.5 billion, just another day.
But
another $6.5 billion.
That could be a real contract.
It is, but stock's actually going down, not up.
Again, David, everything's going down that's in the speculative cohort, and then you got to pick among the stocks that get hammered, and not the ones that are kind of, let's say, never made money. How about that? Not the ones that have no revenue, but the ones that have never made money. Let's just eliminate those, or just put them in for like a really young person.
Well, CoreWeave is not making any money.
Well, not yet.
No.
But they get the potential.
Yes, they do. I had potential once.
You could have been something.
I could have been someone.
I'll tell you what's moving, Jim, is IBM helping to lead the S&P here. This announcement from HSBC about how they've used some IBM quantum to improve efficiency of their trades is, I guess, getting some. We've talked about IBM's quantum efforts.
I met with Arvind Krishna, and he said, "Look, you want real quantum? We have real quantum." And he also, by the way, said that Honeywell the Quantinuum, that's real. Google we know is real, and then there's all these companies that are development stage companies that may be development stage companies for a long time, and that's IONQ and D-Wave. And these
Who
are
you just had on the other night?
Yes, because they'll tell you, listen, we're working very hard on it, but we're nowhere near it. They're working hard. IBM actually has something right now that is pretty positive. IBM, David.
Understood. Understood. IBM.
Could reinvent finance.
It could. We already highlighted that story about HSBC. Oracle shares down almost over 5%.
Well, Oracle is the fundament of what happened. That was the straw, because everybody else had been self-funding. Because out of cash flow, Mark Zuckerberg out of cash flow, Google out of cash flow, and then suddenly Oracle comes, and where are they going to get all the money? Well, they're going to get it from OpenAI, but where's OpenAI going to get all the money? Are they going to get it from NVIDIA?
Right, they're getting it from NVIDIA, from endless raises of capital, conceivably from, Sam Altman's going anywhere and everywhere to get the money. Because he's saying it's not hundreds of billions, it's trillions.
I know, well, that's why
that will need to be spent to build the data centers that they can run all their
Right, but that's what made people nervous. Because we don't want, if you're someone like Powell, who's stuck trying to figure out what to do, and he looks at the stock market and he sees that companies are talking about trillions. That's difficult.
Right.
Because what that says is there is a bubble, conceivably, because we finally have outside money, and Oracle doesn't have the money.
Investors were willing to immediately award, let's say it was $60 billion over 5 years. It's going to go to Oracle to build the data centers from OpenAI. That's the $300 billion. And then, I don't know, where are there, 20% EBITDA? What are the margins on that? Something AWS margins are much higher.
But the margins, right.
And then you put a 25, so that's $12 billion, and then you put a 25 multiple on it, because that's how much market cap it accreted in day one. Now it's come back a bit.
Well, look, this is what I said. All I'm saying, Carl, I'm just saying that things got a little too speculative. Things got a little too frothy. We're going to take the froth out of the market. Maybe we stop talking about a trillion here, a trillion there, and after a while it starts adding up. I think that the story about Oracle having, say, $450 billion in orders is a little softer than I think it sounded. And I don't know if they meant it to be as
well.
solid.
We didn't have details behind it day one. It was the next day that we sort of understood most of it was OpenAI.
Right.
A demand from OpenAI, to your point. But it was so astounding to the analysts because it was just so far beyond what anybody had anticipated.
Right, and things were percolating
in terms of future bookings.
Because we knew that, look, we asked yesterday, we had Renee Haas, serious guy, Arm Holdings.
Yeah.
And he was saying, look, there's a huge amount of money being spent, but no one had spent far more than their cash flow. And to build everything that Oracle has to build costs a fortune. We already talked about the two economies.
They had an $18 billion bond deal this week.
Yeah, yesterday. Yeah. And then, and they are not, their free cash flow is not going to be there for a little while.
Well, see, you and I are in total agreement.
Yes.
We just are very concerned that there may not be enough money around to do everything. But should that be the reason why all these speculative stocks go down? I think the speculation has to come out of the market because I think that these stocks have gone on so far that we're seeing insider selling. A lot of the companies do not make any money. And a lot of people are concerned that that's exactly what it looked like in 2000. David was using a 1997, 98 analysis, but there's part of the economy that right now is in year 2000. And that's the part of the company. All you got to do is look at, do they have revenues? How much money are they losing? If they're losing a lot of money, it's a good time to bring the register.
Do you worry about, given the exposure among wealthy Americans who do a lot of consumption and spending, wealth effect impact on their spending?
I'm not, because I think that they tend to be in the S&P 500 or individual stocks I think will bounce back. And these companies are not in the S&P 500. These are companies that Oklo is a classic example. It was at 33. It got a couple of headlines about how Tennessee's going well, and then it's at 133. I don't like that. Anything nuclear power that's just done, nuclear power is very suspect, and I get that from the company that really has the chance to build it, which is GE Vernova.
Because of the just duration of the cycle.
It just takes so long.
It takes forever.
These companies are all acting as like Oklo's got this very serious recycling of spent fuel. It's a great idea, but I think the idea that you can determine when a plant's going to start, it smacks of when Southern was saying that they don't worry about it, don't worry about it, don't worry about it. And then it turned out to be the biggest black hole that Southern's ever had. Worse than Commonwealth and Southern, which of course was run by Wendell Wilkin.
Right.
Well, the Journal's got this great piece on utility bills getting the attention of politicians. We know utility costs are growing double CPI. They cite some bills that have been proposed this year that would cap utilities' return on equity to 4%.
Well, you take a look at American Electric Power, which is, if you put up the chart of American Electric Power AEP, you're going to see it's a stock that looks very much like Intel, 1997 to 1999. I mean, AEP is one of the great performers of this period. Now it's starting to come down because people realize that, wait a second, that someone has to, if they put a cap on AEP, that'd be devastating. What a stock. What a stock. You want to overlay that?
Yeah, there it is.
Want to overlay that on Comcast?
The performance of AEP wasn't that great.
It's a utility.
I'm aware of what it is.
It doubled.
I know.
Look at it, double. It's a utility.
It's up 12% in 3 years.
Well, you get a dividend too.
Yeah. I get it. All right.
That's why you own it.
Duke Energy's also had
Duke Energy's had a great run. You have to go
it's only got a 3.4% dividend yield.
Duke, I mean, I'm just talking about this. Duke Energy. Okay, since January, Duke Energy went from 105 to 123. That's pretty good.
Yeah, it's fine.
Well, it's not fine. It's fine. It's good.
These are no constellations, man. That was the name.
No, Constellation is one that I think has to cool off because that's very conservative. You know, that's Nuke. And I think Nuke is a little aggressive. That 329, I wouldn't buy that. I wouldn't pay 329 for that stock. And I happen to love the company. It's just that's too high.
Now, there you go.
It's all the Nuke. They all fell in love with Nuke. Carl, I love Nuke.
Well, we're going to need it all. If we're going to get anywhere near the production of energy we need to power all of these data centers, we're going to need every last bit.
Sure, but it's a little harder than you think.
We might even
Don't say it.
We might even need.
No, wind's out. It's unsightly. And birds, man. No, Nuke. I live next to a nuclear. When I was living in my car, which was a not great time, candidly, I lived next to a nuclear power plant because you could park right next to it. No one cared.
Explains a lot.
Well, it closed.
Yeah.
They closed a lot of nuclear power plants, David.
Yes, they did. After 3 Mile Island.
Yes. GE Vernova's down 28 today. I don't like that. My trust owns it, but it's up nicely.
GV?
GV, that's a real company.
Of course, it's a real company.
Well, I'm just saying.
It's been a great performer. It's still up 135% over the last 12 months.
I'm hoping that wealthy people use ChatGPT tend to be in stocks that are not like these. They tend to be in blue chips. Remember that term?
I do.
You use a red chip.
You.
Well, you, me. You. Okay?
Okay. Oh, we're back to that again.
Well, it's about time we have soupy sales.
Yeah.
These stocks are
it's been a long time since we heard from soupy
that.
sales.
Look, I just called it top in speculation because I can't take it anymore. People call them the lightning round. They want to know stocks. The companies are development means they have no revenues. And they've tripled or they've quadrupled. And I'm troubled by that.
Speaking of
what?
Absolutely nothing we're talking about, BYD sales in Europe may be pressuring Tesla. It's down 4% after what's been a very strong run of late in shares of Tesla, as our viewers certainly well know. But they outsold them. I mean, in Europe, they sold, it looks, Carl, I got 800,000 in cars in August through sales in the European Union, Britain, and the Europe. Yeah.
August Tesla sales in the EU.
I'm talking BYD, sorry.
Oh, sorry.
It was 800,000.
Tesla, though, EU in August down 37.
Right.
So it makes sense that BYD outsells them.
Yep, they were up significantly.
Tesla's no longer a car company. It's an AI company, David, that does autonomous, all right, and it does robots. It managed to pivot. I've never seen a pivot like this. When Musk got signed on for a lifetime, whatever, it pivoted, and all anyone cares about is your data centers.
That's all anybody cares about anywhere.
True.
They're going to, I don't know. Is there going to be any acre left untouched by a data center?
What is Louisiana going to look like?
It's going to look like one big data center from the air.
And if it turns out that we don't need all this, what do we do with that land?
Okay, so when I had IONQ on,
housing, maybe housing.
No, forget that.
No.
KB Homes, they're selling land. Jesus,
want to move into a data center?
Buying stock.
We can keep it really cool.
All right, 37% of that stock's been bought back in the last 5 years. KB Homes. Because they're not wasting their money.
I saw the KB Homes.
They're not wasting their money.
No.
Look, I think that we're going to be with quantum in 2030, and quantum doesn't burn hot.
Entertaining day. We've had some great discussions on GST 2.0, but now let's focus on the geopolitics of it all. Today, there is a lot of uncertainty around the world regarding trade, supply chains, and also weaponization of natural resources. I'm sure every morning when you pick up your phone, you look at your WhatsApp or X or Facebook, there is a bit of shock as to what has happened with regard to global trade and geopolitics, especially with the United States. The H-1B news over the weekend took us with a lot of surprise and shock, but thankfully there is certainty that this will not be affecting current H-1B visa holders. It only applies from the next lottery cycle. Having said that, India definitely is a bright spot in all of this uncertainty. Lots of things going for India, but what more do we need after GST 2.0? So let's begin this panel today, and I'm going to put this first question to Ambassador Hoskulson. Ambassador Hoskulson, this couldn't have come at a better time. GST 2.0, rate rationalization, rate reduction, 2 rates only in the country. Just a few days ahead of the EFTA. Ladies and gentlemen, EFTA is the European Free Trade Association, the 4-nation grouping comprising of Iceland, Norway, Liechtenstein, and Switzerland. So India has signed a trade deal with them last year, and the trade deal comes into effect on the 1st of October, a very important trade agreement. So how does this help EFTA investors and especially Iceland now?
Thank you for the question. It's quite important, and it is something that we are quite happy to see happening today, that the GST reform takes place. The Trade and Economic Partnership Agreement between EFTA and India goes into force 1st of October, so that's 8 days from now. This is important in the sense that, you know, the reform basically unifies India as a market, so that we see straight away that, you know, the interstate economy will grow. That's positive for when the investors are looking into, you know, if they should come into India for investments. Secondly, the reform marks really important characteristics for the investors in the sense that, you know, this becomes a transparent way in which they will comply when it comes to taxes. That's important. The input tax credits will be more transparent and automated, so that it will become easier for the companies to operate, and that will actually leave them also in an area where they will have lesser expenses to comply with the Indian system. So those are very important factors or components of doing business, and we already see this as something that will take place.
Right, and one point that Ambassador was telling us a short while back and off stage is that there is a commitment from EFTA nations to make $100 billion in FDI investment in the country in the next 10 to 15 years. So that's a big amount, ladies and gentlemen. So lots riding on that relationship.
Well, it's very important, and it should be pointed out that the TEPA, as we call the Trade and Economic Partnership Agreement, is a new generation of free trade agreements in the sense that we, the 4 countries who sign on to it, have pledged and committed to actually invest over $100 billion worth in the next 10 to 15 years, and thereby creating some 1 million jobs. So this is significant, and I'm very happy, actually. I can tell you that already now, today, we already have positive investments coming from Iceland into India on this basis.
Right, and Ambassador, let's move on to the other big topic of attention, that something Donald Trump has been speaking about ever since he took over, and that is BRICS. So he has raised concerns about de-dollarization that the BRICS is going to indulge in, how BRICS will undermine the dollar, how they'll have their own currency that they will be trading in. None of that is really true. But Ambassador Suklal, if you can give us your view, South Africa, a key member of the BRICS, and BRICS, ladies and gentlemen, is almost 24-25% of global trade right now. Does the GST 2.0 reform in India, will BRICS double down on India as a result of this reform?
Well, I don't think there'll be any doubling down. If any reform comes about that is positive for the country, for its growth, and for its people, especially those that are at the lower rungs of society, I think that's most welcome. Now, let me say that in terms of BRICS and de-dollarization, I think de-dollarization has become a catchphrase. You know, I served as South Africa's BRICS Sherpa for 13 years before being posted here. That was my last portfolio. So I know this whole history. This issue of de-dollarization arose in 2023 during South Africa's chairship. At no stage during the course of that year did South Africa or any five of us at that stage, still BRICS 5, spoke about de-dollarization. But what became a major issue during our chairship was the expansion of BRICS. And this was not well received, especially by our friends in the global north. And it was the Western media that started this whole debate that BRICS has on the agenda de-dollarization. What we had on the agenda is deepening trade in local currency. That was on the agenda, and looking at alternative payment platforms, especially given the unilateral sanctions and the freezing of Russian funds by the Western countries. And we felt that if this could happen to Russia, it could happen to any one of us. So we need to look at our own financial systems and how do we deepen trade between ourselves and trade in local currency. Because way back, I think in 2018, we signed an interbank BRICS agreement. So it was already there for a number of years, but we didn't activate that. And unfortunately, this was taken out of context and the whole focus went on de-dollarization. And up to the present time, I think your foreign minister earlier this year also mentioned that at no stage have we discussed de-dollarization in BRICS. I think India is an important member of the BRICS community. And the reforms that are taking place in India are welcome. Firstly, I'd like to say from a South African perspective and an African perspective, we welcome this because India is not, let me be very frank, not an easy trading environment. For our companies to enter this market, you have multiple layers of regulations and taxes and custom duties at national level, state level. So simplifying this is going to help us better understand, and I think it will also help boost India-African trade. I mean, Africa is an important trading partner for India. We have a modest trade between Africa and India. It's around $100 billion. I know India is very keen to double that. I think we have all the ingredients to do that. We are two major markets, Africa 1.5 billion, you are 1.45 billion. So I think for African businesses, especially the MSME sector, that is very keen to enter the Indian market, these kind of reforms are welcome.
Right, very important points there. And ladies and gentlemen, I missed, and bad on my part, I should have also introduced Ambassador Nilistra Suklal, who is with us here in the audience, Ambassador Suklal's wife. And she's someone who's been a distinguished ambassador to Nepal, India, and Bangladesh, and both them together contributing to India-South Africa relations in a very big way. And they have very strong Indian origins. Ambassador Suklal hails from a village near Varanasi, and you've got Ambassador Nilistra, who has been from both Ayodhya and Varanasi, if I'm not wrong. So, ladies and gentlemen, big round of applause to both of them as well. Now, just coming back, Ambassador Civil, I'd like to ask you about the United States. And that's a question I'm sure rattling a lot of us in the audience. I guess the only thing that is certain about the India-US relationship right now is that nothing is certain. Is it time for India to strengthen other relationships with BRICS, with South Africa, with the African continent, with the European Union for that matter?
I think our longer-term interest lies in that, and the effort should be made in that direction. But this can't happen overnight. Our biggest trading partner is United States of America, if you take both goods and services. It's the biggest market in the world, huge consumption market. the biggest source of technology and investment. So if you look around, what are the choices we have? With China, we have a $100 billion deficit, and I don't think they're going to make it easy for us. With Russia now, we have a $60 billion deficit. Our exports are about $5 billion. Even if they increase by 100%, it'll be $10 billion. It's nothing. In terms of technology and investments, I don't think we have those easy choices. So we have to look at somehow maintaining our market share in the United States and find every possible way, despite Trump and his idiosyncrasies, to nurture this relationship. However, for the next 3.5 years, I think we're going to have a tough time. One option we have, and which is actually a very productive option, is to strengthen our ties with the European Union. The European Union itself is under huge pressure from the United States, the manner in which they have been humiliated in this framework agreement. They are looking for partners also. And they have all the attributes that the United States market has. They have a lot of technology, they have a lot of investment potential, high consumption market. We have $130 billion roughly of trade with them, which is roughly balanced. So we can help each other. So I think this is the time to actually accelerate, if it's possible, the finalization of the FTA. Now, van der Leyen and others are talking very positively about wanting to do that before the end of the year. But whether it can happen or not happen, it's I think, uncertain. One of the issues that has been raised by the Americans, which has complicated our ties, and they are putting pressure on Europe also to go in that direction, is to raise the issue of our oil purchases from Russia. And unfortunately, Brussels is today headed by people who are viscerally anti-Russian. To begin with, the foreign policy chief, who has no concept of geopolitics, frankly. And if they make that an issue and start imposing sanctions on us, which probably they won't, because that will derail the India-EU FTA negotiations. But nevertheless, this is a pressure point. So the long and short is that we have to look at Africa, particularly Latin America, where there's a lot of potential, and we can do much more with that continent. Unfortunately, all our deficits are eastwards, whether it's ASEAN or Japan or China or what have you. So we have to look, now the Middle East, there we can, with the UAE and all, we can expand our economic ties. We have this target now of $100 billion of mutual trade, non-oil trade with the UAE. So with the GCC area, there's a lot of potential. To answer your question, we have to look for alternative partners, and there are some readily on the horizon, with the Europeans and the GCC states, the Gulf states being the most obvious ones.
Right. When they speak about a China plus one opportunity, which we started hearing Ambassador Sukla and Ambassador Sibbal during COVID-19, that is an opportunity that is not going to last forever. There are 4 or 5 countries which are competing, and in some labor-intensive areas, some countries like Vietnam, Indonesia, are already ahead of India, including Bangladesh. But